President Trump threatened the Iranian government that if they killed protesters, there would be consequences. And that, I do think, affected people's risk calculations when they went to protest. They thought the President of the United States had their back. Obviously, the Iranian regime drove a red truck, a giant truck through President Trump's red line. And the other factor that it's not immaterial here, Becky, is that Iran's top leadership has been publicly taunting Trump. And we saw that actually played a factor in his decision to capture Maduro when President Maduro of Venezuela had been taunting him. So I think this is not, obviously, as we all know, a traditional administration. And the most important debates, I don't think, are the deliberations happening at the State Department, White House, or Pentagon. It's the deliberations inside President Trump's head.
I have seen speculation that because the Iranians have kind of taunted and pushed back, the Iranian government has taunted and pushed back, that it would be seen as kind of a step down if President Trump chooses not to do anything. But I think the big question always comes back to what happens the day after if there is some sort of attack. What would happen internally in Iran? Who would be seen as in a position of leadership?
And obviously that's something that no one can predict. And we've seen over the last 2 decades that our ability to dictate outcomes in the Middle East is significantly limited. Even when we sent thousands of troops to places like Afghanistan and Iraq, those outcomes were not to our liking. And that will be the case with Iran as well. We can have a profound impact, but we can't control what's going to happen the day after. And so that is, I think, obviously one of the factors that President Trump has to be considering.
Kareem Sajapour. Kareem, thank you.
Kareem, what happens if you need to look up a reference in that one book there on the very bottom on the right? What would you?
You know, that is most likely an Andrew Ross Sorkin book, probably his latest. And so I have all of these on Kindle as well. So those are just for display.
Because I see the bookshelf looks like it's filled back on the left. So then but that's interesting. Those are all your current things that you're reading right now
on his nightstand.
On the nightstand. Exactly.
That's right.
Okay.
Just don't let it tip over.
Yeah, I mean that's
no, it's good.
I think he's got actually a bookshelf behind it. It's one of those, I think.
Yeah, exactly. It's a book.
Oh, is it?
It's not just a stack of books.
Oh,
yeah. Good to see you.
Thank you.
We'll see you soon, sir. In the meantime, it is just past 7 a.m. right now on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernan and Becky Quick. We got a lot going on. The big news, Oracle expecting to raise up to $50 billion this year to build out its cloud infrastructure operation. Seema Modi joins us with the latest on that story. Good morning.
Hey, good morning, Andrew. Oracle, yes, revealing plans to raise about $50 billion this year, a combination of debt and equity. Now, Oracle says the capital will be used to fund its massive data center commitments for customers like OpenAI, Meta, AMD, and NVIDIA. The financing plan is unique in that it does include equity, an at-the-market offering of $20 billion that it can exercise at any time in the near future. We've seen a number of tech companies in recent months raising debt to fund the artificial intelligence build-out, but this deal, it does mark the first time a hyperscaler will be issuing stock and essentially diluting existing shareholders to fund its ambitious plans. It underscores just how competitive the race is becoming with Amazon, Google, and Meta. Shares of Oracle have been falling in the last couple months since its last earnings report and are now down in pre-market, although recently turning in positive territory. So far, analysts this morning saying this specific announcement provides much needed clarity to the market. Mizuho writing that they believe this should send a positive signal to investors, and because it basically addresses the concerns around how Oracle will fund its elevated capital expenditure plans while also hopefully preserving its investment grade rating. Guys, that's been the big concern, is can it raise more money but also protect its investment grade rating, which is right now around BBB.
Okay. Seema, thank you. Thank you for that report this morning. We're going to keep our eyes on it.
Look, here's the latest movement in the futures this morning. You can see some recovery there in the Dow, which is down triple digits, and the Nasdaq actually a little bit better. Gold and silver, after the big run-up, they maybe not surprisingly pulled back, and now they're stabilizing this morning. below 5,000 for gold, and below 100 for silver. Let's get to Dom Chu with a look at this morning's pre-market movers. What's going on, Dom?
Hey, good morning, Joe, Becky, Andrew. So we're going to start with shares of some of the crypto platforms like Robinhood and Coinbase. Right now, both those companies, Coinbase lower by 4%, Robinhood down by 2.5%. Moving lower respectively as Bitcoin fell over the weekend, trading currently just around that 77,500 mark, 77,800 at this current point. Based upon that dollar debasement trade struggling, we've seen that in recent weeks. Both stocks, of course, highly linked to the flagship cryptocurrencies, so keep an eye on Bitcoin prices and the platforms that trade around them. Meantime, let's take a look at the energy complex overall. Chevron is one of the biggest pre-market laggards on the Dow so far. Exxon, Devon Energy, ConocoPhillips are also moving lower amongst others. Now, it comes all after President Trump said over the weekend that Iran was, quote, seriously talking with the U.S. oil, with the U.S. overall oil prices are subsequently falling, weighing on some of the major producers. So keep an eye on the oil and gas complex overall, given those reduced tensions perhaps in Iran. And then NVIDIA shares are right now just about, call it 1.5% lower at this point. This is all after a Wall Street Journal report over the weekend, citing for people familiar with the matter, that some members of the chip giant were hesitant about its $100 billion deal with OpenAI that was announced this last September. NVIDIA's Jensen Huang did say that the company was planning a separate investment in OpenAI over the weekend as well. So on balance, NVIDIA shares off maybe 1.25% at this point, still up 57% for the year. Guys, I'll send things back over to you.
All right, Dom, I was going to remember Justin Rose last year was out of control, and then yesterday, I don't think he ever was not winning at La Jolla, was he? I think he was from the first swing all the way to the end. I mean, that is just unbelievable. Great guy.
I would just say, too, as well, it makes me feel good as a guy who's in my late 40s right now, that somebody in their 40s can still compete at that level on the PGA Tour. So, and he's got just a pure swing. So I know it was fun to watch, but of course, I kept a close eye on Brooks Koepka and everything else with that dynamic.
They kept showing him, I know. That was their story. But it really didn't have much to do with Brooks when it was all said and done.
No.
Anyway, thanks.
You got it, guys.
All right, the new CEO of Target, Michael Pidocki, kicking off his tenure at the helm of the retail giant with an open letter that was posted just moments ago. In it, he outlines 4 priorities for the companies. These are his priorities. First, he says, leading with merchandising authority by curating with conviction, bringing together design, style, and value. Second, elevating the guest experience by making every store visit and digital interaction easier. Number 3, accelerating technology to remove friction, enable their teams to create more personalized experiences for guests. And number 4, strengthening their team and communities by investing in their people, building future-ready skills, and growing alongside the communities that they serve. Pidocki says his focus in the weeks ahead will be to listen closely and urgency and lead with purchase. It does have a difficult road. Right now, over the last year, that stock has been down by 24%. This morning, it's off by about 91 cents, $104.56.
Coming up, we got some results from the Magic of interview with Disney's Chief Financial Officer, Hugh Johnston. That's just ahead. And just after that, a special interview with U.S. Attorney for the Southern District of New York and former SEC Chair, Jay Clayton. Don't go anywhere. Squawk Box coming right back after this. Welcome back to Squawk Box. Disney shares trading higher following quarterly results. The company benefiting from stronger than expected streaming profits. I want to talk about that and so much more. Hugh Johnson's Disney's CFO. Good morning to you.
Good morning.
We got to talk earnings, which we'll do, and we also have to talk a little bit about the succession planning. I don't know how much you can comment on that, but that's in the news right now about who may take Bob Iger's job. But let's start with the earnings piece of this. So the streaming piece, very, very positive.
Exactly.
Let's talk about that, but let's also talk about what you're seeing at the parks, because that seemed like a bit of a more complicated story.
Complicated, but strong numbers. Overall, the company really has a lot of momentum right now, and that is what I think is most encouraging about the quarter. And I think that's what you're seeing in pre-market. 5% revenue growth is a terrific number, and it's pretty broad-based. Parks, streaming, even total entertainment grew revenue 7%. So certainly feel good about that. The two big monetization engines, streaming and experiences, both growing profits strongly and well ahead of consensus. And in addition to that, the balance of the business is actually performing nicely. So, and on top of that, the creative engines are working well with the $3 billion movies that we had last year.
To the extent that Disney is an interesting barometer of the consumer, the reason I even was pointing out or saying it seemed more complicated, the park story.
Right.
It seemed on the domestic park story that internationally great.
Yeah.
Domestic seemed a little bit slower, and I was trying to just understand what's going on.
Well, revenue was up about the same domestic and international, so we certainly feel good about that. In terms of the operating income, there's a little bit of choppiness, but that's largely because of the investments that we're making in those businesses. So keep in mind, we launched the ship in Q1, and we still grew revenue, or we still grew profits 6% in the quarter in experiences. We're going to launch another ship now in Q2. And we're opening up Disneyland Paris, the world of Frozen, and a lot of other attractions. There's one-time cost attached to that. So the back half is going to be stronger for sure. But the fact is, the business has good momentum right now.
In terms of the streaming piece of this, streaming versus linear, right now that's the other big sort of question.
Right.
You guys have always argued you need the linear piece to drive some of the content that lives in streaming.
Yeah.
Is that still hold?
Yeah, very much. I tend to think of it as just two distribution channels for largely the same content. So consumers are going to shift as they choose to shift. And when they do that, we'll be there to catch them. So whichever way they want to go. I know you all are a subject of the split. We don't think that strategy makes sense
Warner
for
Brothers
us.
is doing the same thing right now.
Yeah, they are. So no, we feel good about the integration that we have at this point. And Warner Brothers may or may not do that, depending on how the deal works out.
Is a drag on the business or no?
I just think of it as one channel. And as consumers are making the shift, obviously it affects the numbers, but in totality, we feel good about it.
You said it doesn't make sense for Disney. Do you think it makes sense for Comcast and Versant? Does it make sense for Warner Brothers?
Yeah, I mean, I'm not going to try to comment on what everybody else's strategy is. I like where we sit. I like the hand that we've played. Even if you look at some of the evolutions that are happening in the business right now, with Warner Brothers on the market, we really did that back in 2018 when we did the Fox deal, and before that Pixar and Lucas and all of the acquisitions.
Do you have a perspective on the buyer, though, of Warner and what that ultimately means to the film business, for example, meaning the theater business and the like? Would you prefer Paramount as a buyer? Would you prefer Netflix as a buyer?
I wouldn't say we have a strong preference one way or the other. That said, I do think the government is going to weigh in pretty heavily on that.
But the Department of Justice is going to call you.
Yeah.
And they're going to ask you to weigh in and say, do you think that one is better than the other for your business?
Yeah. And when they call, we'll share that news with them.
But so you do have a preference.
Well, we'll take a point of view at the time. I would say this: Netflix would be an awfully big company at that point if the two came together. But if you look at what they're trying to do in a lot of ways, they're trying to do, again, what we already did, which was they have the distribution. They're trying to add more IP, which is something they said they didn't need, but evidently they do.
In terms of your spending on entertainment versus on the streaming side versus sports rights, how do you see that going forward?
I think we'll probably continue to see an escalation slowly in both. We're at about the right levels. Sports are going to continue to get marginally more expensive, although I think we're through the worst of the inflation in sports. And then from a streaming perspective, I think you'll see us internationally continue to invest a little bit more. In the US, I think we have plenty of content. I think we're in a good spot.
Can we talk Succession?
I'm not going to offer much. I mean, if we can keep it between the four of us, sure.
Just between. Well, look. The news reports suggest that Bob, as in Bob Iger, may want to step down earlier than the contract is finished, effectively, which means something will happen sooner.
Yeah.
And that Josh is the likely successor.
Yes, I've seen all those news reports as well.
And that Dana is not, for whatever reason. I'm just reporting what the
It's
reports say.
Telling me that's a very good summary, Andrew. Hey,
It is an excellent summary of what's been reported in the news. Here's what I would say, Andrew. I think the board has really been very transparent about this process. I also think they've been very diligent. James Gorman and the entire board, I think, have spent an enormous amount of time on this. They previously said they would make a decision in the first quarter, and they're going to. In my estimation, the one thing I do want to add, though, is whomever the new CEO is, they're getting a business that has a lot of momentum. If you go back to what Bob said a couple of years ago in terms of the studios and turbocharging the parks and making streaming profitable, all that stuff has happened, and that's why you see the good results right now.
Maybe I could put it in this context.
Yeah.
Given now that you were at Pepsi, you're now at Disney,
Yeah.
you understand the skill sets that effectively require to run a business of this magnitude. When you look, just take the names off the table.
Yeah.
You know, there was a view that if you knew theme parks, you didn't know the entertainment business. This was what people used to say. And if you knew entertainment,
Right.
you might not know the theme parks in the same way.
Right.
A, what do you think of people who say that? And B, when you think long term about whatever you think Disney looks like, which of these businesses is ultimately going to be powering the company?
I think they're both really important businesses. And the reality of it is, when you have a new CEO, they rarely have all of it anyway. So I think we're fortunate that we've got a couple of really terrific candidates. And whatever the board chooses, I think the team will actually rally around that person, and the company will continue to
see what
perform
Andrew's
really
saying.
well.
I mean, if you got a really good theme park guy, if he ascends to the head of the company, you got to find a really good theme park guy. You already had a really good theme park guy. Who knows if he's any good at running all the other stuff? So I don't know. It's tough. I don't
But
really.
think about it, Joe. That's true in almost any company, unless they have a
theme
single
park has anything to
business.
do with all the other.
Oh, but the IP.
There's synergy. I know. I mean, I understand. You know, you create content and then you make a ride based on it or something. But that's
It's pretty powerful, actually. That's what drives all the upside, is all that IP.
Let me tell you.
Let me ask about the theme park very quickly, though. There is a question about attendance there.
Yeah.
It was down in the September quarter.
Right.
Is that
But up in the quarter we just ended.
right? But is that a reflection of new theme parks from Universal and others down there? Is that a reflection of the American consumer? Where do you see people?
I don't think it's much about the American consumer, Becky. We talked about Epic. The new
It's all
theme
about
park
the
there.
American consumer, you
and it's a good
dumbass.
Park, and frankly, we planned for it to have a bit of an impact, and it's playing out.
I won't
pretty
go
much
there.
exactly the way we expected. So from that standpoint, no particular.
I
surprise.
did.
The American consumer, I would characterize.
I'll never
it
go
as
there
the upper
again.
6 deciles, which are the ones that are kind of most relevant to coming to Disney parks, are still doing quite
Too
well,
freaked.
and they're still
not
spending
cheap.
on those types of things.
Yeah.
It is and it isn't, though. Compare it to going to a Knicks game, all right? And that's a couple of hour event. Even compare it going to the movies right now.
Well, you ain't got
It's
no
a few
trannies
$1,000.
holding your kids' hands either at the next game.
So from that perspective, I think the value is actually pretty good. And the fact is, the feedback we get from the people who go, they love it. And the people who go to the cruises,
It's 28
they
degrees.
really love
It's
it.
28 degrees.
Yeah, they like the cruises, that's for sure.
Well, that doesn't help.
But you have an older clientele that can handle the faggy
Let me ask you a
shit.
different question about the consumer right now. There is a big question mark right now about employment in this country,
Yeah.
and whether we are about to hit some kind of inflection point with unemployment.
Yeah,
Whether you think it's AI or something else, and we talk about AI as well.
right.
Do you fear that? I mean, you saw the number of companies even in the last week that were laying off employees.
Yeah.
And what you think that portends for either folks buying the streaming service, going to the theaters, going to the parks. What does that look like to you over the next 12 months?
Yeah, I mean, what we've seen is Disney tends to power through those things reasonably well, because the priority in terms of a vacation is something Obviously, if you're out of work for an extended period of time, that's a challenge. But for most people, they will prioritize a vacation, and particularly a Disney vacation is a high priority for families. And let's face it, once you tell the kids you're going to Disney, you're probably not
That's
going
on
to
the high
reverse
end. Do
that
you
one.
think that you're going to see more moving around on streaming, for example?
No, I actually don't. Streaming is still a relatively good bargain in my estimation compared to what people used to pay for cable. So if you think about cable and you think about having 3 or 4 television sets in your house, the cost of that relative to the cost of a couple of streaming services, streaming's cheaper and it's actually better because you get to choose what you want to watch and when you want to watch it.
And then let me ask you, since I mentioned AI, some people think that that is powering, or at least adding to some of this unemployment question.
Yeah.
When you think about the next year at hiring and how you guys are using AI, what does that look like to you?
It hasn't affected hiring at all so far. I would tell you that. In addition to that, the way we think about AI is basically making our people more productive and actually more creative and building more and better products. Not really about employment at this point. And honestly, I do think right now there's a lot of talk about AI connectivity to jobs. I'm not sure that's exactly true yet. I think it may be more the fact that people are hiding a little bit behind AI for some of the things that are going on in the job market. You know, if you go back to the old statement, technology tends to get overrated in 2 years and underrated in 10 years. AI may fall into that bucket.
Is there a model that you're using over Disney right now?
We're thinking about it from 5 perspectives. Number 1 is managing the streaming product. Number 2 is managing the guest experience. Number 3 in the parks. Number 3 is managing labor. Number 4 is video creation and production, and then number 5 is, I'll call it the office.
But so you have a partnership, for example, with
We do.
OpenAI for some of the characters and things that people can use.
Correct.
Sort of,
Over 200 of them. actually.
but longer term, does that mean that OpenAI is your model of choice that powers all of the 5 things you just discussed? Or
No,
are you using
we're not.
Anthropic for certain things? Are you using Gemini for certain things?
We're very open on it right now. So we'll have a period of time where we're going to work exclusively with OpenAI, but it's a relatively short period of time. I think the reality is, for a company like us, we need to let the models play out because it's not clear. And I wouldn't be surprised if there were multiple models rather than a single model going forward.
Okay. It's great to see you.
Great to see
Thanks
you.
for coming in.
Thank you. Great to be
Appreciate
here.
it. Thank you.
As always.
All right, when we come back, an update on the latest attempts to end the partial government shutdown. We will have a live report from Washington next. Squawk Box will be right back. Well, there's the groundhog, Punxsutawney Phil. He emerged and he saw his shadow, which means 6 more weeks of this stupid winter.
Stop the presses.
Yeah. Like I said, I knew it was going to happen before he came out. It's cold. It's even cold
So
in
cold.
here.
It's single digit. It was below.
East Coast cold, but I go back to
Real feel was
my
below
friends
zero.
who like to ski, who think this is great.
Right. I don't like it
Me either.
because it comes through the windows at my house. Comes through them
The
here.
window's here. It's freezing.
It's actually not coming
Colder than
through.
it
It's
was on
going.
set in
It's actually
Dallas.
going out. That's what's happening. The heat.
The heat's leaving.
Heat's
Yeah.
leaving. Yeah.
All right, but there it is, Punxsutawney Phil, and yeah, none of those people look happy leaving with the message that he has just delivered. In the meantime, House Speaker Mike Johnson says that he thinks he has the votes to end a partial government shutdown by tomorrow. Emily Wilkins joins us right now. She's got an update on that. Good morning, Emily.
Good morning, Becky. Yeah, we might need a groundhog here to tell us exactly when this shutdown's going to end. Tomorrow is Mike Johnson's hope, but the fact of the matter is that the votes might not be there. You know, Johnson, he initially hoped to be able to fast track this bill that passed the Senate last week with a strong bipartisan majority tonight. But then House Democratic leaders signaled that many of their members are set to oppose the bill. That means Republicans are going to have to see if they can move it with their razor-thin majority. We have a panel meeting this afternoon. They're going to tee up the bill for 2 critical votes tomorrow. And getting all Republicans to support the bill, it's going to be tricky, especially because they've got a 1-vote majority right now. Some lawmakers have argued that the Senate-passed bill does not go far enough for the Department of Homeland Security. That bill, of course, would continue funding for DHS as well as ICE, FEMA, other agencies for 2 weeks. That's going to give lawmakers more time to come to an agreement on restrictions for ICE and CBP. But other Republicans are really starting this drumbeat of asking for bills related to voter ID to move with this larger funding package. And while some Democrats, again, might vote for this overall package, there's this key procedural vote, and Republicans are likely need to go at it alone for that particular one. Again, they're going to have to get everyone in line for this. A shutdown that ends early this week would really have a limited impact on agencies like the FAA, TSA, and the Bureau of Labor Statistics. But as we saw just a few months ago, guys, if this drags on for a few weeks, it can really start to have impacts on various parts of the government and various industries. Guys?
Emily, what are the odds at this point? Are there odds markets that are suggesting whether or not we'll see an extended shutdown?
I'm sure Kalshi has something up that they were tracking with the shutdown before it began. At this point, look, the good thing here is if you want this to be a short shutdown, Donald Trump has already come out. He says that he supports the bill. He says that he wants to get this done in a bipartisan manner. Leadership has had all weekend to make calls, to twist arms. And so there is a sense that this could potentially get done, especially since the White House is really pushing for it. I think we're just going to have to see what, if anything, leadership has to wind up giving up or exchanging and to make sure that they have the votes that they need to get through not just the big vote on the final bill, but also this key procedural hurdle, which is really going to be difficult for Republicans to all get behind.
Emily, thank you. Oh, there it is.
There it is.
We-
But that's it for
99%.
Saturday.
For Saturday, yeah. That's come and gone, right? Yeah,
That's come and gone. It's come and gone. When we come back, we will come and go,
Yeah.
and we will come back. Changing of the guard at Walmart and Target. We're going to look at some of the challenges facing the new CEOs who just took over this weekend. And the chart says Target has some work to do, down 24% in the last year. Walmart up more than 20% in that same time period. We're coming right back after this.
I don't know how you say that in Slovenian. Our next guest will weigh in on the future of the Fed, the state of business in New York City, and much more. Let's bring in Jay Clayton, U.S. Attorney for the Southern District of New York, former SEC chair. Should we televise during the breaks, do you think, or put it on a podcast?
It would be must-see TV.
Even more must-see.
Cancelable. Cancelable.
Yeah,
Those two go together.
So I'll start with, we'll talk about the Fed, but talk about New York City. Is this the ghost of Christmas future? A administration that doesn't know how to shovel snow, doesn't know how to get homeless people off the street so they don't die? I mean, are we seeing Mamdani in slow motion already, do you think?
I mean, look, this is the coldest winter that I can remember in New York.
Like Rod Stewart's the coldest
Yeah,
winter,
no, it
almost
is.
14 years, and it was 14 years.
It was,
All right, but there is black snow everywhere that has not been taken away. It's not going to melt because it's never going above 32 degrees again.
I remember living in Washington in the 90s when Mayor Marion Barry was the mayor and
Yeah.
had no snowplows, and his comment was, "God is our snowplow, waiting for the sun." Maybe that's what we're doing.
So, all right, so you're not ready to take the lead. Well, we'll go to the Fed, but I'm just wondering, I hope this isn't a sign of, you don't think so?
You know what? On this side, I have great empathy and sympathy for all the folks who are doing this work,
Trying to do it,
only
yeah.
because they did a pretty great job of actually clearing stuff
Just
early.
so we could get
and
out of
the
the
biggest
way.
issue right now is just getting some of this stuff off the sidewalks, but that is actually a very hard and labor-intensive thing to do that the city doesn't
We were in
have
DC,
infrastructure for.
and they were still, all the streets were closing because they were still trying to dig out, and it's not leaving, so you need to move it.
Yeah, let me jump in there. I'm not in sanitation or snow removal, but I am in law enforcement. And to date, and everybody asks this, would there be a change in our relationship with the police department,
Yeah.
the feds?
Yeah.
There has been no change to date
Okay.
with the new mayoral administration.
You know about
That's good news.
Yeah.
Yeah.
You know about taking out the Southern District. You know a lot about sanitation. How about Kevin Warsh?
I think it's good we have a pick with uncertainty of when it was coming, who it was, and I really like the pick. I like Kevin a lot. I think he's going to do a good job. He's a known quantity. He's a known quantity inside the building. He's a known quantity on Wall Street. Those are really good things.
Do you take any of the market reaction that we've seen since the pick? Do you think that is significant or signals anything? I think it signals that he doesn't like the size of the Fed's balance sheet.
Yeah, and he's talked directly about this. He's talked
About asset valuations.
and reducing the size of the balance sheet. And look, Kevin's a super smart guy. He knows that the balance sheet, the rates, reserves, they're all related in terms of what that means for ease or tightness of financial conditions. And I think he'll be a very good communicator.
And you always you're fearless, and you're a lawyer, and you're a good lawyer, so you can always talk your way out of anything. I've seen it. I've seen you, and
You should have seen me in high school.
So let me ask. Yes, I've seen you. That's right. So we're talking about this UAE deal. So a sovereign fund invests in a Trump family crypto venture before the inauguration, and then after the inauguration, the Trump administration okays some chip sales to the UAE, which the Biden administration says was not going to do it. I said you need to find the quid pro quo and the smoking gun, and I was told that is the smoking gun. It's already there. And if the Trump administration says, and I'm not saying that it doesn't look bad, or I'm not saying there's no conflict of interest, but if they say we looked separately at the security concerns that maybe the prior administration had, we have been convinced by blah, 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 that has been satisfied, and this has changed, and they have said this and this. You need to be able to prove quid pro quo before you can say it's quid pro quo, don't you?
Yes.
So is it quid pro? Can you tell me, because I was told definitively it's quid pro quo. It's right there. It's right before your eyes.
Joe, wherever we calibrate the ethics rules, there are going to be people who are not happy. But there are two things that I think are really important, and one of them is congressional trading that we've been talking about.
No, are you changing the subject?
No, I'm going to come back to this. I'm going to come back to it.
Go.
One of them is congressional trading that we have been talking about for way too long, a very solvable problem, easily solvable problem. Another one is government ethics and your family. I think we should draw the line pretty clearly that adult children, other family members can continue to do their business. Should they be subject to transparency obligations? Maybe yes, maybe no. But we can't tell people that if you go into elected office, you and all your relations have to give up their businesses. Because then we're going to greatly shrink the size of experienced
What if there
people.
was a wink and a nod?
Well, that's why we have transparency and people can look into it. I believe in
Here's
reporting.
a question for you though, I'm curious. You said that's why we have transparency. In this case, we have transparency because the Wall Street Journal reported this news. That's why we have transparency. By the way, another great credit, not just to the Journal, but to the First Amendment and the idea that the press can do their job, hopefully.
Absolutely.
I say that in the context that there's a view right now that sometimes this administration has taken towards the media to either intimidate them from not doing their job. I mean, that is part and parcel of what is out there. At least it's something that people are worried about. And I'm curious about actually how you think about that, because the transparency piece of this, it's not transparent. It was not transparent until this piece came out. And I think that the answer, this is my personal answer, is I think it would have been much better for this to have been disclosed, and then the public can make what they want of it. Congress can make what they want of it, and we can say it's fine or it's not fine or whatever everybody wants.
Look, you're going to find a person who's very comfortable with and in favor of transparency around financial disclosure, like that. So, I'm not arguing that. I think it's a very important part of being a public official is to have that kind of transparency. On the First Amendment stuff, look, First Amendment's a two-way street. The press does not get to take a view, report something, and then if somebody thinks it's wrong, say, oh, no, you're not allowed to say it's wrong. It's about public debate.
Right.
So,
Or if a journalist breaks the law, you can't say, hey, I'm a journalist. I can do whatever I want,
Right.
because I mean, I don't know if that's where you're going.
the First Amendment has its limits. Right?
And I've seen a lot of people, Ethan Hawke, this is a country I'm now afraid to speak up in, as he's speaking up about being afraid to speak up. It's like you're fully able to say whatever you want.
Hold on, but can I say, hold on, I just want to just stop us, because we just had Hugh Johnston on, and I think we can agree with this.
Right.
There was a moment earlier this year where Jimmy Kimmel said something that was horrific. He should not have said what he said, and he apologized for saying what he said.
No, he didn't. And he didn't even admit that he said it.
Hold on, and I'm not going to, but as a result of what he said, which was, I think we can all agree, distasteful.
Well,
and that's what we're talking about, distasteful.
And
but
not
there's
right, and false.
But you are free to say, for better or worse, things that are distasteful.
Right.
All of a sudden, we got into a situation where the head of the FCC
Carr,
was
right.
on television, effectively threatening the
license,
network.
right.
Right. So this goes to what the issue is, and I just think we need to appreciate where we are and what's happening. That's just the context. I don't know if I don't think we can agree or disagree about those are just the facts. That's what's going on. So that's why people, to the extent that some people have that view.
Andrew, everything you said, I agree with. If you're going to take away a license, there's a process that you go through, but there are reasons that you can do it.
Right.
I don't want to litigate that case here, but I do think that people say, "Oh, I'm protected by the First Amendment." If I go out and destroy a law enforcement car because I'm upset with law
Right.
enforcement, that is not protected.
100%.
If you do those types
Right.
of
And look, your First Amendment right is not protected. The network can choose to fire you, but the administration threatening to use the power that they hold over the network to force them to do it.
and that's a power those powers are powers that we have protections for, whether it's the administrative process, the court process, and we should all recognize that.
Here's a complicated one for you. I don't know, maybe it's not complicated for you.
We all should have some protection from
Right.
government power.
Right.
So here's a question. So last week or over the weekend, Don Lemon gets arrested. He was inside a church where there were protesters. Some people,
Blocking people from leaving.
and no, the protesters clearly were trespassing.
Yeah.
I believe it's probably not legal to be in there doing what they were
Right.
doing. Historically, the Justice Department has not gone after quote unquote journalists who have been covering stories. In this context, it appears that they're including Don Lemon not as a journalist but as a protester, as sort of part of the operation.
Right.
And what that
And
portends.
there's a lot beforehand that he was on record saying, I'm gonna go do this, and that,
Right.
the other thing, and I don't
Well,
know
that's what,
whether.
no, that's what
I'm not gonna talk
Right.
about that specific case. It's, that's not where I can go at that time. But you can't be part of what would be illegal activity.
Right.
Just a general statement. Can't be part of what would be illegal activity. Throw a journalist coat on and say, okay, now I've switched to being a journalist.
I have a camera
and
here
then take
filming
it
my
out. You
illegal
can't do that.
activity.
You can't. I mean, law schools would have a wonderful time discussing that.
Right.
Like how much participation can a journalist have?
Well, no,
A quote unquote journalist in the planning and execution of
Well, the
something that's
question is if you're
illegal.
part of the planning and execution versus you are aware of the planning and execution and you are effectively embedded the way you might be either with the military or something else.
Or you join in.
And the question is, right, and the question is, did he join in
Right.
or not?
That's what there's-
I think what's on camera is suggested that he was reporting on it, but there's
there are
other
people
perspective.
They're
I look,
saying it
that's what
wouldn't
I'm,
let people out, and I don't know. I don't know.
I have a different-
That would all come.
I have a different
out
one for
and-
you.
By the way, I didn't know we were going to have the
And there was enough.
the
there was
constitutional
enough-
law
and grand
quiz
juries,
here today.
You've told me how the grand
Need your
jury
help.
and Stormy Daniels, it's a real grand jury. We pick our grand juries and whether they're relevant or not based on our own viewpoints. This grand jury thought it was, fair game to arrest Don Lemon. Right?
after two judges
I know, but
decided that
and who knows?
said that
I
they
know,
couldn't or shouldn't.
Right.
Right.
Same thing with the
And an appellate court said you should.
I'm just saying it's super complicated. Okay, I have a different one.
That's not what yours.
Epstein emails over the weekend, right? We have all of these emails. We're all trying to make sense of these emails. Some of it seems, a lot of the emails are very,
Some
let's
of it
say,
is
unattractive.
anonymous calls to the FBI about eating. I mean, some of it's just snuff films, eating.
I want to
mean, it's
say
crazy.
two related things, and the first is very serious, and that is victims of this type of behavior.
That's all right.
Okay, we at the Justice Department, Southern District, have spent the last 45, 50 days working around the clock, trying to make sure that victim names are redacted. Some victim names have been posted. It's very unfortunate. We've worked over the weekend. We're trying to fix that. But we need to protect those victims for their own safety, for their own well-being. But also, it is very, very difficult to get victims to come forward in these types of situations because of public disclosure, public scrutiny, because some people put victims on trial. There is much more of this type of activity than I ever would have thought when I went to the Justice Department. We just had a guilty plea last week for a person who was very prominent in the New York community, banker. Terrible behavior. People can look it up online. I'm not going to go into it, but we need to know that protecting victims is extremely important for the administration of justice, so that we can actually have people who are
Well,
willing
that's
to
the
come
question. Do you
forward.
think, one of the things that's happened is we now have all these questions when you read these emails, and you don't know what's true, what's not. By the way, you read the stuff that was written that Epstein was writing to himself about Bill Gates, with all sorts of allegations in it. You don't know whether he's a psychopath and he's writing real things, whether he's not writing real things. By the way, you see people's names. By the way, Kevin Warsh's name is mentioned in the thing next to, and I don't know if it's a victim or what, but there's a redacted name next to it. And so invariably some people say, well, who's he with? What's going on here? The whole thing has opened up a complete can of worms. And I'm not saying it shouldn't. This is what the public and clearly Congress wants. But I also don't know what you think this portends in the future, how all of this gets litigated.
There are lots of reasons why people wanted this. Years of uncertainty, years of debate. But what this exercise shows, now, and the second thing I want to say is, these files are raw. When someone calls the Justice Department, when someone calls the FBI and says, I want to report a crime, you're required to take that information down. You're required to record it. Now, you don't know the veracity of that. You don't know the motivations. What you are seeing is the reason that we don't release this material on a regular
That's
basis.
what I was going to ask you. Should this material have been released? I think it raises the question of where are the arrests? There's never been any of Jeffrey Epstein's clients who we've seen any arrests.
Well, I don't. it should be the very exceptional circumstance, very, very exceptional circumstance where we release this material for all the reasons you're seeing. The victim protection, paramount, but there are allegations in there that with 10 or 15 minutes of work, you can realize have no basis in fact.
Right, a lot of them.
A lot of them.
And just like the craziest space aliens. I mean, it's crazy stuff.
And to Becky's question, what I would encourage people to do is look at the internal Justice Department debates. Now, a lot of it is redacted because there's discussions of legal theories and victims, but it shows the process that the prosecutors at the time went through to decide who should or should not be charged. And it would be good that if some of the legal journalists took a look at that and gave an assessment. You know, it's America. They get to assess whether we at the Justice Department did a good or bad job in those decisions in 2020 or
Right, but you have a situation now where the public is looking at all these emails thinking, to Becky's question, why hasn't someone been prosecuted? You read through all this stuff and say, well, somebody should be prosecuted.
And Andrew, what I'm saying is, with all that information, take a look at there is a great deal of process inside the Justice Department when charging decisions are made. Prosecution memos are produced where the line prosecutors tell people like me, the supervisors, here are the strengths and weaknesses of the various cases. Looking at those, and you will have some insight into this. And one thing that I applaud Deputy Attorney General Blanche and the Attorney General herself is said to Congress, look, there are lots of redactions. Public can look at those redactions, but a member of Congress can come to the Justice Department with appropriate confidentiality arrangements and look at those documents. And that type of transparency, I think, is extremely important in this exercise. So as this plays out over the next several weeks, people get a chance to digest it, and then, the public opinion on whether there should have been or should not have been somebody else charged or other investigations. Last thing I'll say is people are looking all over this. If there are criminal activities that have not been reported to us yet, we are very open for victims, their counsel, to come forward and point us in the right direction.
Crazy. Did you watch part of the Bannon? Did you watch that interview?
Yep.
I had never seen, I don't know, Jeffrey Epstein sort of talk in his New York accent and all that stuff. But at the end, he says, "Are you the devil incarnate?"
Yep.
And like Epstein was like, "Let me think about that. Well, what do you mean?" And it was almost open to the idea of saying, "Yeah, pretty much," which was just so scary to me. The whole thing is it could be a horror film, I think.
Well, I am sure there will be films. I have no doubt about that.
Right. All right.
Jake,
Thank you.
Thanks.
Coming up, Fed Chairman pick Kevin Warsh is now going to go into a confirmation process. We're going to talk to Senate Banking Committee member Bill Hagerty of Tennessee about what happens next. That's going to happen at 8:10 Eastern Time. Squawk Box coming right back after this.
It got
When we come back, new month, new leadership. Both Walmart and Target have new CEOs in place as of this week. We're going to take a look at how the changes at the top could impact these two retail giants. Squawk Box, we'll be right back. It's 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories this morning, the government partially shutting down on Saturday, but House Speaker Mike Johnson says he thinks he has the votes to end it by tomorrow. The House Rules Committee is scheduled to meet today. A number of headlines for the oil market. OPEC Plus agreeing to keep its output levels unchanged for March, and President Trump telling reporters over the weekend that Iran is seriously talking with the United States. It's a signal of potential easing of tension between Washington and Tehran, and the oil markets are reacting accordingly. WTI is off by more than 5% this morning. Crude oil trading at $61.87 a barrel. Along with oil, we are watching the precious metals trade. JP Morgan boosting its year-end gold target to $6,300. Gold and silver prices this morning, actually gold has picked up again, 1.4%. Comes after a big decline on Friday. Silver prices up by about 3.8%, but silver prices were off by 26% on Friday. It has been an interesting market to watch. Some of the biggest gains that we've seen since the 1980s, leading up to what we've seen in the last few days. And new CEOs taking over at both Walmart and Target this weekend, while Lululemon is still searching for a successor. Joining us right now to break down what it means for the stocks and the sector is TD Cowen's Senior Equity Research Analyst, Oliver Chen. Oliver, thank you for coming in today.
Pleasure to be here, Becky.
So this is pretty amazing to think of Walmart and Target having new CEOs basically within a day of each other. Very different situations for the two of them, but a huge changing of the guard. How do you read what's happening right now?
We continue to be most bullish on what's happening at Walmart. It is a big change in terms of Walmart is at a point in its development where it's becoming much more profitable on technology. Meanwhile, Target has a lot of work to do. So they're at really very different junctures. We see vision to velocity at Walmart in terms of digital advertising and membership. Target at the same time needs a lot of work, particularly in their merchandising as well as technology and customer experience. So they're at really different points. Target needs a reinvention, Walmart continuation along the same strategy.
Which of those is a tougher role to step into? You think of John Furner, I mean, keeping that momentum going at Walmart, like Doug had been able to do for so long, there's a lot of room for downside, not as much room for upside.
What's great about Walmart, it's operating from a position of strength. So the next era is about AI. Walmart's done a really good job in terms of monetizing this flywheel of the marketplace, digital advertising, and AI. And keep in mind, about a third of the profits come from membership as well as digital advertising. Target has a much bigger job on its hands in terms of improving, resetting a sense of urgency. That's all to come. That being said, the valuations are very different. Walmart's at 45 times PE and Target's at 15 times. So the market expectations are very elevated in terms of what Walmart can do.
I mean, that's significant in itself. You still like Walmart better, even though it's at such a richer valuation for this.
Yeah, we see a bright future. Free cash flows, thinking about price and convenience, and you layer on technology. That's a big story for decades to come. And digital meets physical, and the competition versus
Wait, what was the word? Say it again.
digital. The future
Digital?
of retail, meaning both digital and physical.
How are you spelling that?
With the P.
PH?
Yeah,
With
exactly.
a Y or a
Yeah, we would use a Y. Too.
Okay.
I don't even understand what that means, though.
Just a connected experience. The best example is curbside pickup.
Okay.
So digital meaning bricks
You
plus
order
clicks.
online, you go pick it up.
Yeah, and the
Or
future is
store
stores.
is
And
the one that's
stores,
doing
the
it.
ones, yeah.
But that's something Target has actually done well.
They've tried their best. They're using employees for fulfillment. You have to think about every data point in terms of sortation centers, and e-commerce is just turning profitable at Walmart. So having the density, having the volume, having this core grocery business is so important to making the whole flywheel work.
Let's talk a little bit more broadly about the consumer. Where does the consumer stand right now? What
Yeah.
kind of shape are we in? And how does that make their jobs either tougher or easier?
Yeah, we see this K-shaped economy, meaning bifurcation, meaning strength at the high end and weakness at the middle and low. Walmart's very well positioned because of price and convenience. Also, Walmart's getting higher household income consumers. What's been really tough is consumer discretionary. And as you know, Target's portfolio is very indexed to discretionary. So if we do see interest rates go down, that will benefit Target. Right now, Walmart's in a very good position. The big problem at Target in terms of their supply chain really is speed and home as well, and negative trends there. So you're getting a massively dominant grocery business at Walmart that focuses on price and convenience. The bottom line, the consumer has money to spend, but is being very cautious and choiceful in how they spend and looking for value, convenience, and a do-it-yourself new consumer.
Choiceful. You have picked up the retailer's words on this too.
Well, the
retailer's
consumer is
choiceful
practicing,
and joyful and
the consumer wants joy, but it's a struggle. It's a struggle because the consumer is fundamentally sound, but sentimentally weak. So we're seeing these cross currents in the consumer, and Walmart's well prepared to compete in that environment.
Oliver, thank you.
Yeah, my pleasure.
Okay, let's go over Dom Chu with a look at this morning's pre-market movers. Dom.
All right, so good morning, Andrew, Joe, Becky. We're going to start off with a Mag 7 stock check, all trading lower in the pre-market trade so far. Weighed down in part by the Wall Street Journal report over the weekend that broke down earlier. We talked about with the AI issues and everything else. You can see NVIDIA shares right now are currently down just about 1%, Alphabet down 1%, Apple down about 1%, and Amazon down 0.75% as well. Tesla's also down after weaker auto sales in parts of Europe. but this could all be part of a larger risk-off trade, so to speak. So keep an eye on all those Mag 7 type trades. Meanwhile, you've got Disney shares right now currently off about 1% after beating estimates across the board for its fiscal quarter and reaffirming its full-year guidance. Operating income did fall in the quarter. Disney cited higher production and marketing costs in its entertainment segment, and the YouTube TV blackout is kind of weighing on sports overall. The report comes a day after Bloomberg reported that Disney is close to picking Parks chairman Josh D'Amaro as Bob Iger's potential successor as CEO, so Disney shares off 1%. And we'll round things out with shares of Humana right now, currently down about 2.5% after Morgan Stanley downgraded that stock to an underweight from a prior equal weight. Morgan Stanley citing the CMS's 2027 Medicare Advantage Advance Notice, where they essentially decided to keep payment rates flat. Analysts called Humana disproportionately exposed to that Medicare Advantage program, so keep an eye on Humana shares off 2.5%. For more on those and other top analyst calls of the day, just head over to cnbc.com/pro, where subscribers get all the context and detail around those notable upgrades and downgrades, guys. Andrew, I'll send things back over to you.
Okay, Don, thank you for that report. Looking forward to seeing you again very, very soon.
Coming up, talk a lot about fundamentals and what they say about the markets. What about the technicals and the charts? And we'll look at that when Squawk Box returns in just a moment. Join us now on what the charts, what the technicals are indicating in the markets. Katie Stockton, Fairlead Strategies, a founder and managing partner. I said the same thing to Tom Lee. You both were looking for some near-term angst, I think, in equities and not a move higher. And I think it sort of confirmed what you were looking for. Is it Are we still in that period?
I think so,
you do?
yeah. I mean, January was pretty firm for the major indices, and we had this tug of war almost, right?
They
between the
ended
winners
a little
and
bit higher,
losers.
but we don't feel like they ended higher.
It doesn't feel that way. Yeah, sentiment isn't great right now, and I think reasonably so because we do have all this volatility external to equities and even internal to it on the individual stock level. So this is an environment in which people are on edge, and we just like to keep it very disciplined in this environment where we're watching support levels. For the S&P 500, this 6730 area is key support for us. Below that, risk does increase quite dramatically because the 200-day moving average is far below, and more important support is around 6130. So we really don't want to see a breakdown. And unfortunately, some risk assets do seem to be breaking down, like Bitcoin.
Bitcoin, and what about tech stocks, AI? The leaders from last year, do they have more consolidating to do? Can the markets move higher without the leadership?
Yeah, you know, I think it's probably an environment in which we want to respect the long-term uptrends, and AI certainly is that. Some of which have gone somewhat parabolic, right? We had, and now of course gold and silver are exemplary of what can happen in a parabolic uptrend. They get resolved through these pretty dramatic pullbacks, not even just consolidation. So I think volatility is pretty normal with these very steep uptrends, and yet it becomes healthy ultimately. For the price of gold and silver, we're calling for 8 to 9 more weeks of corrective action. Maybe it's more sideways to lower than this initial downdraft. And I wouldn't be surprised to see the same from some of the AI companies, but the market's been a little different, I think, than early Q4, where it's treating the stocks as individual companies as opposed to part of a complex. So the mega caps used to be treated together, and now we've seen some massive dispersion amongst some mega caps. And I would imagine in the AI trade, there's some of that too.
And what we hit support that you talked about on Bitcoin and went through it. Did it go through it to the point where it's indicating new support
More
levels down in the
downside.
60s?
Yeah, it is actually. So if the breakdown that we saw over the past week or so is confirmed, and we have these pretty explosive moves on the macro front, so we want to make sure we always wait for confirmation. But if we see Bitcoin close below about 89,000, which seems like it's a foregone conclusion at this point, that would confirm a breakdown below what we would define as the cyclical uptrend. The weekly cloud model that we track, which has been very reliable as a gauge of support, the fact that it was breached is certainly a long-term setback. We already know that there's been a loss of long-term momentum behind Bitcoin, but what it tells us, or what it would affirm if it's confirmed, is that the cyclical uptrend has reversed, and now either we're in a big, wide, volatile trading range, or something worse than that, i.e. a bear market cycle, and that means each relief rally should give us a lower high. Next support is around 70,000, and below that, it's just shy of 58,000. That 58,000 level, it is, somewhat dramatically far below, but these cryptos are
125 to 77. So you say we could eventually hit a bear. That doesn't qualify.
No,
as a bear market
it
yet?
does, yeah, by some metrics for sure, just not based on this
People
one model.
said it no longer needs the 80% pullbacks. Maybe it now gets 40% pullbacks.
Well, I guess it's a more mature market now.
Do you think
and,
40 would do it, or do you think is 80 possible
So for
again?
us,
What's
it's-
80? 20% of 125. That would get to 25,000 if it was an 80%
Well,
pullback.
yeah, that would be pretty dramatic downside, and that would be out of line with what we're seeing in our indicators at this time.
Right.
What we refer to that end is the long-term overbought oversold
And I think
metrics.
you would see some unwinding.
I would
Well,
think.
that's a question that I've always been concerned about, and I just don't know where
Strategy and other
where's this invisible line in your chart.
Yeah. Well, I would say what we look for is not exactly a level, but a setup. So we want to see a long-term oversold condition and a little stabilization. That's what tells us to get back in, and obviously it's going to take some time to get there.
Great, Katie Stockton, thank you.
Of course.
Okay.
All right, when we come back, Banking Committee member Senator Bill Haggerty on the president's pick to lead the Fed, the government shutdown, and much more. Squawk Box will be back in just a moment. right, joining us right now to discuss the president's pick for Fed chair and other D.C.-related topics is Tennessee Republican Senator Bill Hagerty. Senator, thank you for being with us this morning. First up, what do you think of the president's pick to run the Fed?
I'm very pleased that the president has chosen Kevin Warsh. He's going to be the right man for the right moment, I think, at this time. Kevin is indeed the man for the moment because I think he's going to take the Fed from what has sadly become a political zone back to an entity that's much more reliant on the data.
Is the confirmation process at risk? We have heard from your colleague, Senator Tom Tillis, that he's not going to allow any nominations to go through unless and until the investigation into Chairman Jay Powell is taken care of and removed at this point. What do you hear?
So I think we need to focus on the individual. I'm the only member of the Senate that's been through the cloture and confirmation process. It's never easy, but I think what we have to do is focus on the individual that's before us. Kevin is eminently qualified for the position. If you think about it, he was unanimously confirmed the last time he came before the United States Senate. He's already been a Fed board governor. I think he's going to make an excellent candidate. I think when he speaks with the members of the banking committee, they'll see that he has clarity of thought, the vision. He understands capital investment, how to get our economy on track, how to stimulate more credit in America, more credit availability, and to make certain that the Fed stays in its lane. Sadly, it's gotten out of its lane with respect to climate regulations, DEI at the regional feds, the change of the employment definition to become from full employment to full inclusive employment. What does that mean? It's far too vague. We need somebody to get us back in the lane, and Kevin is precisely the person to do that. And I think it'll be a refreshing candidate to come before the Senate Banking Committee when they see how bright, how capable Kevin Warsh is.
But Senator, you're talking about his qualifications for this. Senator Tillis doubled down 2 days ago, saying he is not going to allow any nominations to go through until the Department of Justice halts its investigation into Chairman Jay Powell. Have you spoken with him about this? He has the power to do it on his own.
That's certainly true. Any senator can bring, Senator Tillis is certainly in a position to bring this to a tie in the Banking Committee, but I think Kevin has the potential to reach across the aisle. Kevin certainly has had Democrat support before when he was confirmed, so I think we just need to move forward with this.
You could do it without Tillis, you think, if there is someone, because Tillis is a Republican, obviously,
Yes.
You think that this could be done with Democratic help?
If you look at the numbers, if we wind up in a tie, which we just have a one Republican advantage, if we wind up in a tie in a partisan vote, that's a different story than if Kevin reaches across the aisle, which he will. And I think he's going to have great appeal across the aisle. I was able to pass the stablecoin legislation, the Genius Act, with a good number of Democrats on a bipartisan basis. We've been able to achieve things on a bipartisan basis in the Senate Banking Committee. I don't think this should be a different case. So I'm looking forward to Kevin having, again, great appeal. Leaving aside what's happening at the Fed, there's a massive cost overrun in that project, certainly. But the details of that, something that that's underway. I think what we need to focus on right now is putting the right leadership in place. And frankly, Becky, to not have leadership there, to let this go awry or to somehow create more uncertainty in the marketplace is something I think that all of my colleagues should clearly understand is not in the best interest of America.
You're talking about that at the same time, you're talking about this government shutdown on a much broader scale, and it looks like that's going to be fairly complicated. Do you know where things stand? Is there an off-ramp for that as well?
Great point, Becky. This is on a much broader scale, the shutdown. But I feel confident speaking with Speaker Johnson and the commentary that I hear coming out of the House. It's close, as you know, a very, very tight margin that Speaker Johnson has to deal with. But he feels confident that he has the votes. They should move on to this today. Later today, the Rules Committee will get on to this. Hakeem Jeffries is not going to allow things to accelerate, so it will be tomorrow. But tomorrow, Speaker Johnson has confidence that he'll be able to pass this, that we'll be able to get that signed by the president tomorrow. And so the shutdown will be very temporary. It started at 12:01 a.m. Saturday morning. It doesn't have much impact over the weekend today, but we need to get this signed. We need to get back to it will be 11 of the 12 bills as we move them through on a bipartisan basis. The one outstanding is DHS. There'll be good faith negotiations for 2 weeks after Tuesday, and I have every confidence that we can get to an answer that works for America.
Senator, what can you tell us about your thoughts concerning Iran. There has been a lot of back and forth. The president seemed to suggest that there are conversations that are taking place with Iran's leadership, but we are at the same time building up a pretty significant military presence there, not just from ships, but also from the Patriot missiles, the THAAD missiles. What's your expectation of how this goes down? What's your thought on what we should do?
So this is something I've been tracking for some time. Becky, you know I served in the first Trump administration as U.S. ambassador to Japan. It was my job to get the Japanese to stop buying Iranian crude oil back then. We were imposing maximum pressure. It was working. As soon as that pressure came off, and that was the day that Joe Biden came into office, funds began to flow back to Iran. What happens? Terror breaks out in the Middle East. Iran funds, this is the greatest sponsor of terror in the world. They fund all of the unrest in the Middle East. We're putting pressure back on Iran. That's the critical element here. You hear all the discussion about talks. The Iranians are famous for talking and for tapping and for agreeing to things that they always renege on. I think President Trump understands that very clearly. I've had numerous conversations with him about this, and President Trump understands that strength is the position to be in when you deal with a theocracy, a dictatorship, if you will, that exists in Tehran. I think President Trump will be in a position, in making certain of that with the movement of carrier strike groups, that the United States will be in a position of strength as we have any further negotiations. And he needs to make certain that Iran is never in a position to have a nuclear weapon. And that's going to take some work. That's going to take a strong position. That's exactly where he's headed.
Senator Haggerty, thank you for joining us.
Always great to be with you, Becky. Thank you.
All right, that's a nice jacket. I like you. Did you wear?
Jealous?
Did you wear it in Davos?
I did.
It was warmer in Davos, wasn't it, than in here?
Little, yeah.
Yeah. So you decided it's like a fashion.
Look, I decided there's no bad weather, there's only bad clothing.
There's only bad clothing.
So I'm going to adjust my clothing appropriately.
You do what you got to do. What are we going to do? Just
freeze.
Next, Alphabet's autonomous driving unit, Waymo, looking to raise new funding that would put their valuation into triple-digit territory. Details after the break. We're coming right back.
Alphabet's Waymo unit eyeing a triple-digit valuation. Mackenzie Sigalos joins us right now with more. Good morning to you. Welcome at this early hour in California, where you are.
Good morning, Andrew. So Waymo reportedly set to close a $16 billion round as soon as this month, valuing the business near $110 billion. Alphabet is expected to supply most of that capital with new names like Sequoia, DST Global, and Dragoneer now in the mix in a round that is said to be 3 times oversubscribed. Now, Waymo won't discuss the financing, but its spokesperson pointed to traction, more than 20 million trips completed so far, and that's what these private market investors are paying up for. Commercial scale, a fare-charging, fully driverless service already running in multiple U.S. markets and rapidly expanding. Waymo competes with Amazon's Zoox and Baidu, but its chief U.S. rival is Tesla. Now today, Tesla's robo-taxi is still limited, a tightly controlled demo in Austin, with testing underway here in Silicon Valley. Yet on the Q4 call, Musk leaned harder into the AV payoff story while warning the next phase requires a step up in CapEx. Which brings us to Uber, which is the demand layer here. It reports on Wednesday, and it's trying to protect its position as fleet scale. It just kicked off an in-house AV effort last week aimed at strengthening what it can offer partners, including tapping its trove of real-world trip data to help train their AI faster. Andrew?
Mackenzie, it's... do you think ultimately they're going to spin this company off? Is that where you think this all goes?
Well, it's certainly undervalued right now as part of the Alphabet family at $110 billion. You compare that to even Tesla's market cap of $1.4 trillion, which very much has to do with investors giving it the benefit of the doubt on its robo-taxi ambitions. What I will say is that it's more than doubled its last valuation, which was around $45 billion back in October of 2024. But Alphabet likes having these bets in-house. And so a lot of Wall Street was modeling the sum of the parts math when there was a question about a possible Chrome divestiture last year. But it seems like Sundar Pichai is really pointing to this as a bright spot for the company overall. He said in an all-hands meeting in November that by 2027, Waymo revenue would be an appreciable part of their revenue. Currently, it's around $350 million annual recurring revenue, according to the FT.
The reason I ask the question is ultimately all of these investors are going to need to get their money out. They're going to need some kind of monetization event unless contraction, this is what I'm so curious about, Alphabet buys them out.
And that's a standing question here, because at this point, Alphabet is still the largest stakeholder. 13 of that $16 billion in this round is coming from Alphabet, reportedly. So clearly, they're looking to kind of shore it over in the meantime until it's able to pay for itself. And that's also part of why we're seeing Waymo diversify its fleet away from Jaguars, which are quite expensive, to Hyundai. And then also this Chinese startup Zeekr is doing these minivans. We'll say that was tied up in the video that went viral in Echo Park because it collided with a lot of cars in a parking lot.
Mackenzie, thank you. Appreciate it.
Thanks, Andrew.
All right, up next, for better or for worse, praise and concerns for the president's Fed pick. Steve Leisman brings us that story next. The futures at this hour are a little lower. Dow futures off by about 28 points. S&P futures down by 29. The NASDAQ off by 181. The futures have improved from where we were just 2.5 hours ago. Squawk Box, we'll be right back.
The market probably should be preparing for what could be some vast changes at the Fed under new chair designate Kevin Warsh. And senior economics reporter Steve Leisman joins us with that story. Good morning.
Good morning, Joe. Kevin Warsh's expected nomination to Fed chair has been met with high praise from those who think the Fed has made big mistakes and Warsh has better ideas and can fix them, but also been met with deep concern about potential far-reaching changes at the Fed, uncertainty and rhetoric that for some has not always been entirely consistent. On the key issue of Fed independence, Warsh has been a strong supporter. Says a less active Fed will be more independent from Congress. The risk here, few Trump appointees have acted independently, and concerned he could drive rates too low to satisfy the president. On the issue of rate cuts, he says the Fed should be incorporating supply-side gains into policy now. The risk? Gains are temporary, not entirely clear, and offset by tariffs and other policies. Former New York Fed President Bill Dudley telling me over the weekend, we don't know the magnitude or the speed of the productivity gains. It's not something I would make a bet on over the next 6 months. On the issue of the balance sheet, he wants to reduce it, allowing for lower rates. The risk here, calibrating the effect of the balance sheet and rates on markets, the economy, and the reserves demanded by the financial system. Another big area. Warsh says the models have been wrong, partly so, and led to pandemic inflation, among other things. The risk? Unclear what other models he has in mind. Former St. Louis Fed President Jim Bullard telling me he would be more eclectic than Bernanke and Yellen, who both came from the model world, and he thinks that's Warsh does, that's a good thing because the models are not that great, and that is a fair criticism. Hard to bet on any of these changes because we don't know the timing Warsh has in mind, the sequencing, or whether he'll muster the consensus of the committee. What is clear, as one observer told me, Warsh is the first Fed chair since Paul Volcker who is unlike promising continuity with his predecessors.
Can I ask you a personal relationship question? When
Maybe.
Yeah. No.
Not so sure.
Steve, we've got lots of questions.
No.
I'll talk to you, Becky, but I don't know.
When Volcker made his moves, he clearly had to have the support of the board, the rest of the board, to do these things. What was his relationship like with those people? Did those people like him, dislike him? The reason I ask is, I think one of the first things that Kevin Warsh is going to have to do, to some degree, is mend some fences with some of the people inside this board who he's been criticizing for the last, 3 or 4 years. It's very hard to walk into a room with people who feel like you've been, saying you're all terrible, and I need to blow up the whole system. And so I'm curious just what that ultimately has looked like in the past. If there's a parallel to the present, because you're going to need those people to go along with you.
You're correct. I think of Fed folks as technocrats first, and I think the context is what's going to really matter. Volcker comes in at a time of extremely high inflation. The Fed's imperative to reduce that inflation is obvious to everyone.
Right.
You don't have to twist arms to do the obvious thing, okay? I think that was also true, by the way, if you notice, it's one of the reasons I reject this notion of the Fed having been political during the Biden years. What does Lisa Cook do the minute she comes in office? Votes to raise rates 75 basis points. Everybody was on board.
Right.
So the context will matter. And I'm not sure Kevin Warsh is going to mend fences. I think there's a legitimate thing. He's going to come in and come in with new staff. He's not happy about the models and how they've operated. Now, Powell, I wish I had the sound on tape that we had, but Powell said, what models? Give me the models. If you got models, give me models. So a little bit of skepticism about Kevin Warsh having the new models here.
So that's interesting. So he can replace the staff himself.
He can replace the staff. Yes, he absolutely can. I think that's something he's sort of almost said he's going to do. Not almost, he said he's going to do that. He's going to, and part of the problem, and I had a long talk with Jim Bullard, who we should have on to talk about this, is there's been a little bit of, what's the right word? Blind allegiance to the models. And the problem with the models is the models never tell you will have inflation. And look, when I was thinking about, and I went down the rabbit hole on Kevin Warsh's ideas over the weekend, the Fed never did a public sort of hearing and thinking, how did we miss the inflation of the pandemic? How did we miss the great financial crisis? So I don't think they've done that kind of transparency that would have given you more confidence in the Federal Reserve. And so I think that's a big deal. Why did they not, where did transitory come from? Why did they hold on to it for so long? Why did they maintain the balance sheet so large? This is the kind of opening that a critic like Kevin Warsh has.
What are the decisions that Kevin Warsh can make effectively unilaterally? And what decisions need the entirety of the board to vote on them?
They all need the entirety of the board, but Joe had it right, and you kind of had it right earlier when you said the chair can do a lot. The chair is out there; he's at the pinnacle, so he's going to call up people and say, "I got this thing coming. I'm going to do this and that." He gets the staff behind him, and give. You know, one of the things is the staff is very influential because not everybody has their own army. Now, here's what I tell you: I'm watching right now. I shouldn't even say this out loud, but I will anyway. Raphael Bostic, we're interviewed on Friday. He's going to be leaving. Atlanta Fed's going to replace him. What kind of influence will a guy like, if it's not done by then, Kevin Warsh have on the replacement of presidents so we can get more?
Warsh is going to be there for at least how long?
4 years.
4 years, right.
Yeah.
So, and how many replacements are coming up?
I have not done that math, Joe, but there will be some.
And then
yeah.
the other thing I was saying,
there's also board members too, by the way.
I heard Bill Dudley, and we won't know for 6 months about productivity. Is everyone basing productivity gains just on AI? Because I think ideologically, if you're against a lot of the programs the Trump administration put in, you're not going to give any credit to the big beautiful bill. You're not going to give any credit to immediate expensing. Right. You're not going to.
I don't think they all are basing on that. Some of them who have spoken.
Are they basing
Guys,
it?
Are
they basing it on everything? Because ideologically, they could say, "Oh, there's not going to be any productivity," and
I went down the alley with Dudley on this productivity thing. Okay,
yeah.
And I want to give you an example. Let's say you and Becky are baking bread for a living.
Okay.
And Becky comes in one morning and says, "I have a brilliant idea. Let's run the ovens at 375 and not 400, and we can double our output." Now, that's heresy to bread makers, I know. Okay? You've spent no money at all. In fact, you've saved money. Pure productivity input. Now, let's say you come in one morning and said, "Becky, I got a great idea. We're going to buy 2 more new ovens, and we're going to spend X amount of capital, and we're going to boost our productivity from that." Huge capital gain increase.
Immediately.
Well, you write it off. That's another point we can get into.
Yeah.
But the fact is, you have spent money on your ovens. You've raised the cost of capital, and the Fed funds rate, the R star, rises because of that. It doesn't rise because of Becky's reason. It rises because of your reason. That's why Dudley is saying, "Hold on, be chill. Let's watch to see how all this works." There's upward pressure from productivity on rates, and there's also downward pressure. And there's your economics lesson for the morning through baking bread. Which my wife does very well.
My idea is better than Becky's, you said.
What's that?
My idea is better than my bread is.
No, Becky's idea is better.
Oh.
Better.
Who has better bread?
Well, could you call it do re mi? Would that be okay? Would that be?
Good. I like
That's my wife bakes bread, and I keep asking her, "Is there a way we can make this into a commercial interest?" And she says, "I have no interest." And we got to wrap because
Yeah, we do.
that's what we got to do.
I like it.
Okay,
Ray,
Steve, thank you. Joining us right now to discuss markets and geopolitics is macro puppet research macro and geopolitical strategist. Good morning to you. Let's actually just go to. I mean, we're talking markets, but let's also talk about maybe the Kevin Warsh of it all. What do you think about the way markets reacted to this on Friday?
It's interesting because bond yields stayed elevated and the dollar didn't really rally. I mean, it rallied a little bit, but not great. So when you look at gold and silver falling as much as they did, I think what's happening, and this is just my view, but I think the sort of left tail risk of a chocolate Labrador in charge of the Fed has been taken away. So gold and silver can collapse, but there still seems to be a little bit of the term premium in bond markets that wasn't really, I guess, related to Kevin Hassett appointment. It might be related to still this, sort of a Damocles of the SCOTUS decision on tariffs. And I think that that's an interesting point. And then, of course, DXY rallied a little bit, but not that much. So I don't think the market has solely focused on Warsh's appointment. There's other things going on. And of course, President Trump, he was on the plane a day ago, and he basically said that he doesn't want and hasn't talked to Warsh about pushing interest rates down. So I think it was also Trump's statements that he was going to be orthodox when it comes to his new Fed chair.
Marco, I keep thinking this through. If someone come up to me and ask me, would you make a dovish bet or a hawkish bet on Warsh? And I don't think I can answer that question right now. How would you answer it?
Well, I think you pointed out that there's two things going on here. First, there's the interest rates, but then there's the balance sheet.
Right.
And so, to me, the balance sheet is almost more important. I think that in 26, the most macro loaded question is how far is President Trump willing to take the housing revival story? I don't think we spend enough time on that. There was a January 8th tweet about $200 billion worth of MBS purchases. And we've kind of forgotten about that because of, Greenland and central bank, Fed chair. But the reality is that that's when Warsh and Trump could get into a fight, not over interest rates, but what if the only way to sustainably raise housing is through MBS purchases by the Fed?
You think that's something that Kevin Warsh would do?
I don't know. But if this is truly important for President Trump, I have a feeling they had to talk about that. Because how else do you actually incentivize, those 30-year mortgage rates to come down? There's some things you can do through macroprudential banking regulations, some things you might have to do through a little bit of an expansion, at least
Marco,
on the MBS side.
the reason I was asking Steve earlier about the relationship with the rest of the board is because I imagine if you were to do something like that, as you're describing, you're going to need the whole board to back that.
Yes, the board, just point of information before Marco answers, the board would have to approve an increase in, and I'm not sure if it's the FOMC or the Federal Reserve Board, but I believe it's the board would have to approve MBS.
That seems like a much more complicated effort to try to capture all those votes, no?
It would be antithetical to what he's been talking about, which is reducing the Fed's footprint in the economy, but Marco makes an excellent point that there's politics behind it.
Right, but the question is whether the rest of the board would go along with those politics. And that seems harder in this context.
Depends on who's on the board.
Well, but you know who's on the board. The current board.
Now?
Yes.
No. They would not.
Right.
They have an explicit, I believe, goal to reduce MBS holdings inside the Fed. In fact, they've kept that runoff the same. They can't run it off because of the rates, but I don't want to take time from Marco answering this stuff, but we can talk about this offline.
Marco, so I hear you saying this, but in terms of how you handicap that?
Well, let's see first if the spread between 30-year mortgage rates and the 10-year yield can come down using other avenues. President Trump can also use the regulatory rules pretty extensively here, and we've heard last year them talk about extending maturity of mortgages. There's portable and assumable mortgages being applied to everyone, not just veterans. So there are ways to incentivize a housing revival. My point is that I think that this will be the policy issues for President Trump, and it's a bipartisan one. So, there's politics of the FOMC board, but there's also politics of Congress in the country. Remember, Senator Warren wrote a letter to Jay Powell to cut interest rates in early 24 based on this issue, which now President Trump has taken. He and Mamdani found common ground on affordability issue, and I think he will run in the midterms on this policy. So if you're looking for a disagreement with Warsh, I don't think it's going to be on the interest rates. It's going to be on the housing side.
This is exactly the sort of thing that Warsh would contend is a fiscal policy issue.
Right.
And is not a matter for the Fed.
That's why
I would find it unbelievable if you would agree to that. The other aspect of this, though, is that I think they can use the Fannie Freddie balance sheets to make that happen.
Okay, but the flip side of this, Marco, and this goes to lowering interest rates, at the same time that you may be trying to, reduce the balance sheet. I don't know what you think is going to happen to unemployment this year as you look out for the rest of the next 12 months. Because I think there's a new concern that actually that is something that could be ticking up. And therefore, again, if you're Warsh and if you're the President of the United States, you're going to want to do something about.
Well, exactly. And I think, first of all, there's the issue of where employment goes. I think the fact that we've had a pretty aggressive enforcement of immigration is going to start mattering for the labor market as well. So you could have a situation where consumption continues to be relatively flat, maybe even flaccid, but unemployment doesn't rise. And so you could have a slowdown in the economy, with employment actually looking okayish, if a little bit middling. And so I actually, I've been a big proponent of this thesis that President Trump is kind of a human steepener. That's kind of worked in 2025, that thesis, particularly when he got elected until February of 25. But I think now we may have put too much confidence on interest rate cuts over the next 12 months. And so a flattener might be actually much smarter for the rest of the year.
Marco, I want to thank you. Appreciate it. We're coming right back after this.
Oracle expecting to raise up to $50 billion this year to build out its cloud infrastructure operations. Meanwhile, both Meta and Microsoft promise more AI CapEx in their latest reports. Join us now, Stephen Levy. He's editor at large of Wired. Have you figured out a hard, fast rule to determine how the market's going to treat big AI cap expenditures? In one case, it's like, oh, that's great. They're really serious about this. Let's bid up the stock. And in the other one, it's, oh my God, they're spending so much. When will we get a payoff? And then the stock goes down. How do you handicap it, Steve?
Yeah, well, I can't really divine how the market goes to that, but they have to respond to the big question of, I think, of our economy really is, how do they, measure, that bet that these big hyperscalers are making, which affects all of us because so much of the market now, because of the high valuations of these companies, and that's like the giant question. They're so bullish not only on AI but on the premise that improving AI and getting to where they want this, Valhalla, where, abundance is everywhere and AI solves all our problems that, Sam Altman and the rest talk about, that depends on AI progressing in a way that requires these massive data centers with hundreds of billions of dollars of investment. Just look at what Oracle did. They're all in. So that's not a bet which is clear is going to pay off. Not only are you betting that AI is going to work its way into the fabric of our lives and build everything out, but that the successful AI only has to rely on this scaling, so we could build these bigger models with the bigger data centers, and it may pay off, it may not pay off, but the people who are pushing AI forward have pushed all their chips to the center of the table on this.
Yeah. So there's a couple of different things that you said there, but you get the same conclusion is we don't know. That's it. And all our money is on the table in this. Look, just think what happens if these big companies with the multi-trillion-dollar valuations find themselves either overextended, or they make the investments and it doesn't pay off in productivity. I think everyone's pretty much come to the consensus that the revenues they get aren't going to catch up in a satisfying way to the scale of the investments of what these things cost. For years. But you made 2 points. One, does the more you spend mean the AI that you're developing will actually be better and worth that additional spending? And two, once you get AI to as good as it's going to get, is the payoff to overall economic growth, is that either better or worse than what you were anticipating? And you can't tell me.
Of course I can. I can tell you that AI itself will continue to progress. So that's outside of the markets, that's the biggest story of all.
All right, very good. Thanks, Steve.
Thank you.
All right, Squawk Box, we'll be right back.
All right, folks, that about does it for us today. We are continuing to watch. Dow futures are actually in positive territory. We will be right back here with you tomorrow. Right now, it's time for Squawk on the Street.
In the warm New York Stock Exchange.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. We kick off the month of February with futures mixed, big earnings on deck, partial government shutdown, more volatile trading in oil, precious metals, and Bitcoin, which does bounce off of 75K. Our roadmap begins with the setup for stocks as we kick off this new trading for the new month.
Plus comments from Jensen Huang raising some doubts about NVIDIA's massive investment commitment to OpenAI. Meanwhile, we've got Oracle shares up as the company announces a $50 billion fundraising plan. And Disney's out with earnings. It beat estimates. Company also reportedly getting close to picking its next CEO.
Meantime, tech's under some pressure as another month of trading kicks off. Jim, for the year to date so far, energy's up 14 and tech's down 2.
Yeah, it's funny because you go in, you look at the S&P futures, and the S&P futures are down big. But then the Dow's up because the Dow is not related in any particular way to the Mag 7. It actually has a lot of others. Now, David is going to say it's atavistic. We don't care.
Correct.
I'm only mentioning it because the S&P is so overloaded with these stocks that we all know that it's very hard for it to be able to run when we're...
Yeah, but nobody buys the Dow Jones, and everybody
Right.
buys the S&P.
No, but I say it's a great snapshot of what, like the caterpillars of the world. And when I look at the S&P, I always say, all right, everyone's going to say what that means is Apple's not so good, Microsoft's not that good, Apple's not that good, and you need to pick because they're no longer trading together. Alphabet's a great story. They report this week. Apple was not bad, but we know that there was problems with components. Microsoft was not that great. We didn't talk about it enough. But I do think that when we look at these things, we have to start saying, Mag 7? No. Alphabet, good.
Right.
Amazon,
Maybe.
we don't know.
That wouldn't be the worst thing in the world to get rid of the Mag 7
Well, that's what I'm
as
saying.
an idea
We
that
have
it
to get
trades
rid of it.
together and that let's just move
let's just
on.
go back to like individual companies.
Right, individual companies.
Right here, right now.
Okay. I'm with you. No.
Wait. You created the acronym.
All right. Well, look. I mean, I'm an acronym guy from way back, but I do think that we are making a very big mistake when we lump these together because now we discover that there is products like a Gemini that are very impressive, and then there are other products that aren't that impressive. Now, I heard Andrew Ross Sorkin this morning say you can switch back. Of course, I immediately went to Gemini and asked, I tried to switch. I went to ChatGPT to go back to see if I can't port everything to Gemini, like he said, and it's not as easily done. I think that these are very separate things, but they are also part of the equation that we have to think about.
Well, everything's part of the equation, including, of course, Oracle, which we've been talking a great deal about, and for which we need to spend some time this morning, because Oracle, of course, with its massive CapEx needs as it builds out data centers for many of the hyperscalers and OpenAI and others, is raising $50 billion. Now, this is not unexpected in the sense of this is a company that once was generating a lot of free cash flow and now is negative free cash flow. As I said, its capital needs are enormous. And so the question has been, when will Oracle choose to tap not just the debt markets? Remember, they already did $18 billion in debt in the fall of last year, but the equity markets. And I do want to take a moment to just talk about how rare that is, Jim, for a company of the size of Oracle and the success it's had, and not that long ago, of course, the free cash flowing nature of the business, to be tapping the equity markets. Now, by the way, the stock's up. This is a moment of relief for many who are saying, well, now they're going to be able to meet the capital needs they have.
Clearing event.
But it is fascinating and unusual for a company. I mean, this was not long, $500 billion company to say we're going to raise equity at the market.
I know, and there's a convertible preferred in there, and we're using equity at the market. The stock should be down, not up, because they could go jam it if they wanted to. Right now, they could jam it. And when I say jam it, meaning that it's up and they can do a little extra in the ATM at the market. But David, one of the things that surprised me is I think there are a lot of people in the fixed income world who are saying, now we get it. We don't have to do a $50 billion bond deal.
Right.
And they're thrilled.
But yeah, now, by the way, they've already launched the bond deal, as my understanding as well. Could be as much as 20 to 25 billion. As I said, that follows the $18 billion that they did later in the part of last year. What was in the fall or so of last year. And then there's going to be as much as $25 billion in equity, as Jim said.
Right.
At least $5 billion of that is going to be sort of mandatory convertible but as much as 20 billion could come from at-the-market sales. And in fact, if you're announcing you're going to do that, you're probably doing it pretty quickly, at least initially.
That's my point, yeah.
Yeah, to your point.
Yeah.
But it's a relief rally in the sense of, all right, they've got the funding needs covered at least for this year. Nothing says, Jim and Carl, that the next year they're not going to have to continue.
Okay, a really big data center, let's get this straight, costs 30 to 50 billion, right? The big ones. And you know, if you do this deal, remember when Larry Ellison talked about putting up like, I don't know the exact number, but like a plethora, okay?
Yes.
But 50 billion and he raises 50 billion, good, you had a nice big data center. How about all the other data centers? The data center demand is so big that you're going to need a lot more. But maybe Oracle's going to just do a giant one instead of doing multiple ones?
Right. I don't know what the plan is. Interesting story today in the Journal about pushback in certain areas of the country, certainly rural areas. They were talking about Michigan in particular, where residents of a particular area that, I'm not sure, it was a Meta potential that they said no to. But you're right, the capital needs are enormous. We've talked to the CEOs, the co-CEOs about it previously when I spoke to them last fall as well about where's all the money going to come from. Now they've answered it to some extent, certainly for this year.
And the
guys,
the deal happens at the end of the day. They're going to price it.
Right. The bond deal gets, I mean, you get that out the door as quickly as you can. By the way, the CDS is where this all started. Remember many months ago, the first time I sort of called for Oracle CDS, and all it has done since then has gone up. But today it should do the opposite, right? Because this does sort of answer some of those concerns around, there it is. And as you look at that, that is quite a move as well.
Well, we do know that they talked about doing something like 100 data centers. Now, at the time, I don't think people realized exactly how much a data center costs. And also, you can put up gigantic data centers. I mean, David's right, there's pushback in some areas. Texas will say, can we have what we want? But then there's issues about water. There's not a lot of clarity about what a data center does to an area because the data centers are different sizes. And we all seem to act as if one data center fits all. And that's just not the case.
Yeah, I mean, to your point, there's so many variables. There's public opinion, there's energy, there's water.
Yes.
That's why there's reports just last week about Meta data centers being developed in secret.
I know.
With NDAs in Milwaukee. Yeah.
That's very smart. Now, balance sheet apparently is stabilized, Oracle, that's what people are saying.
Yes.
Speculative shorts worried about being squeezed. I'm not really that concerned about them being squeezed, but obviously if you're being squeezed, then you ought to go over to MicroStrategy. Do a little squeezing.
Yeah, I mean, the move, no. I mean, we can talk Bitcoin over the weekend. That was a lot of talk. I saw you posting on social media about it a bit as well. That moved down.
Well, I said come sail away.
That moved down in Bitcoin. Again, wasn't this supposed to be a store of value? Isn't that what Michael Saylor has talked about? Digital gold? I think I've heard those words used many times. So then what's going on, Jim? Why is this asset class not moving with gold? Obviously, we saw the reversal in silver on Friday, but nonetheless, still gold's up so much as well. What happened here? What's the issue?
Well, I think that it's possible that it's such a thin market, you can take it down very quickly. If you try to do some selling Saturday evening, what people did, I have a pathetic lifestyle. I was home on Saturday, watched the thing trading down, and I realized that, it could be down on like $100,000. I mean, this market is not as thick as the gold market. No one knows really what's going on. And David doesn't have as much clarity as you'd probably like to see.
Yeah. There's this idea of the marginal buyer in gold is central banks or sovereign wealth funds or institutions, whereas when it comes to Bitcoin, and again, I'm somebody, it's retail, it's crypto funds, it's levered traders, it's just not as strong hands.
Well, David,
and
just a second. Strategy bought 73 million over the weekend at 87. I beg to differ. There's a buyer in there. Strategy is kind of like the First National Bank of what? What are they? The full faith and credit of what? Michael Saylor? CNBC?
Yeah.
Full faith and credit of CNBC?
They are.
Meanwhile, Oracle right now, people are saying, "Hey Jim, you called it a great company, bad balance sheet." Well, the balance sheet is now fixed, and it's a great company.
Is the balance sheet in Oracle though fixed for forever?
I mean, you just suggested that they probably got more to do after this.
They probably do.
The commitments go for years and years.
Well, there's a lot, yeah.
Obviously, they're making the big bet on the customers who will be there. This was part of the conversation I had quite a few months ago now with those CEOs, and a lot of it comes back to OpenAI, I was surprised the stock of Oracle didn't react more positively when we started to report a lot more on the success, perhaps, of OpenAI's a quest for $100 billion in new capital.
Although now we got some clarity from Jensen about.
Yeah, but this $100 billion raise, Carl, is obviously we've been reporting. I think Kate Rooney, $50 billion from Amazon potentially.
Yep.
We haven't seen it yet, by the way.
No, we
and
haven't.
others could add up to as much as $100 billion. Unclear where Nvidia will come in on this. How much?
Okay.
Microsoft may be a part of it, and then a lot of other investors as well.
Right? 40 billion.
SoftBank's $30 billion on this. 30.
Okay, well,
Thank
all
you.
right, here's the
for
latest from
So
James.
SoftBank and Amazon together is 80 if the Amazon number is correct.
Okay, Nvidia trading down on this is just plain stupid because what Jensen said this weekend in Taiwan, Sam is closing the round of investment. We will absolutely be involved. Then he said we will invest a great deal of money, probably the largest investment we've ever made. Now, all we ever hear about is that this. Now, I know Wall Street Journal is terrific, and on ice, in reference to the actual cold ice, not the.
We did ask Jensen about it last week.
Right.
I asked him about, and we have it because it was very much unclear in terms of the answer about the relationship or what they were doing in terms of that $100 billion commitment that had been made, at least, to OpenAI.
As he said, it was never a commitment. That was Jensen's line.
Right, and here's what he said to us. Back in late September, when there were the first reports about $100 billion potential NVIDIA investment in OpenAI, we haven't seen it finalized yet. Is that something that is still going to happen?
Well, we said that we would invest $1 billion, $10 billion for each gigawatt that they would have to go raise. So they have to raise a significant amount in addition to what we decide to invest in them. Now, as you know, we invest in exchange for equity. I think it's a once-in-a-generation company. It's a fantastic investment. I wish we would have invested earlier and more significantly. The work that they're doing is incredible. This is going to be a consequential company and a very large company, and so we're delighted to invest in them. But whatever we decide to invest in them is a small percentage of what they ultimately raise.
Kind of similar to, I guess, what he said as well over the weekend, Jim?
Yeah, I think it is similar. And I know that when you speak to the company, they're trying to tell you, look, he's going to put money in it, but they're not giving you any of the terms. Now, the fact that NVIDIA is down on this, I think NVIDIA is down because the market's awful. But I see the same ones again. It's SanDisk is up. It's Micron. It's the ones that are in shortage versus the ones that have glut. Now, NVIDIA is not really a true glut because once again, over and over again, Genesis says, look, the demand is great. You put a lot of orders in with TSMC. But
look who's coming on Mad Money.
Yeah, well, I want to be a little more definitive than what people say. But we have industrial fourth revolution, industrial revolution demand. Look, let's stop trying to relate NVIDIA to OpenAI. OpenAI is either going to get the fundraise, it's not necessarily because of NVIDIA, or it's going to be from SoftBank and a couple of others. Anyway, the idea that NVIDIA is going down on this is, I don't know, I'm trying to be a diplomat. How about idiotic?
It's one way to put it. We'll see. As we know, it's been flat over 6 months. Jim, market is definitely asking questions.
Everything I like is flat. It's time to buy Caterpillar. I'm seeing them later this week. Good stuff.
Cat's not flat. Hasn't been flat. It's
Cat being
best
good.
down name
I
of the
want
past
good.
12
Okay, you
months.
want good? Have a Procter. How about Colgate? Bang up quarter.
How about Disney? We'll get to Disney's earnings as they report this morning. Rare Monday morning print. Futures, as we said, a bit mixed here with the S&P down for on track for 4 consecutive days down. Stay with us. Disney beating earnings estimates. The experiences division, which includes parks, resorts, and cruises, crossed $10 billion in quarterly revenue for the first time. Meantime, people familiar with the matter telling CNBC that Disney's board meeting this week expected to vote on Iger's successor. Iger was asked about those plans on the call this morning.
The good news is that the company is in much better shape today than it was 3 years ago, because we have done a lot of fixing, but we've also put in place a number of opportunities. I also believe that in the world that changes as much as it does, that in some form or another trying to preserve the status quo is a mistake, and I'm certain that my successor will not do that. So they'll be handed, I think, a good hand in terms of the strength of the company, a number of opportunities to grow, and also the exhortation that in a world that changes, you also have to continue to change and evolve as well.
Jim, domestic parks up 1, per capita spending up 4. They do warn about international visitors visiting domestic parks less.
Yeah, well, look, I searched for how the stock could trade to 117 and back to 109. So it starts at 112, goes to 117, people were reading through. Then it goes to right through 112, all the way down to 109. Always try to figure out how much is the market. You know, David, when I look at this, I think it's good. Streaming's good, but again, it's media, and we tend to forget that when in doubt, sell media.
Yeah, that appears to be. Actually, that's a good way to wrap it up, Jim. When in doubt, just sell. Because to your point, it does seem to be a strong quarter.
Yes.
Experience is strong. Streaming up 11%. They're doing over $500 million in profit per quarter. But that does seem to be the reflex to a certain extent. Oh wait, I mean Netflix shares, of course, we can talk about that a bit later. Right. Down so sharply since, of course, their pursuit and then announcement of a deal to acquire Warner Brothers Discovery. But on this one, a lot of this is going to be the next CEO's problem, so to speak.
Right.
And as you guys probably know, I mean, all I hear is Josh Tomorrow's name. If it is not him, it would be a significant surprise in terms of who the next CEO will be. As you take a look at a picture of Dana Walden, it's not expected to be her.
And that's related to her picture is related to
Succession.
Oh, there we go.
And yeah, there he is. But we'll see. James Gorman has been leading the Succession campaign, so to speak. Obviously, the board's going to have to meet and vote on this. We may know fairly soon who's going to succeed Mr. Iger. And it's been reported last week. Frankly, I hadn't heard this. I didn't think it was news. The expectation is sometime later this year. Iger, while he stays at the company, formally gives up the CEO title so that his successor can sort of take over, hit the ground, and when Iger exits at the end of this year, it won't be as though I'm no longer CEO now. He will have already given up that title and a lot of that potential responsibility as he sort of works with his successor during the period that remains.
Yeah, I mean, when I was going about trying to figure out how good the quarter was, I was confused.
Yeah.
The quarter was good.
Yeah. So what explains this?
Well,
Do you I know there may not be one, other than what you just said.
Well, it's kind of like, I mean, let me give you when I say like sell media. There's a moment where they're talking about sports being down 4, okay? And why is that liked? Well, because people thought it might be down 7.
Well, Sports OperaNet was down 23, and a lot of that was due to the YouTube TV dispute. $110 million hit right there.
That's right.
I mean, they are warning Jim on international travel. That's not insignificant. CapEx went to $3 billion on their cruise fleet.
And yet the cruise business is the one I've been looking for, because the cruise business is fantastic for them. Just fantastic. And they got another ship going, and I thought that was good. I thought it might be ahead of expected of when we thought it would be in. But, David, when I look at this, I keep thinking about Comcast. They had theme parks. Good.
Yes. And they're the
He
growth
was asked
part of the
about
business.
the impact of Epic on the interview in Squawk this morning.
Theme parks are really great.
Theme parks are. I remember back to the NBC deal with GE. It was an afterthought, theme parks, and it ended up being the only growth part of the entire operation for Comcast.
Yeah, buy SanDisk.
There you go.
When in doubt, sell media and buy SanDisk.
Who founded SanDisk?
Buy
Here's a
SanDisk.
quiz. Who founded SanDisk?
I have absolutely no idea.
Sanjay Mehrotra, CEO of Micron.
I didn't know that.
That's interesting. Take a look at the pre-market. We'll get the opening bell in a moment. We'll get to some M&A and shale, some calls on Palantir, McDonald's, Dash, Best Buy, and a lot more. Stay with us.
Take a look how we're setting up when we open about a little over 5 minutes from now. Of course, you can see we are going to be down a bit on the S&P. We're no longer talking about the Mag 7. That's the message from Jim. We'll find out.
There's the Mag 1.
What is the subject of his Mad Dash
Tesla stuff.
when we get that. Don't forget, you can catch us anytime and anywhere by listening to and following the Squawk on the Street Opening Bell podcast. All right, let's get to a Mad Dash. Humana on the deck here. Obviously, the stock down sharply. Was it last week or a couple on the Medicare Advantage changes? What do you think?
Well, I just understand the piece today, which says sell Humana. And it's a very good piece because it's the one that was most levered to this, what they needed. Everyone thought that Montana Oz, who's in charge of this, would go for like a 3 to 5% increase, and he went to
0.09.
Yep, 0.09. And when you go to him, he just says, listen, enough is enough. Now, there are many people who just say, oh my, now you're going to get screwed by these companies. It's not going to be as good. I'm Humana. I have a Humana plant, so I've been looking into it. I'm just saying I don't see anything. It's too early. No change, obviously, yet, but this shock was something that had to do with, man would say, literally, with whether Medicare can be solvent in the out years. So I don't think that you're going to get that relief. A lot of people feel he puts out that 0.9 and then they work
Right,
higher.
and then they work higher, and you get to at least 2 or 3% increase year over year from Medicare Advantage.
And I say,
from
why
CMS.
would Morgan Stanley downgrade it if that's going to happen? Wouldn't you upgrade it betting there's an overreaction? And they did.
I mean, the downgrade's not great. Where were they? They were, now they're going underweight? I mean, thanks a lot, guys, but...
Better late than never.
I suppose. Well, I suppose, to your point, I think it's over 60% of earnings are derived from Medicare Advantage plans of Humana.
Well, David's right. I mean, I guess I picked this one more because I thought it might
All right, we broke resistance.
And what matters here is that Oz is a very serious guy. I met Oz in 2018 where he was talking about cutting the cost.
So that now becomes support.
It was at the Super Bowl.
Good morning, retail traders. For I am Washboardjim, the founder and strategist in technical analysis with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and not being a transsexual. We have a head and shoulders coming up. Kind of rough. Oh, there it is right there. Head and shoulders resistance. Jim, your intros are just quite overwhelming. Especially that one. $6.92 long. We're at the broke the neckline. And the market opens down. Hurry up. Show it. Oh, damn it. Bitcoin at 78. Whew! That fucks all the naysayers. I got a new chair. I stole it from the IRS. I paid for it. I told him, I paid for this chair. I want it. AMD new high. Ooh, look at Apple. Nvidia is down. SPX looks like it's battling resistance at the 200 SMA. Yay. We had a good opportunity on that one. They're at the double bottom for a scalp to the 200. TIRX, just no good. We break the 200, we go to a triple top on the SPX. Do you understand? I'm going to take off my shoes. I got my winter murals on. Merrell's. I wore this shoe for 8 years, man. I love this shoe. And then I end up getting Brooks and Echo. And what else I got back there? Brooks and Echo. Yeah, that's all I got. Double top on the slash ES. Beautiful jump off the V-Wops and off the 200. They got 200 here, 200 there, 200 there. If you can count to 3, you can trade with Bobo. And we broke resistance at the 200 EMA. Just like that. You called it, Jim, but you didn't take it. Randy. Good morning, Bobby. Good morning, matey. Looks like we're going to get to that double top head and shoulders, or triple top. Quad top. Yeah, definitely a quad top. If you can count to 4, you might make a little more. Do, re, mi, fa, sol, la, ti, do. Six nine 4806. 69 4806. Oh man, I already feel better in the chair. I've been sitting on a hard freaking wood chair for 2 weeks, 3 weeks. This makes my job so much easier. Yeah. Spy hit my resistance. Three-headed snake. So we should pull back here. Prepare ye in the name of the Lord. We should pull back. It's pretty hard resistance. And then retest. Well, Jim, I want to stay in the trade. I don't give a shit what you want to do, man. I'm pulling out. We're at the orb, too. I did create an orb. So support's going to be right around 690. $6.90. For right now, I'm going to put an alert in there. And the second one, here the first one at the 21. As long as we stay above the 9, we're bullish. Retesting resistance. Broke the triple top on the SPX, called it out off the 200. Still want to pull back. We got Disney CEO Bob Iger going to leave the business. Good deal. Best news I've heard in probably 10 years. Bob Iger sucks. I'd fire his ass a long time ago. And never paid his salary. It was a scam. Ooh, okay, STX had a good bounce from the dip that it had last week. $30, 35, 40, 25, 35, 40 from this morning low, or last night's Friday's low, somewhere. STX. It just keeps going here. It's low volume. I'm going to take off my shoes, make me a apple cider. Oh man, this chair feels a lot better. That hardwood chair just didn't cut the cake. Granger handles nails. Go to Lowe's and ask for advice, you're going to get hurt. Okay, we're coming back a little bit now. SPX. We got the VWAP. I'm going to do the 200 because we've bounced off the 200 here, 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 here. And we got a good resistance breakout here in the neckline. So that's where I'm going to set my alert. Just a little bit above it. Right above the 63 for now. On the /ES. At the mark. At below. Today's losers, Mr. Coin. Now these things are going to start rebounding real soon. We got Oxy down $1.27 due to Iran. We got Tesla. Tesla's looking at a support here at 418. I think it's where we bounced last time. Tesla. Yeah, here's your double bottom down, triple bottom on Tesla. Triple bottom on Tesla. Triple bottom on Tesla. So Tesla, February the 4th. The 430 strike. Tesla's European sales plunge in January. That's what the deal is. Tesla, rival, what's this? China Renaissance adjusts target on Tesla to 382, maintains hold rating. 215 for something down here. Phillips Securities, okay, I got it. Elon Musk advanced discussions to combine XAI, SpaceX, Bloomberg reports. Well, that's kind of odd. Niles deliveries jumped 96%, fueled by ES8 dominance. NVIDIA AI takeover leaves Apple fighting for supplies. NVIDIA down 350.65. Rashida down 1884. Meta down $7. PLTR up 3. Now I had a support on PLTR. I think we hit it. My alert. Yeah, we hit my alert on it. Amazon, Oracle's up $2. There's another opportunity missed. I had a support level on this thing and it didn't trigger. 157, 57, 57, 57, 57, 57. Oracle to raise up 50 billion. They don't even have the money to make these calls. That's what sucks about some of these companies. Well, what was that? Tesla just went up a little bit, and I did not get it. Dadgummit, I fucked up. I missed that one. We didn't go up much. I missed it a little too late. We had 414.15. I'd have took that trade. There'd have been a no-brainer. We broke resist. We're double topping. SPX. What's ripping? What a rip. Coming down to the VWAP on the SPY. I'm going to move my alert above the VWAP on the SPY. IWM hit my double top resistance from Friday. IWM back to the 200, 258, 88, 88, 88, 88. MSTR. That's missed. 134. 135 on Mr. today. Look how close I am to my coin support. I had 180.64. We got 181. Friday close. Okay, prepare ye. Let's see if we get down here support level. I'm not intrigued to buy puts. What's that?
I was talking to Randy. He's asking about BBA. Is on food right now. You got to fix it pretty good.
Yeah.
RSI on the daily is down at 22. We got 5,000 on the books at 90. I'm just waiting for this hourly to roll over.
You still in cold, Randy? Tonight, after hours, I want you to get on YouTube and watch Eskimos, how they slip in their teepees. Coin's pulling back more. I'll probably be watching coin pretty close this week. Yeah, Hoods took a pretty good knife here, right?
Yeah, he got beat up pretty good for some reason. Wow, I guess it dropped a big one.
Yeah. Yeah, I agree with that. Yep. Well, I got 86 if that doesn't hold. That's my next support in a way.
Regardless of what stand, when he RSL,
Where's my RSI on here? The SPY bounced off my little resistance I had, but I wasn't ready for it. I wanted that VWAP, but it makes sense where it bounced up off of. On the SPY. Double topping on the /ES. Got a new high on Google. UPS new high. PDD got down to 100. I had to probably triggered my support level. I mean my alert. I had 104.40. We hit 99.99, and that's one that I want to go long in when I'm ready. China. UPS broke double top resistance from Friday's high. There you go. Yep. Nailed it, didn't I, Mark? We hit the 21 right there. You break that, this resistance here, you got a good climb up. Well, I'm just going to suggest 92.54. SPX broke double top resistance, and I didn't take it. That sucks. Not one trade today. Yeah, I think so. Yeah, I'd be up a couple $100 on SPX if I took that. 69.70s at $5. I'd be up $400 right now. That's where I looked at it anyway. idiot. I don't like chasing. Right there's another. I'm gonna make 170 on that same call right there, 69.70s on that last two candles.
They just swept Friday high, so. And 7,002 will be Friday high, so that's 7,005. I see. Added some more orders at 7,016. Damn. If they let you pull back 69.83 is a good entry point because there's all kinds of orders above us. Not how many leads pull back get in.
They will. I command them.
Man, I'm good. Go for it. I need 69.83.
I got 69. 60. I'm gonna go get my water running, and I'll be right back. Yeah. Man, I got a chair. Oh. Do some adjusting, that ain't gonna work. God, I'm gonna be crippled when I get older. Oh, that's what that does. That's a rocker. I don't like that. How did that happen? Oh, that's better. Oh. Meadows took a pretty good pullback. Friday after hours, 693. Double bottom. So I'm gonna set an alert right here off that double neckline. Dang it. They're at 1240 now. You still in hood? I'm gonna go get my, got me some cider being made. Well,
Yeah, it is. It is room.
Tesla has a symmetrical flag. I'll be right back. I'm gonna go get my cider. Much better. Double topping. Okay, we had a triple top and a double top with a higher high, barely. Should got a new high out of that. If we break this resistance, I'm going to go in. The 6980s. Why am I looking at the IWM and trading the SPX? I have no frickin' clue. Idiot. The 6750 puts at 450.
That's supposed to move.
The 69, I'm going to give it risk here, 6950 puts at 450. I ain't advising nobody to take this. Very good. UPS at 108.89. Still sitting here. So my target's is 63. We've been consolidating for 5, 10, 13 minutes. So it's going to get tired here and do something. And I don't like that hammer at all. That's what I did. There goes UPS 109.12. UPS finance chief says delivery giant is hard at work right sizing. Oh yeah, 510. Can we get another one or should I get out? What would you do? 530. Don't mess with the wash. 540. There's my $100. $550. Can we get another one? What do you think, Funk? No. 69, 61, 41. Yeah. Oh, /ES. What would you say it again?
69.89.
Yeah. 85, 86. That previous high, you see that previous high on the 1 minute? That's it.
Yeah, I'm just looking at where all the orders are.
That, okay, yeah. That matches the 63. Now, William, I want you to listen to what Funk's saying about order blocks and what he's seeing, because, you know, his strategy is probably spot on.
Bounce off of 69.90 and then run it all the way to 7,005 where those other orders are.
540. Come on, give it to me. One more big fat candle. Should go ahead and sell here, then I can say I was right.
There's taking orders underneath it. Pull it down. Just like that. You might get five, shit. You might get 3 black crows on the 5.
Oh, yeah.
If it'll 3 black crow down to 69.90 or 69.89, I'll go long and look for a 7,005.
Oh, yeah. There they are. There are two. Perfect. $560. What the fuck did I just write there?
Go ahead and load up a 69.85 and just wait for this 5-minute candle to close.
That was off 3 white soldiers too on the 5-minute. So yeah, this is a reversal spot here off the 9 on the 5-minute. Yeah, I was in puts. It was risky, but I was successful. $100. I need to remember to flip back and forth in them time frames. I think if I'd flipped to that 5-minute, I'd had a little bit more confidence in the trade. Because I was just taking it off of, kind of off of a triple top on the 1 minute. And now I don't think anybody else would have called that. Probably not. You know, I couldn't load that thing up. I tried this morning, so I got to try to do that. I got to try to do that again, or send me a, yeah. think I need to go clean my glasses.
Main screen it says set up. Like hide your account info.
My main screen? Hold on, sir. You got the new script in there?
We're gonna go to that link up in Discord, but sometimes you gotta do like a control V, control C to get it to get in.
Set up.
Alright. There you go. Open share now. And then go to that link that I sent you, and then copy the link up.
Did you personal send it to me, or do I got to look it up?
It's in Discord, so hang on, let me grab it.
Yeah. Tesla trying. So I'm going to put it in the link. Hit preview. It's not completely in there yet. See how that looks? You know what? Your script Jim SEP already exists. Are you sure you want to rewrite it? Yes. Okay.
So now, go to your studies tab, your little freaking beaker, and hit edit studies.
Oh, edit studies.
So you're going to take out all your moving averages. So leave the shared orb and leave the RSI, but take out everything else.
Oh, that's what I did wrong then, huh? Got it.
There's all your moving averages and your load and your VIGs and your volume stats.
So that, oh, okay.
It's a 921 cloud, put a 1415 cloud in the middle of it, because a lot of times it'll bounce off that middle.
Okay. Pivot point.
Plus, there's a lot of traders that use the 5813, so that 14 comes in handy anyway.
Thank you. Press release Sahara Bancorp reports record 9. What? Thought about going back in the inputs right up there after that high, and it'd be up $50 right now. Contract at 350 to 430. Silver hit my now, do I have that on here? I think I had that on here at 64.75. I don't know why I got that 15 on here. That ain't crazy. IWM's have been bouncing off the 21. That's 10:44 Eastern time, so something's going to have to give. We got a yin yang on the SPY. Yin yang support. Previous high, support, 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 and if that stays a higher low, we could come up and break the triple top. Depends what kind of mood the market's in. Right now, it's low volume. And that's the SPY. And the SPX, same thing. And we're getting close to that support too right here, right now. Come on, get on there. There is. Pretty much right now. Tesla 305. Okay. See if we get a reversal here. It's either now for the put. Oh, straddle. Straddle, 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 straddle. Do 1550. No. I don't want that. $69.85s. In the 60s. Let's see what a strangle does. Wow, $20. No. Well, we pulled back to the 21 as I proposed here on the IWM. We're at support on the SPY, and same as the SPX here. We got a double bottom yin yang on the SPX. So this is solid support right here. It has to hold or it's going to be a better drop. I don't even think 63 might hold, but $69.80s. See that yin yang on there, livid goose?
Yeah, I see it. I'm just waiting to see what the reaction is here with this fair value gap that I have.
Okay.
If it blows through, roll it up. Right here, so I'll just watch.
Yep. Well, the SPX says we're off the 50 and at support, so we get the yin yang here on the /ES.
I missed that trade that I charted out last week on Friday.
Mm-hmm.
This work, and I was beating myself up all weekend. And now this is very similar to that trade from Friday, except the opposite direction. So just waiting to see what happens with this fair value.
Yep.
I said, man, it was like a 3-1 fastball with a runner on second base tipping me the pitch, and I freaking missed it because I was at work.
Even if you got out, you still made a run.
Yeah, no, I hear you, but I sat there and watched the next pitch go right down the plate, though.
Yep.
So I won't do that again. So I'm just sitting here waiting for this to give me the confirmation.
Okay, here it comes, true or die. We're at the 63. This is the final I think this is the final holding spot at 6966.50. If it doesn't hold that, then we're going to drop another 100 point, another 10, 16, but 18 bucks. Maybe. Put it right above the 63. Tesla broke the 200 on the 1 minute, broke out of this ascending triangle that I called out off the 100. Not ascending, well, symmetrical. It'll eventually pop again. Silver got a new day low. God darn it. That goes again. I had the calls. 450, now they're at 610. Off the yin yang. Almost right off the 63. It did trigger, I think. My alert did. I didn't see it, but was that on the SPY? No, it was on the SPY. I put that. Tesla getting to resistance. That trade I should have took this morning. Perfect resistance right there for an exit idea. Could have took that one too. Okay.
Yourself duration. This isn't a pure earnings play on this example trade. I went out to the March monthly option. So about 46 days to expiration on this one. I got a month and a half in this position where I'm going to buy the at the money 150 strike.
PLTR, out of the money 150 strike, a month and a half out. I might give that a shot. February 20th, March 20th. Ooh, that's too much. March 13. It's too much. February the 27th. Not too many on there. Nope. I wait. I don't see it. Nvidia has cleavage. Oh, there's the drop. Okay, get ready. This is a triple bottom on a SPX. The 6980s. $4.10. SPX Lotto calls scalping. This is risky too because we're off to 63. With a tight stop. You want to put a tight stop on it if it gets back down to your support level, your entry. Because this could drop. Like I said, this is a major support right here. It could drop big time back down to the orb. Might get one more, but I think that'd be a risk. Right now it's bearish. 3 black crows with a tweezer bottom. There we go. $4.90. Anybody take this with me? I want you, if you're new, profit. We did break above a resistance. See, I didn't take profit. I should have. Now we're broke support. Hey, little sister, what is going on? Still holding support. Said body of that candle staying above that channel. So I didn't sell it because we don't have a whole body down here below it. So we're bearish because we're under the 63, but we're still holding that tweezer, and for 4 minutes now. What's that?
69.93.50 is a key level on ES.
Okay. 69. Yeah, that's right. That's right at the 9. On the 1 minute. It's squeezing too. That /ES. Yep. Yep. Oh yeah. Yeah, fuck. Now I'm getting my body under here, and I'm not liking that. IWM's at the 63. Yep, there it goes. 1 minute?
You have the 2 minute?
Yeah.
Shorts?
Yep.
You do?
Yep.
So go to your cloud I just gave you, swap it to the 2 minute, put it on yes. I'm gonna show you something.
No. What'd I do with it? Fuck. I'm gonna put it on my other window here.
When you're back to even if you got in at 410.
Yep.
Put the 2 minute EMA cloud split. And under the cloud on the 2 minute, we're about ready to break out of the cloud. We're at resistance on that 2 minute at 69.85. I'm going to add the 100. Can I add the 100 to this? Yeah, EMA. Can I just add that on there? Oh, yeah.
Without screwing this up? Went back up again. I should have bought the dip. I wanted to buy one, but oh, that's silver. Fuck. Dick. Now what happened to my cloud? Oh, it doesn't show up on the SPX. That's probably why.
No, it should.
Put it on there and see if it does.
I mean, I know mine does.
You sure? It doesn't. Huh.
I'll even show you mine now.
That's strange. It shows up on SPY, but not the SPX on mine. We're at 460 now on them. Oh, I gotta put that chart somewhere so I know where it is. Again, duplicate. I'm gonna save it. How does he do it? That bounced off the 50. 50 SMA on the 2 minute. Then on the 3 minute, the tweezer bottom on the 3 minute.
Put your cloud on the ES 5 minute and look what happened.
ES 5 minute. What am I doing here? I'm 490 now. $5. I got my $100. Give me 510. Did you say 5 or 2 minute?
5 is where I use the EMA cloud the most.
Yeah, right off my support level.
That's the 1 minute.
Right off that. Right. Remember when I set previous high?
Yeah, but you're looking at the 1 minute, look at the 5 minute, and look at the 5 minute.
Oh, I thought I had the 5 minute. Oh yeah. Right off that pivot point.
That is why I used the 5 minute with the cloud. Like I knew we were going up this morning just because we were full stacked on all the EMAs and that 5 minute EMA cloud was widening. We launched dead off of it.
I used to use the.
As long as you're holding it down, it should be at those.
It's 540. Ha ha!
The 5 minute EMA cloud is a dangerous strategy.
Very dangerous.
Well, I mean, it's the best strategy I've ever.
Sheba, where's my A plus? 540, baby. $530. Gold Star A plus. And look at you. You're level 22 now. Well, it might not be a big money day for me today, but I've got $230. $6.10. You gotta be fuck. Golly. Randy. Randy. They hit 610, Rondi. That'd have been $200 a contract. I wasn't scared. Right to my trend line on my yin yang. Well, my balls itch. I need to go into the bathroom and scratch them. Oh, sorry, Angel. That slipped. Please forgive me. How dare you? On what? Oh yeah. Do you remember what I said it was? We're now 93.65. Very good call. Tweezer bottom on the 5-minute. Actually, it was the 1 minute. I think that was, I called that out on 90. Right now it's 92.87. Nvidia resistance. Same here.
I'm not gonna buy up here. We keep getting rejected at 7,005, so the risk reward ain't there for me.
You're at the shoulder line of the head and shoulders on the SPX too. And this is the first touch.
We're way overextended on the deviation channels, all of it. Like, I don't like it up here.
It's got a megaphone too. You also have a megaphone. So it could go.
Deviation channels are telling me we should be closer to 69.60.
I'm gonna clear up my chart and draw this megaphone in. I think when I retire this summer, I'm just going to sit in a lawn chair for about a week. A little pullback and then a breakout maybe. Let's liven this room up a little bit. Break it.
Brother, what's that? What's that, brother?
$7.20. That'd been $300 a contract. Dumb. So we got a megaphone here. That means a triple top resistance. As long as we stay above the pivot point, you got your support, resistance, support. And you could have put one across right here, straight across. So that kind of meets up right in there as a pivot point for, you know, I never say chase. See, it comes back and retests that previous high right there. So somewhere in this here, if it doesn't hold the 9, there's a 1 minute.
I'll make your butt bounce. I'll make your butt bounce. Let's go.
Can I replay the Chipmunk song? I don't remember which one that was. I don't remember which one that was. Still working. Yeah, that wick bounces right off that other lower moving average. On that cloud. Yeah, it works better on the 5 minute. And the 2 minute. So when it gets red, it kind of dips. Mr. Hood pulled back a little bit here. Now, Mr. had a little bounce today. Yeah, sometimes when I see these like after hour pullbacks like this, it's almost too much. especially after the day it had that day before. There are going to be people stuck in that trade. Let's see what the ladies have to say.
These things particularly well.
All right, so you call it an all-in-one innovation ETF.
Marley's hot today.
Mean in
A lot of
terms
cleavage.
how the portfolio is built and managed on a day-to-day basis?
Sure. So I think there's a few different features to that. I think one is thinking about, again, innovation more broadly in a very sort of specific theme. So rather than the end investor needing to target identified themes or tactically manage the portfolio, we're doing that. So our team is thinking about this portfolio. from
Marley, you're taking a risk.
Thinking about some of the sectors where innovation is fairly persistent and sort of broad-based, right? So we think technology, biotech, exposure like that. So we want to assess those markets, work with our bottom-up team, make sure we're getting
Niles back to 437 this
we also
morning.
want to complement that with other adjacent type ideas, and then we want to oversee that, structure that, incorporate
Market's
risk
up pretty
management
nice.
where we're not sort of overly indexed to a single idea. We can use, different ways to look through our portfolio, identify different themes in it. We can look through our portfolio, think about the breadth of the exposure we have in there, again, to ensure that we have high conviction ideas.
/ES
that we have the NVIDIA exposure, that we have the next
7005
NVIDIA exposure in there, and that we kind of have our hand on the wheel and are sort of managing that across time for folks.
And innovation is a term that we're hearing pretty widely used right now in terms of investing and portfolio construction, and particularly tied to AI and some of the mega cap names. But it's not one that's easily defined in conversation. It can almost be a little bit fuzzy. When you are looking at saying you're thinking of innovation, you did mention long lasting being important, but how would you define it in a way that you are then able to make it investable and repeatable?
That's right. Yeah, I mean, there are cruder metrics, right? You can look at something like R&D to market cap as a fairly simple metric. You can look at them, as we did, look at a lot of fundamental information. We can use large language models, right, to parse that data, to organize it, to identify companies or areas of the market, first and foremost, that are durably reinvesting in themselves, diversifying their product line, their business segment. And then we can overlay that. And I think what our real advantage here is working with our equity platform. So yes, it can be technology, but it can also be companies.
Be right back. I'm gonna go get my lunch going.
Looking at electronification of trucking, think about autonomous driving. There's interesting.
We're still bullish.
Processor and future finance type companies, right?
This is how I look at this.
So innovation can exist in a lot of different ways. And to your point.
So if we go below this trend line, these two trend lines, in that area right there, you got an inverse head and shoulders also. So you might just hold that support level. If it does pull back and jump out of these moving averages, it might just stay up above, because you got a head and shoulders right here too. I just now noticed there. So yeah, we could end up with the end of the day run if it stays above 697331. If it gets down to that number, I'd be concerned and have my finger on the triggers to sell my calls, or maybe even buy my puts. I mean my calls or puts. As long as we stay above the line, we're bullish. If we go below it, that's where we got to worry, I think. Hey, nobody's trading today. I missed out on a few opportunities. But better to be a winner than a loser. Marley, out there you come on the show showing so much cleavage.
Advantage of many of these trends that are forefront to our mind. So you'll find securities in the AI ecosystem here, healthcare, think intuitive technologies, and intuitive surgical and other firms like that. We're searching using our entire global research platform to identify those companies for you. We're bringing together for you from a top-down perspective, and we're offering you something that really should offer a durable allocation in your portfolio that we believe will lead to better returns over the long run.
Well, Sam, it's been great speaking with you. Thank you for taking the time to be with us on this Monday morning. Sam Priestley, Portfolio Manager at T. Rowe Price for their Innovation Leaders ETF, TNXT. Coming up next, we've got the Disruptors. We'll be previewing Palantir ahead of earnings after the close today. Stay with us.
The Dow is at 404 points, and the Nasdaq at 223. Bitcoin down, going up a grand.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced trader or just getting started, Charles Schwab offers a webcast right for you. Do you like using charts when
I have to raise that chair up just a little
Our
bit.
technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coach and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets. Welcome in Nicole Petalides, host of Opening Bell and the Watch List. Good morning to you, Nicole. We're into the trading day today. We're holding on to this green across the board to kick off February. What's catching your eye so far this morning?
I would say that the word that Peter Tuchman used at the end of last year that would describe 2025, and it was the resilience of the market. And then my guest came on today, Tally Leger, and said the same thing about the resilience of the market, because sometimes a lot gets thrown our way, volatility, geopolitical headlines. And so we have so much this Monday morning, and I don't always say that. It always is a lot, but this is really a lot. I think the Kevin Warsh pick coming in really sort of jostled markets, and the question was whether or not it spooked markets or did it stabilize markets, because he's really viewed as somebody who is going to keep the independence of the Fed. But in the meantime, we saw silver and gold sell off in the largest sell-off we've seen since 1980. I mean, silver was down about 30% on Friday last week, so it really has seen some volatility in the metals. And so people are mixed whether or not they're getting back into the metal trade. The other thing is the AI story and believing in CapEx, and Jensen Huang basically saying, well, we didn't necessarily commit $100 billion to OpenAI. I mean, sort of like they're still our partners, but we're looking more closely at it. It brought some speculation, and then you saw big time selling in Asia. 3%, 5% of some of the major averages. So that was something. The Oracle story still seems to be up in the air as they continue to raise money. Disney maybe having a C-suite change. Rare earth stocks are taking off. Casino stocks are doing well because more people are spending in Macau. So there is so much, and we have a lot of earnings like Amazon and Google this week, as well as job news.
Yes, certainly a lot to have on our plates this week between earnings and the data we'll be getting. But let's talk about McDonald's. A nice small move to the upside today. BTIG saying that they're more bullish on McDonald's and the maker of my favorite French fries. Walk us through the note.
Well, I mean, the idea
Your French fries.
is that the people are back. and they are consistently.
I doubt if you go to McDonald's.
That is due to the bringing back of the value meals and the
Man,
promotions,
Nicole.
because things had gotten a little too pricey. Back in 2019, they took some of those away.
Damn.
And BTIG
Look at
is
that.
saying this could be the most meaningful earnings growth period. that
What
we've
kind
seen
of girl wears a
since
necklace with
2023.
Nicole on it?
And that is because the company has
Woo!
brought back value meals, and they're working on snack wraps and things like that, and sort of making it more affordable for the consumer. And
Okay, we're back at the yin yang.
that they have seen a consistent growth in traffic, and they're doing the franchise check.
Trump going to say something to make the market pull back to the bottom of the megaphone, right here to the 200. We got a head and shoulders, and we got a inverse head and shoulders. We're at the inverse head and shoulders inside of a megaphone off the pivot point. Damn. Damn. Go straight across. Right there. Okay. There's the drop. There's the drop. So now we're bearish. We can come down to the 200 and bounce this thing back up. And we got a 1, 2, 3 off the 200. So somewhere in here. And we still got a head and shoulders right here. You got your left shoulder and your right shoulder. So that could bounce right there too. But I'm going to wait. I'm going to see if we can catch it off this 200 down here. Create an alert. Just close to it, a little bit above it. To the pivot point, back up to the pivot point. Oh. Oh. February the 2nd. Oh, I gotta check something out. Shit. I gotta do some business here. I'll be right back. Almost forgot.
Continuing to trend along. The one other thing is that the company did mention how it's maybe seeing some softness from less international tourism to some of its parks in the U.S. And this is something that actually we've been concerned about for quite a bit. It's a reason why our numbers are below the street for this year. And so again, it's not something that concerns us longer term, but for short term and for the news, it could make the outlook a little bit less rosy in the next quarter or two.
All right, Matt, I'm going to come back to you about experiences here, but I want to talk to Stephen about streaming here. You know, we've stopped getting these subscriber numbers here. So I guess my question is twofold here. Does this indicate to us that the streaming wars have entered a more mature phase for Disney? And also, with less disclosure, how should investors judge streaming performance now? What metrics matter the most?
You know, that's going to be an interesting battle to see play out. I do think that Disney has entered a more mature phase of their business. You know, a lot of the consolidation that is happening throughout the market is something that they are going to stay out of. And again, Disney playing a very long game as a company. I again want to kind of turn attention back to Disney's arc since at least 2020, just kind of massive hemorrhaging when Bob Chapek was CEO. And then that stops bleeding around 2022 at the end of the year when Bob Iger returns, and we've just sort of seen the company coast. Now, the cash flow that they have been able to free up, again, it's underwhelming like your other panelists mentioned, but we're still up about 18%. I do think that the metrics that we're going to have to watch for in the year ahead are going to actually be retention of subscribers over time, but I don't know how this is going to play out with them not actually reporting what their subscriber metrics are. They have these two big anchors around their neck right now, which is the YouTube question, the YouTube TV question over their sports distributions, and like you mentioned, the tourism issue with people not coming to the U.S.
All right, so I want to talk about that tourism issue here. Matt, you mentioned experiences. We saw them top $10 billion in revenue for the first time ever. You know, so some momentum there, but then they're citing this softer international visitation. Do you view that as a short-term macro issue, or is this a potential longer-lasting drag? And if so, then how much of a negative could this be, combined with the fact that they're also warning of a continued trend in higher costs in sports rights?
Yeah, well, as far as how long this could last, it could be more than just the very short term, but it isn't something that we think is structural, going to impede the business on a longer term basis. So whether that lasts a few quarters or a couple of years, it's possible. However, it's not critical as far as making things bring revenue down or seriously impeding growth. There are very many other areas where the company does have other tailwinds to drive growth. And so although it's a mitigator, it's probably not something that's going to cause drastically worse results. And from the optimistic point of view, in the future, it will be a tailwind. Again, we can't say maybe exactly when that is. And then on the margin side, also, if you start bringing in more of this revenue, it should allow profit in experiences to grow even a little bit faster than revenue. So although we do think things could be a little bit muted for a couple quarters, a couple years, even on the experiences side, we think the future is bright, which is what's most important. As far as the cost inflation, that is built in to many parts of the company, including sports.
Checking account.
It's one of the reasons why
business checking account.
We're really just looking for stability. And so sports rights are getting higher. You have the negatives of ongoing linear subscriber losses, which are part of that sports segment. We do think that the streaming app for ESPN helps offset that some. And again, they're just all things that play into why we're just hoping for stability there, not really growth in sports.
All right, well, stability is the key here. Thank you both for being with us, for breaking down Disney, taking a closer look at those numbers, Stephen and Matt. And I want to thank all of you for joining us on Trading 360 today. That's going to do it for us. I'm Marley Caden. You can download the free Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Oh, my chair was cracked. I got the wrong one. Well, it's free.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. We've hit the lunch hour here at the New York Stock Exchange. Investors shaking off any malaise that's hitting cryptos and metals. Let's get right into it with a check of your scorecard for the major indices. The S&P 500 has a gain right now of more than 0.5%. Most of the sectors in the green. You only have a few in the red right now. The gains being led by consumer staples, consumer discretionary, followed by financials and information technology, all at the top of the list. And Dow right now rallying just about 1% here. Similar price action in the NASDAQ 100. It's a very different picture from what we saw.
Breakout
futures and
to the megatone.
2000 now.
Yeah, let's go.
By almost 1.25%. Here's the roadmap for today's show. We'll look at example option strategies for Palantir. That one's got earnings due after the bell today. Plus,
The team from Lightfolio will be along with new data on PayPal, and PepsiCo is also on our radar today. Can you sense a theme? Now that we've got the roadmap for today's trading action, it's time to bring in my co-hosts. You've got Tom White in our Chicago studio and Kevin Higgs joining us live from the CBOE. As you know, we've got you covered from exchange to exchange and beyond. All right, guys, so volatility has been hitting crypto, the metals, but equities coming off unscathed now. Tom, I'm curious to know your take, especially when you think about you always watch the price action overnight, futures in the morning. Both of you guys do. But Tom, your take first.
Yeah, I was getting ready for some volatility here today when futures opened up last night. I mean, we were down over 1.25%, I think, at the lows overnight before gaining some steam today. We saw some reversals in some of the overseas markets also. That probably helped lift us. But I think what you're seeing here is some stabilization in some asset classes that were pretty volatile on Friday, whether it was gold down 9%, silver down over 25% on Friday. After those parabolic moves to the upside for some of those asset classes. Now, Bitcoin's still under pressure at this point, down 6% in today's session, basically hitting 10-month lows that we haven't seen since last April. So that's causing some consternation. But this is a really good sign, I think, if you take a look at the price action where, hey, maybe some of that volatility from Kevin Warsh getting appointed or nominated as a Fed chair has kind of passed through markets at this point, and you're really starting to focus on earnings, because earnings, this is the best growth rate we've had for earnings over the last 4 years, and that's going to mean something for equity markets and risk on assets like stocks, right, at this point. So I think that's what maybe investors are kind of pushing aside, maybe some of the geopolitical risks, which eased with Iran. That's why you've got crude oil down over 5% at this point. So you're starting to see some minutia in headlines in the markets getting pushed aside, and investors starting to focus on earnings, because that's going to be the big catalyst for this week. We've got some more big names, AMD, Amazon, Google Alphabet reporting this week, and some others in that tech space, and industrials. We've got some staples that report. So wide array of S&P 500 names that report this week, and I think investors are kind of looking at this like, hey, earnings are good.
Earnings are good.
See the manufacturing data better than expected on that side of it. So we're starting to see some green shoots that are maybe taking over maybe some of the headwinds that had been created last week for equity markets.
Yeah, I saw that manufacturing data across the tape here at the big board. It's feeling like new month, new money on Wall Street. I should have worn green today. Kevin, what's your thought?
You know, we all braced, if you were watching the markets overnight and early this morning, we were bracing for more volatility entering this market. And gold and Bitcoin and silver, they didn't give us any reason really to shake it off. Gold is still down 1% today. So Friday, I think, shook a lot of people. So, but the fact that this market was able to shake that off, the down futures overnight, and actually rally up on the day, pretty solid day for stocks, a very resilient day for stocks. But we're looking forward this week. There's more earnings on large cap tech. Later, we'll get into a lot more data. Payrolls on Friday. I think gold and silver still look like they're under pressure. Bitcoin still looks like it's under pressure, but it doesn't seem to be shaking the rest of the market like it frankly did for a while on Friday. But those were big numbers, and I'm surprised, frankly, and impressed that the market didn't feel more volatility because of that. But we have a big week, plenty of ways to either get in trouble or energize this market higher. But right now, incredible resilient stock market, Diane.
Tom, I want to go back to that point you made about headlines getting pushed to the side. At least not yet for NVIDIA. You got Wall Street turning on it again. It's got to be frustrating to investors in NVIDIA, because now from this article in the Wall Street Journal, you've got questions increasing over the underpinning of the AI rally, its commitment to OpenAI. Seems like it's shaking things around NVIDIA again. Now, it's off now by just 0.8%, but still under some pressure. Tom, what's your take when you look across NVIDIA?
Yeah, more bumps in the road as far as this roundabout ways to invest in these companies. There was a commentary that in this next round for OpenAI as far as funding goes. Last week it was $30 billion. Now it's coming out that it could be as an investment up to $100 billion. This comes on the back of the agreement that they had with OpenAI in September to build at least 10 gigawatts of computing power for OpenAI. And then OpenAI is going to invest more into the purchases of the GPUs. Jensen Huang's supposed to give an interview tomorrow at late afternoon. Might get some clarity on that. There was that Wall Street Journal report that said, hey, the talks have stalled, and how much are they going to actually invest at this point? Because recently, Jensen Huang criticized OpenAI's business strategy. And you know what? I think if you look at some of the other names that have these partnerships with OpenAI and the build out of this infrastructure, they've been getting hit. Oracle being one of the names that kind of rings a bell, and some others, especially in the software as a service front at this point.
Let's go. Hit it.
People are losing
Make the man rich.
In OpenAI at this point. And who's to know if any of these deals come to full fruition? I'm sure a bunch of them will get done, but the amounts that they're investing between the companies in this roundabout way has been questioned a little bit. And now you've got when are they going to go public, if they go public this year? So there's a lot of questions to be answered. I think we need to hear.
Okay. Oh God, Brad.
We don't get earnings until later this month, in about 3 weeks. So maybe that'll continue this volatility that we've seen in the name, because every time the stock gets above 190, it seems like there's somebody out there selling it, and maybe somebody not believing it. And then you look at the other picks and shovels with within the AI industry, especially the memory chip names, and some of the semi-equipment makers, and they're just continuing to rock and roll to the upside. And NVIDIA just seems to be continuing to consolidate.
I noticed that too, that it just feels like it's hitting a ceiling every time, as you mentioned, it gets towards 190. Kevin, what's your take on NVIDIA?
NVIDIA.
I don't think anything has really changed in the whole landscape. I think there's ebbs and flows in this. NVIDIA mentioned $100 billion, I believe it was last September, and now it's going to be huge, but it may not reach $100 billion. And so, listen, I think what has changed in AI, what landscape has changed, and I think personally, what's changed in AI is Gemini catapulting up to the front of being the most effective, and with search just being a clear now leader. It seems like Google Alphabet starts slow and then they gain ground very fast. Microsoft starts fast and then has lost a little ground, but it looks like the biggest problem with some of these is that Gemini is the clear leader, and OpenAI just hasn't delivered yet on everything they're talking about, and I think there's a little hesitation here. Jensen Huang still said the investment's going to be huge. It just may not hit that $100 billion number. So, yeah, it's interesting to watch this play out. I think 2026 is going to be the year of winners and losers in AI.
Yep.
I think we're reaching that stage at some point, but I think this has a lot to do with how good and how effective Gemini is, and then making everyone else kind of an NVIDIA AMD story, right? Where there's the leader, and then there's a bunch of seconds and thirds. So that's what I think. I think NVIDIA's still in the game.
Where'd hams go?
Gemini has put some doubts in OpenAI's ability to compete, Diane.
What the hell?
That's a great point you also made about a year of winners and losers. So that takes me to Oracle right now. We've got that one back in focus today. The company said it plans to raise between $45 and $50 billion this year to fund its AI infrastructure build out. Shares are actually higher right now, but it's been a turbulent year for Oracle over the past year. And if you go back to January of last year, we're sitting now where we are around where it was in January of last year, and then we just hit February now. Tom, what's your thought on Oracle?
Yeah, initially the stock was down about 3% when they announced this, between $45 and $50 billion to help build out this additional capacity for customers, whether it's Meta Platforms, whether it's NVIDIA, OpenAI, the big deal that they have, reciprocal deal that they have with OpenAI, worth about $300 billion. Remember, they raised about $18 billion in the fall, and there's actually investor lawsuits because Oracle wasn't upfront, or these lawsuits claim that Oracle wasn't upfront with the amount of cash that they needed to build out this AI infrastructure.
Exactly.
And now they're looking at raising $45 to $50 billion more. This is a concern. I mean, that's why the stock's down 51% from those all-time highs. We're at 7-month lows as of Friday, getting a little bit of a bump here today. But maybe, our investors looking at this as, okay, maybe this is the bottom. They're going to get the funding. They've had some issues with their data center build out in Mexico. They've had some issues with the data center and funding for the data center in Michigan also. So this has been a concern for investors, but you have to sit there and wonder after this massive drawdown in the shares, are investors kind of thinking, okay, maybe this is already built into the stock because we did hit 7-month lows, that we hadn't seen since the beginning of June of last year. So, I think the concerns are probably going to continue to be there, raising capital for this demand that's out there. That's probably the positive at this point. But then it goes into that conversation I just had about, this deal with OpenAI, this remaining performance obligations and contracts that they have over the next several years with OpenAI. Do those come to fruition, or does AI start digging into some of these deals where they're not going to get the amount of capital that's been promised at this point? So there's definitely some concerns, I think, here for investors. But has the stock pulled back enough to kind of warrant that this can get overlooked?
That's a good question. And let's pivot from tech and talk one that's out with its earnings today. That's Disney. It did beat expectations in its most recent quarter on both the top and bottom line. There was strength in parks. An analyst I talked to today pointed out that streaming was strong as well, but it seems to be this cloud hanging over it. There's now also the conversation around the successor to Bob Iger that's back at the surface, which we have names circulating. One name seems to be at the top of the list. The stock is down more than 5% right now.
Hey,
Kevin,
Diane.
what's your thought when you look across Disney today?
Diane, if you're asking me what my thoughts are, I know you people love this Bob Iger dude. He ain't done shit for this company. And he hasn't tackled the main cause for this stock not to be a good stock. I know you Wall Street people just love this guy. The ships, the cruise ships are fine because you have adults. But your theme parks need another look at. You need to go back to Mickey Mouse days instead of transsexual whatever you have, wokeness. This is a kids park. You do that, the stock will be worth $200, I guarantee it. Guarantee it. So whoever the new CEO is, tackle that first. Get out of politics. I said it. They canned his ass last year. Yep, they canned his ass last year. But Bob Iger didn't. He kind of said something about it, but he didn't do enough. He needs to make a statement. with that house. They canned your ass because you weren't woke. If you would have sucked Bob Iger's dick, you probably would have kept the job. Randy's back. Oops. I like that commercial. Google. Friday's dips were a gift. Did I turn off my stove? No.
And there could be a big relief rally coming if they put up the right numbers and guide higher.
All right, Tom, what's your thought?
Well, I think maybe it was a little bit of the sector headwinds. Maybe we saw a pullback in some of the AI names recently. That's why the stock's in bear market territory, down, 27% from those all-time highs. But then you start looking at valuations. You have to look at valuations. Growth rate was good last quarter, 62% from year prior level. So that's good, right? But then you look at price to sales on this company, it's approaching 100. 35, 40 is expensive on a price to sales. And now you're sitting at about 100. You look at the trailing PE, over 340 at this point. So this is about valuation too. Growth numbers are great, but at some point you've got to start, kind of getting to this base where, hey, we've got elevated valuations on this company, but are those sustainable? Are these growth rates going to continue? They don't really have a real competitor in this space. That's a benefit. They've got the government contracts. What if government starts to pull back some spending? But then the commercial side of their business is starting to grow and maybe pick up some of the slack there. That's going to be a benefit for them also. But I think, the optimism here that this is going to be the next $1 trillion company or $2 trillion company is still out there and remains. I think one of the key things that you have to watch on this type of stock is it's volatile for a reason. It can move, and valuations really elevated on this name even after a 27% pullback from those highs.
That's a great point, and many analysts point to that. You have Dan Ives, who's on the bullish side, who calls this one off in the messy of AI. All right, let's get into the example trades. Kevin, let's start out with yours. What's your approach?
Yeah, I see the sell-off. Everyone sees the valuation, but with a company in growth like this, until the growth starts to decelerate, you've got to trust that this may jump higher. And like I said, it'll all be about the beat and raise. If they can do that until we see a deceleration, you know, I think there's still room here. So what I looked at is something in the bullish camp. I looked at a paper money trade where I'm just a 1 week, keeping it pretty tight, buying the Fed 13th $150 call, right? Pretty much right at the money, looking at the expected move of about $13.50. I'm looking for the move from the week for about $15.50. And so I bought the 150 and sold this week's February 6th 165, Tom. Paying about 640. It's about 6 1/4 right now, but I'm looking for, if they beat and raise and guide better, this one could be a big jumper, Tom.
Yep, this is a bullish example trade that Kevin's bringing us, taking advantage of the vol dispersion here to lower the entry point price. The option market is pricing in about a plus or minus 9% move in the shares, about $13.60 either way, and this kind of lines up. Kevin put a short strike about that one standard deviation above the current share price, which is $150 a share. But let's break it down. Going out to the February 13th options that expire in 11 days, buying the at the money 150 call, and then in the near term, February 6th weekly options that expire in 4 days, sell the 165 call. So a bullish $15 wide call diagonal, paying roughly about a 640 debit. The debit you pay is going to be your risk. Might be a little bit cheaper than that right now, but $640 in risk on this one. Anything above about 153, 154 is going to be potential profitability on this trade. You can see here from the risk profile, you want it to go about that one standard deviation, but because you're paying less than half of the width of this call diagonal, anything above about 153, 154 is going to be profitability on this one. So you know you're still risk defined on this one. You will have that potential to maybe roll that short option into expiration over the next 4 days. You've got some assignment risk on that also. That might create credits, might increase potential profitability and lower risk on this trade. But this is definitely a trade where you need a little bit of movement to the upside. But on a percentage basis, compared to that one standard deviation move, you don't need that big of a move to the upside, but is directionally bullish on this example trade that Kevin brought us. Now, Kev, I looked at it basically the same way, where I'm taking advantage of the vol dispersion. I'm buying a cheaper implied volatility than what I'm selling. But I looked at a put calendar here, and I went out a couple weeks. I went out to the February 20th monthly options that expire in 18 days, buying the 145 strike put, so not extremely bearish. And then selling that same 145 put in the February 6th weekly options that expire in 4 days. So a 2 week wide, slightly bearish, maybe neutral put calendar to the downside, paying roughly about $1.65 debit on that one. That's going to be your risk, $165 per spread. So it's giving you some exposure to the downside, maybe even a neutral type of stance here, Kevin, for relatively an inexpensive price, $165, with the opportunity to roll that short option or extend duration at least one time over the next 4 days. Kevin, I was kind of surprised that this put calendar that's just about $5 below the current share price is so inexpensive compared to what we typically see in Palantir with pretty hefty option premiums.
Yeah, well, the 145 put in that February 6th is trading over $5. So that's really cutting into the premium that you're paying for that put. And remember, it's got a $14.50 or $13.50 move, and yours is only a $5 move. So yes, the problem if this stays range bound, it's only slightly bearish, Tom. You're exactly right. You're bearish and range bound at the same time on this spread. So yes, I think if it works around and stays in this area, this spread should do extremely well. But like I said, if there's a big move, remember when you had that calendar spread on, it's forgiving, but it's forgiving within a certain range. So if it moves big, if it moves $15 in either direction, that's when this spread will underperform. But if it stays here or moves slightly, yeah, this one will do great.
Yeah, I looked at this, and you can look here, and it might show that the risk, that you can make down at 130 or maybe up at 165, you can still be profitable. I would probably tighten that up. Most likely, it'll be profitable, maybe between about 135 on the downside, maybe 155 on the upside, if you want to tighten it up on here. But you don't need that big of a move to the downside to get towards that 145 strike. That's where you're most profitable on this type of strategy. And as we mentioned, Kevin, your call diagonal that's bullish takes advantage of that vol dispersion. This one does too. Buying about a 70%, 75% implied volatility in the February 20th monthly options and selling about 120% in the February 6th weekly.
Hood pulled back beautifully to the orb and bounced back up to a new high. Trump announces a deal with India, lowers the tariffs from 25 to 18%. Okie dokie. Yeah. Yeah, 2 minute. I used to use that time frame a lot. Starting to curl back up. $69.80s were at $10.80 just now. This ain't doing nothing. The SPX did pull out of that bull flag, a little fallen wedge to a double top with a new high. I feel better now. Code $20.20, 29 cents. Hood's pulled back again to solid support. Well, it could go a little bit lower. 90.62 to hold. SPX new high. I'm just kind of quiet. The prison guy's on.
Is there something, is it about leaning into Venmo to reclaim some of its glory days? Is there some recipe that you see landed?
Venmo's the more likely avenue to become relevant again.
Venmo.
If you have PayPal, you have to try the things that they're doing with, like, again, that's Symbio acquisition, helping merchants manage their products better, leaning into AI, buy now, pay later, all those things. They have to do those things to try to compete with Shopify. But the difference is that I think, largely speaking, merchants see PayPal as a way to get paid, and that's it. And merchants see Shopify as a way to run their business and how to grow their business and to make payments easier, to make acquisition easier, to make retention easier, and it just does so much more. And so it's, they're basically a merchant account, PayPal, whereas Shopify is like a business partner. And they cost basically the same, and so it's very difficult competition for them. But yeah, I think for relevancy's sake, because so many people use Venmo, and it's sort of this peer-to-peer system, you can get into the checkout side of things and offer that ability to pay with something that no one else has. Like PayPal, there's not a lot of people that just carry PayPal balances. It's more of a way to get your credit card to go through. But with Venmo, people carry those balances a little bit more. And so it's a way to tap into a new segment of customers and allow people to pay in a different way that maybe Shopify couldn't offer.
All right, Landon, we'll leave it there to Jay. That's Landon Swan, co-founder of Likefolio, with a look across PayPal, especially as it compares to peers. So for the trading perspective on all things PayPal, let's bring Kevin back into the fold. We got a lot of insights from the Likefolio team. Tom, you want to put a pin in it before you guys get to the example trade?
Yeah, I mean, this has been a falling knife. Even after that earnings event last year, where they were pretty positive on the conference call, the new CEO, as I mentioned, and the stocks.
We're back at the 63.
It hit nearly 79, 80 bucks a share before reversing mid-session, and then it's a continued.
Ladies and gentlemen,
the data, besides maybe the.
We're back at the 63. We're at the 63 on the /ES. SPX is at the 50. So if it touches the 63, I'm going to be looking at the 69.90s. What time is it? It's 11:43. Yeah, right to the 63. And that's got to hold. That's another megaphone. And a double top with a higher high. Let's do it like this. We got a head and shoulders right there. So definitely right there. Two-headed snake. And they're at 370, now they're at 4. 410, 420.
that one standard deviation that the option market's pricing in at this point. If you think this thing is going to pop and the bar is extremely low, as Kevin mentioned on this type of trade, but this is definitely a bullish call diagonal, taking advantage of that volatile dispersion where you're buying about 70% implied volatility on aggregate on that 53 strike call that you're buying, and then in the near term options that you're selling about 105% implied volatility on aggregate in that 58 strike call that you're selling in that option series. So another bullish call diagonal here. Diane looking for a low bar and maybe a surprise to the upside.
Yeah, I think about like one of those limbo bars where you don't have to go under. This one you just have to jump over. All right, guys, good stuff. We've got the breakdown coming up. Shifting gears to PepsiCo. That's got earnings due tomorrow. The question is, will investors drink up? We'll have more Fast Market after this break.
Nope, not me. I don't drink soda. I had someone ask me today. I was telling her I was getting ready to turn 25 and 65. And she said, God, you look so young. And I said, you want to know my secret? Yeah. So I don't drink soda pop. And I don't eat a couple, 2 to 3 hours before I go to bed. That's my secret. I have a nephew that drinks big gulps and now he's got diabetes. He's only like 32.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Schwab offers a webcast.
Technical analysis.
The platforms and tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Technical analysis.
Welcome back to Fast Market. It's not just about results in the tech sector this week. PepsiCo is also set to release its quarterly report card tomorrow. The snacks and beverage giant is expected to report earnings of $2.20.
Yeah, JP Morgan made it back.
On the outlook for 2026 as PepsiCo works on its turnaround driven by pressure from activist investor Elliott Management, which you may recall disclosed a $4 billion stake in Pepsi in time now for the breakdown. And for that, let's welcome
Big mistake.
Senior markets correspondent for the fundamental look at PepsiCo. All right, George. So when you look at this one, what are we watching out for with its earnings?
Well, I guess there's quite a few things to consider with PepsiCo. I think if you consider the dollar, I think that's a catalyst for Pepsi, speaking to the dollar being the downside. The other thing is, earnings multiples seem to be more in line to historical averages. If you look at the price action of last year, it's fairly positive in the last year. In fact, in the last 30 days, or at least year to date, it's up about 10%. So I think that speaks to potential, like I said just a moment ago, the dollar weakness is helping this company as a large multinational firm, but also the defensive nature of the business, because I did notice too that a lot of the other food stocks like Conagra, Tyson Foods, for instance, they've been quietly moving higher. So for what it's worth, the sector itself, at least the staples or even the industry group in the food services and food staple space seems to be performing quite well. If you look at the EPS numbers for Pepsi, they're estimated to actually have a really good quarter, $2.24, up 14% compared to last year, $1.96. Sales are expected to be quite robust for the quarter, more in line with 5-year averages, around 4.3%, higher at $29 billion versus last year's $27.8 billion. And I think, speaking of some of these activist investors like Elliott Management, who did take a big stake also, not only in PepsiCo, but Southwest, and that seems to be working out because that stock is up nicely over the last 6 months or so. I think it comes down to, what's going on with organic growth with PepsiCo. If you look at volume versus price, I think analysts will look at the volume levels because we know prices are one way for the company to generate revenues, which may not necessarily be more sustainable. And then, of course, productivity architecture. What are they doing in terms of operational management, efficiencies? And lastly, I think the capital structure of the business, the capital return, if you will. One thing you'll notice is $8.11 in dividends. It's quite high considering that this fiscal year, ironically, they're expected to earn about $8.11. So right now, based on a trailing basis, they are essentially paying out about 100% of their dividend. In fact, the dividend payout had exceeded the earnings in the last couple of years why that may explain why the stock is down since 2013. But nonetheless, it seems to be recovering here quite nicely. The last I'll say this, if you look at the earnings multiple for Pepsi, right now, next year's earnings at around $8.56. That is about 18 times next year's earnings, which we're in right now, 2026. It's historically around 23 times. And if they do guide between 2 and 4% organic growth in sales, the stock could, I'm saying it won't, I'm not saying it will, but it could trade up to about 23 times earnings, which places the stock close to $180.
All right, George, that is the setup for tomorrow. That's George Silla, Senior Markets Correspondent, with the breakdown on PepsiCo. All right, let's get Tom and Kevin back in here for example trade purposes. So, Tom, this time you've got the example trade in PepsiCo. George obviously talked to the setup going into its results, but also how the stock's performed so far this year. So what's the approach you're taking today?
Yeah, it seems like, the stock kind of resurged a little bit. Some of the staples names may be protective with those potential dividends if those continue to pay out. Remember, this is a dividend king, 50 or more years of dividend increases. That doesn't mean they're going to continue to do that, but it's been pretty consistent from this company. The stock has moved up about 1.3% so far this year, or 8% so far this year. So it's had a nice little run. Maybe some resistance right here around the 156 level. It's had that resistance a couple times over the last couple of quarters here. But I looked at a strategy that takes advantage of the...
Yeah, it's off the 100 EMA.
If you want to own
on the weekly,
you can create some potential yield on...
So this thing could pull back and find a pivot point off earning. Oh, it already... Yeah, I read about it in here, 150. Sitting alert, 150.36. It's at the 200 EMA right now. So if it does break the 200 EMA, triggered it. $156.12. He's right on. $156.
You can sell a call religiously against this, and And each time you do, you chip away at the net debit, you chip away at the break even on that trade. And so this is what might be someone's first options trade. When you buy the stock like you normally would anyway and sell a call against it, Tom.
That break even is the debit paid. So if you pay $152.20 as your break even, so you're buying the shares at a discount here with the expectations that you create yield on selling the upside call against it, and also the dividend, potential dividend that you have. And remember, it's capital intensive, about $15,200 in risk if the stock were to go to zero somehow, Diane.
I did notice that it's capital intensive. All right, that's going to do it for us today on Fast Market. We still got green on the board. I'm Diane King Hall alongside Kevin Hincks and Tom White. Download the Schwab app. It's available in the App Store. Stick around. We've got Next Gen Investing coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. It makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at SchwabNetwork.com.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, as we check in on markets here, we're actually seeing a pretty nice green session. It was not panning out to be this strong of a session, at least this morning, but we've seen Some enthusiasm trickled back into this market. We are higher now in all 4 of our major averages, with strength being led by the Russell, which is up 1.5% now. Dow also up 1%, as well as the Nasdaq and the S&Ps up about 0.7%, with no participation from Meta, Microsoft, Netflix, Tesla, or Nvidia. So amazingly so, we're actually seeing that, again, more rotation into some of these smaller cap names without really our behemoths from the tech really participating at all today, in today's upside at least.
Yeah, I think today, from a big mega cap standpoint, so I'm saying S&Ps and NASDAQ, today's really a story of Oracle and sort of the initial reaction to the story that came out, which we're not going to cover today. So the big story in Oracle is more money is getting borrowed, and the initial reaction was fear around that. Since you have seen the stock recover, so to me, this particular chart, this intraday look at Oracle, is really correlated to the performance intraday of the overall market. As the S&Ps, as the NASDAQ stabilized, it really was the market becoming more comfortable with this idea of more and more leverage in this AI trade. And that's essentially, to me, what this Oracle move symbolizes, which is, hey, there's a lot of contracted work that needs to be done in this AI move and big, build out. But there's not necessarily the money yet to actually.
It's kind of hard trade today.
They have a lot of cloud contracts. They got to build data centers and stuff, so they have the capacity and the infrastructure to fulfill those ultimate goals. And the fact that the market now sees a plan. The credit agencies gave them pretty much the same ratings that they've had, which is sort of this medium grade within in that world. All in all, I think it was a positive. Now, the breadth of the market is relatively, consistent throughout the day, 55-ish%, 57 in real time. IT out.
I wonder how they use that breadth as a day trader.
Nvidia, without Microsoft, without
as a day, as a daily lookout.
And it's interesting, and that's actually been a thing like where we started this week off, and then, well, of course, like last week, we were like, well, we have a lot of major catalysts to get through throughout the week, and I will say that our big laggard of the bunch was, of course, Microsoft following its earnings. Apple was a bit lackluster, but still had a record quarter as far as its iPhone and its overall revenue. And then we saw more of the smaller portion of the story, which was things like Tesla really continuing to foray its real push into autonomy and broader robotics. So there were still a lot of themes to like, I think, especially when you zone in on some of these memory chip components, like your Western Digitals, even on like SanDisk, obviously more in that storage space, as well as Seagate. But seeing a bit of a reversal on Friday, then today, or shaking off maybe some of those jitters. So resetting a bit as we kick off another week of a jam-packed schedule as far as earnings. Not as much of the mega cap names reporting, but still a lot of these smaller, more mid-tier names to get through. So we'll kick things off, as always, with a refresher on some of these mega cap names, as well as some earnings movement and analyst takeaways. We'll also then be charting and trading Pfizer as well as Merck, both ahead of their earnings releases expected tomorrow morning. And we'll also dive into AMD, which is the name that's been on quite a nice run in the last several months, but now earnings tomorrow afternoon will be the critical test, of course, for a company that is trying to really eat away at some of NVIDIA's dominance in the broader GPU and CPU worlds. We'll then discuss Palantir and all the expectations for Palantir into its earnings release today after the closing bell, as well as Columbia Financial, which is actually seeing a pretty nice pop today after some news of its earnings, as well as just some broad-based M&A. So a lot to get through, some wide coverage for the next hour or so, but we'll start things off here with Apple, which Apple actually seeing a 2% move to the upside to start off this, of course, trading month and this trading week. Now, we're seeing overall some news that Apple could be continuing to really foray into India specifically, as we are seeing some of these major tax exemptions actually bode well for some of these various contract manufacturers, but also a name like Apple, who's trying to further its push and its reach into that nation. But aside from that, we also got some news from Philips Securities as they did upgrade shares to neutral, citing some of the strong growth we're seeing in iPhone 17, as well as just the long-term monetization story, as well as the potential from its collaboration with Gemini, which was further disclosed actually last week on their earnings call, where they did say that they are continuing to boost that partnership. I know that the street really wants to hear more about their own independent offerings as far as AI and that Siri chatbot, which is delayed until this spring, I believe. But I mean, you take the tone from their earnings release last week and you say, hey, iPhone, which is still a huge portion of their sales, still hugely, positive as far as the revenue numbers and the expectations now going forward, as well as we're still seeing services actually a huge boom for their growth story. Then you go into some of the smaller, the wearables, your Macs, your iPad that are not growing at the same clip, but I'd say the story is still dominated by, frankly, where most of their revenues drive from, and that's the iPhone.
Hey, you look at where this stock's trading, it's the highest point
She's pissed off at me.
Since the 6th of January. So early,
I can see it.
2 or 3 trading days of the year.
Damn James Howard told me to start dressing right properly.
It was a win for Apple. I know it's sort of this delayed onset reaction to the upside in the stock shares, but it had an early performance last week that was pretty positive. For the most part, was
now I got to spend an extra 20 minutes dressing up in the morning.
This morning before the open by a pretty good margin, about 4% lower than where it is right now. So all in all, I look at Apple and I say, perhaps the worst of the last month is in the rearview mirror. All else equal, I mean, if the market turns, Apple's not going to.
Try, baby, look presentable when you go to work.
Allowed to perform and move in the direction that it's trying to. One could see a move back towards sort of where we began the year is very reasonable. That's around 270. From there.
Let's see what the percentage gainers are
today. And this is a market that really needs some new leadership from these mega cap names. Nvidia's okay, but it's been kind of sluggish. No new highs.
PLTR.
Microsoft, anything
upcoming
but
earnings.
A good performer as of late. So
I think PLTR would probably be a buy.
And right now, Apple to me seems like the best.
When are PLTR
example
earnings?
of a name that you could maybe make the case for.
Let me see here.
Amazon.
Yeah, and I mean,
I might take this a swing if it's tonight.
From those all-time highs of around $288.62 a share, but definitely today making up some lost room as we are at least inching towards much closer to our 50-day moving average.
Tonight's Monday night.
Still well above at these levels, but
PLTR.
Trying to
really,
I think, rewrite a lot of this narrative that there are such a laggard in the broader AI space, because nothing would give you any pause as far as their consumer-facing business last week that they're falling behind significantly, especially when you look at, frankly, our move and our next name today, which was Microsoft. Microsoft suffered a blistering session following its quarterly earnings, where we were so critical about Azure growth and the fact that Azure growth is expected now to grow more modest than had been expected, and a decline from a growth perspective on at least a sequential basis. I mean, that was, I think, a huge portion of the concern. We're down another percent today. We're now about 23.5% from all-time highs that we have not been able to reach since about now end of July at this point. So it's been kind of a long-term story, more midterm story, I should say, of some of this weakness in Microsoft shares. But hey, getting an upgrade today out of Philips Securities as well. Upgrading shares to buy, though, from the Accumulate unchanged price target of $540 a share. They cited valuation behind the upgrade for the stock's recent price performance, saying that they expect revenue growth of 16% year over year. That's from Microsoft, of course, driven by the continued strength in their growth across their commercial businesses. They did point out specifically Azure, which is expected to grow around 37% this quarter, as Microsoft continues to prioritize supply amid demand exceeding capacity. And so that was another major concern, is that they're exposed to so many of the pricing pressures and also just pricing really fluidity that we're seeing from some of these memory and storage components, where if we continue to see this shortage of these products available to market, yes, it's not necessarily a bad thing if you're, say, a Micron, that you make these products because you're able to control the prices, but also that means that someone like Microsoft could end up paying a pretty big premium. I mean, which is, of course, not what you want when you're trying to grow and monetize your own AI offering. So I think that was still a major concern. But all that to be said, there is still some favorability from the sell side here after a pretty substantial dip last week.
Yeah, there's a lot of interesting things happening when it comes to Microsoft. And we'll start with the fact that you look at the valuation over the last 5 years, and the forward valuation on average over the last 5 years, we know stocks have gotten more expensive, is just over 23. Let's call it 23.4 over the last 5 years. Well, in real time now, it has come down from its October peak of 34.7 to 25.6. So if we're already, I guess, seeding that stocks are more expensive than they were over the last 5 years on average, just as a whole, and now you're essentially almost back to that average point. And the disappointment was that it's only growing its fastest growing segment at 40%, 38%, which is pretty much where it's been over the last 8+ quarters. To me, this actually sets up something quite interesting from an investment standpoint. If you believe the story can remain intact, if you believe that these capacity build-outs that they're going to have to do to meet the demand are going to be relatively, cost, disciplined, that perhaps there's opportunity in this sell-off, because I look at this and say the only thing that's really changed is this stock just got a lot more reasonable in terms of valuation.
Yeah, and I mean, again, to your point, we talk so much about the frothiness of this market and some of the names that carry these premium price tags. And I mean, look no further than a lot of the names in big tech, but right now Microsoft, I mean, relatively affordable.
$69.90s.
The historical run-ups we've seen.
Well, and I'm not saying that the results
Or
maybe are disappointing relative to where the valuation.
$69.80 puts.
My point is just simply that it's the exact same story that it's been telling.
Right.
And so if 2.5, 3 weeks ago you loved it, and the story hasn't changed, I don't get how at 10, 12, 15% cheaper, it's not a much more interesting purchase.
I completely agree, and I think only further backed by the fundamental story, not in saying that I could say what was warranted or what was not warranted. I mean, I think 11% pullback is substantial, but nothing within their earnings report other than, again, that moderating pace of growth for their Azure business would
From
make...
what, 39 to 38?
Right, and I mean, we're talking 38, 37%. This is a pace of growth that, I mean, a lot of companies that aren't $1 trillion as far as their market cap is concerned would dream of. And so I think we're so quick to punish these names, but also, I mean, like, they're shelling out big cash.
I know we're harping on this, but this is where the only pushback I would have is, okay, so if we're going to question maybe it shouldn't have been trading where it was before, that's a different question. But it was there for a while, and it's been disappointing for a little while. I guess where I'm having trouble is it's not I'm going to use NVIDIA, but I know their businesses are very different. NVIDIA was growing at like 400%, and then now it's down to like 40 or 50%, or sort of that's sort of the story. That's decelerating, even though the numbers are still astronomical. Microsoft's basically been like 25%, 30%, 35%, 35%, 38%, 39%. Like, it hasn't come down from these crazy high numbers. So to me, I look at this and say, this is literally the same story Microsoft says every quarter, and suddenly now it's the second biggest market cap erased ever. It's like the other times you see Microsoft moves, it's like COVID, the .com, the 1987 crash. It's like one of these is not the same.
Yeah, and I mean, and then the fact that another company like Meta, for example, could come out and say basically the same thing,
right?
And just, I mean, like,
and they're spending like $150 billion.
Right. I mean, like, their capex spend, I think this year was like north of it was like 120 to 150 billion dollars, and that was received fine. I mean, Microsoft or Meta, on the same day was actually up 10% on the session. So it always gives us a lot to talk about when we get these huge earnings swings.
SPX puts.
It's an interesting time of year, but we'll leave it at least there for our
Strike.
Microsoft conversation. Now into
69.80
another one of these
at 310.
names, a very different story.
They're now at 360.
Up modestly here on the session,
370.
0.3%, but BTIG
80.
getting more optimistic, actually upgrading
I'm up
shares
$240.
$360 price target.
I want to go down to the megaphone.
Suggests changes to the value and promotions. That overall strategy is driving significant traffic growth on a more consistent basis. They do expect the change in value strategy.
Shut up. You're on my shit list, Jenny. I'm dressing like a slob last week. We're coming down. Hey, Paula. Wise men say And you're a fool. Let's go. You can do it. Another fat knife. $380, $390. I could sell them right here and just be happy. But if I get another dip, I can get another $100 out of it. Another 60. Contract. IWM might see the 200. QQQ is at the 63. How does he do it? We're now at 370, 80. $430, $440. Now you're up $140 a contract, $150. Make a business decision. Make a business decision. And it can drop more. Wise men say, Wash, how do you do it? I've never seen a trader do it like you. Falling in love with Washboardjim. Is it true that you don't wear underwear? Is it true that you sleep naked? Yes, it is. I'm guilty of it. $470 for my last one. I'm not going to be shy. This could drop a lot more and be worth a lot of money. I got one left. I'm going to hold it. Fuck it. We'll see what happens here. We're at support right here. If it starts to reverse up, we're at $5. Sold 2, left 1. Wise men say you're a fool to love. $5.50. How does he do it? We're at the two-way diamond 62. We're getting to the 200 SMA. You know what happens at the 200 SMA? This is Brandon. I've got a special message for you damn mega faggots. If I ever catch any of you around my daughter, I'm gonna stuff your ass with cocaine. Yep, it takes a lot of balls, my friend. It takes a lot of balls. I did it twice today. Back to 410. We're at the 200 and starting to bounce up a little bit. Meta moving up. Oh. Go get my water. It's been one kind of strange day, just going sideways.
Selling out of the money strike against that, 115 in this case, so that's $4 wide. If you spend $2 on that particular spread, it sets up an equal risk to reward, where you risk $200 with a chance to make $200. Your break even, you simply add that to that 111, you get 113. So in this particular case, Jenny, sort of our standard debit spread for this strategy, you need a little bit of help as the market will have to rally to get to that break even, and then ultimately above 115 by the end of this expiration, February 20th, to get to that max profit zone. So neutral to bullish example in Pfizer, looking at more of an outright bullish strategy for Merck, but both kind of intro level.
I got Pfizer on here for some reason.
Shaped a little bit differently depending on what you think might happen.
Yeah, and some duration on the back of this as well, so it's not necessarily a pure play into the earnings volatility by any means. Gives a bit of time on the end of this example trade, but we'll leave it there for Chartmaster today. Coming up next, time to discuss the outsized performance we're seeing to the upside today in AMD, as this name continues to be on a pretty nice run, up 4.5%.
Down quit bit, baby.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at npetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time to discuss some of the outside performance we're seeing in AMD, of course, with its earnings out tomorrow afternoon. Joining us in studio is Marley Caden, host for the Schwab Network, for some more insight into, the really phenomenal narrative that's been set up. I know we've pulled back still about 7 and some change from all-time high, 7%, and right now. But all that to be said, a name that's still up about 15% nearly on the year so far.
Yeah, and today trading about 4.5% higher. So AMD having a good day, like you said, in advance of their earnings, which we'll get tomorrow. But it's going to be a very interesting report. Expectations are high here. Obviously, this is a greater part of the AI conversation in terms of demand and build out and where things are heading. So we've already seen this earnings season how high the bar can be for these companies. Specifically for AMD, they're looking for EPS of $1.32. That would be up 21% year over year.
Oh, I'll be back.
Come at $9.67 billion. That would be more than 25% higher than it was in the year earlier period. Investors will be focused on momentum in chips and
got out of the Pfizer,
SPX
in time.
Gotten some previews from other companies that does.
That's a good call, I have to admit.
Strong and still there. But
again,
obviously we need to hear from AMD and what their numbers are indicating in the commentary from management. Very important. This does follow a strong prior quarter. AMD beat revenue estimates by about 5.5%. They had $9.25 billion in sales, and they do have a history of repeatedly beating in the past 2 years. They beat EPS estimates 75% of the time, revenue estimates 100% of the time, and that revenue beat averages about 2.5% to the upside versus the consensus. So they do have a history of beats. We are looking at mostly bullish analyst sentiment coming in. We've seen quite a few upward revisions. But in terms of focus, management commentary, very important, especially on cloud and AI demand. Pricing trends, that's going to be a very important thing. Supply as drivers of near-term performance. We've heard from a lot of other companies. We're sold out through 26, things like this. We're going to want to hear similar sentiment, as well as any data center business expansion. Competition is strong in this AI space. We'd also like to hear some updates on the production timeline for the MI455 and any kind of engagement for the 355. Those are going to be really important metrics as we're looking. Also important to note, China's still a wild card here too. During the third quarter earnings call, the company's CEO, when they gave their guidance for the fourth quarter, which was roughly about 9.6 billion plus or minus 300 million, they excluded any revenue from AMD's MI308 shipments to China. So now that there have been some approvals to allow chips back into China, it will be interesting to hear any commentary about China and what role that might play into their 2026 outlook. So those are some of the things that I'm seeing. As far as what shares have looked like, we're still trading below the average target, which is 289 right now. We're just under 250 for AMD. And their stock has gained nearly 100% in the past year. So, combined with the broader rise of just about 14% for the market. So, this is a strong stock. But again, we've seen with a lot of these really strong AI names that the bar is so high for them.
Yeah, I think from an earnings standpoint, eclipsed probably by Alphabet and Amazon this week. But other than that, I can't think of a name that might be more impactful. Maybe a Palantir, but all things considered, especially as we've watched these dynamics shift in the kind of chip trade, whether it's the memory names taking the lead or the dynamics between the AMDs, the Broadcoms, and NVIDIAs, where it doesn't seem like they're all moving in tandem anymore, Marley. When you look at this, do you feel AMD is going to have big market implications? Or is it going to be limited to more of an AMD related story?
Oh no, this will be a catalyst. but the expectation is so high, I think is the thing here. And it's hard to forecast, from our seat. We have the perspective of covering these live, and we know the expectations going in, and we speak to the analysts, and we read all the notes, but we have seen a very mixed reaction this earnings period to great numbers not being good enough. It's not good numbers anymore. It's great numbers that aren't good enough. And it can be one single number. So we've seen how high the bar is. We've also seen sometimes it be a bit confusing to figure out why certain companies are being rewarded and why others are being punished. And then we've seen it flip. But, it has been generally a more negative price action response despite the beats that we've seen on top and bottom lines this earnings season. So it will be very interesting, but whether or not this is a catalyst, absolutely a major catalyst. Whether it will be outsized to Amazon and Alphabet, I don't know. But we've got 3 big A names this week.
We do. That's a good way to look at it. And I know that their PE now, at these levels has been relatively elevated. We trade at roughly 44 times their forward earnings, and so that's definitely elevated. It's hard to compare it to like Palantir, which carries a much higher forward-looking multiple, but obviously the same growth is not necessarily expected. But I totally agree. The headline numbers have not seemed to resonate. It's all about your guidance and how well you're controlling your margin and your cash flow. That seems like the story that's dominating, as well as broad diversification. I know that was a pain point for Western Digital last week, where the street was saying, hey, they have a lack of diversity. That could be a negative catalyst going forward. But a lot of this is just on forward expectations, because so many of these names have been pulled forward on a lot of that growth. So
I think the fact that we were able to see a name like SanDisk trade higher, I know it kind of gave back a lot of those gains, but the fact that it was able to trade higher shows that there is still a demand for certain types of names that are showing the growth, that are actually getting dollars and cents from this build out, not the ones necessarily spending it. But from a trading standpoint, I think it just comes down to how do you feel about this? It's FOMO after all. I looked at a bullish strategy, looking for this trade to continue as it expanded beyond just NVIDIA towards the end of last year, guys. So bullish call calendar, looking for a move back near the highs around 270. Selling this Friday is February 6th, buying next Friday the 13th, Feb 13, 270 call calendar spread. So a third different kind of bullish strategy for our show today. $2 debit means you have $200 in risk, but we know precision is more the name of the game with this strategy. So not only directionally do you have to be right, you kind of want to throw the dart near the price that the stock ends up at by the end of this week. So in this case, it's a move towards the highs, and if that happens, a chance for this to be profitable in some way, but most importantly, it's risk defined in the event that it goes the other way.
Yeah, and I do agree this will be, I think, a major event, because right now markets are trying to read through so many of these companies that have such a wide reach into AI, like what the health of the AI trade looks like for the remainder of this year. So we will be definitely watching those numbers as they report tomorrow after the closing bell. But we'll leave it there for FOMO. Appreciate it to Marley Caden, host for the Schwab Network. Now, coming up next, though, we'll dive into a name with earnings actually out after the close today, and that's Palantir. Palantir, a name that's pulled back nearly 28% from its highs, so sets up a very interesting stage for a volatility play at best for Palantir here ahead of their earnings.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies. Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a match?
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss all of the expectations for Palantir into earnings, as Palantir, of course, heads into today's print with the stock under pressure, down nearly 28% over just the past 3 months amid some of the broader uncertainty in the software and AI markets. Joining us now, though, for some insight into some of the expectations for these numbers, I'd like to welcome in Scott Kessler, TMT sector analyst at Third Bridge. Scott, thanks so much for joining us ahead of this pretty big report, I can imagine. So does the fact that shares have repriced a bit to the downside from those highs seen earlier in 2025, does this give you any encouragement, or do you think this is more reflective of some of the market's appetite for these big spenders and big players in AI?
Yeah, I think it's a good question and one that's been on people's minds. I think you referenced that the stock has fallen nearly 30% since they last reported results about 3 months ago. And I think there is definitely cause for concern when it comes to all things AI pertaining to the market. I think for Palantir, the question really is, how sustainable is the growth trajectory? Expectations are for, I think, over 60% growth in Q4, but we will see over the next couple of years, it seems, some deceleration in those gains. It could obviously be the law of large numbers, but it could also be that the company is facing, I think, some headwinds when it comes to demand or even supply.
Scott, how does one balance the very, very obvious risk that this stock trades with a pretty tremendous forward valuation with the fact that it's also delivering just home run after home run when it comes to the growth rate? Are we in a situation, from your perspective, where there's actually risk that the numbers continue to excite analysts like yourself, but the stock price continues to slide?
Yeah, I mean, I think that's entirely possible. My recollection is that when they reported Q3 results, I think they essentially exceeded expectations across kind of every important metric. But that obviously hasn't been good enough, and I think that's something that people should pay attention to and be mindful of. The reality is that I do think that people wonder if fundamentals to some extent have peaked for this company. You're talking about a $350 billion market cap firm, as I mentioned, very strong and sustained growth rates. I think the consensus is for margins to continue to improve. But the reality here is that when you think about competition, whether it's a Databricks or whether it's a lot of these other AI type companies and businesses out there, right? I think like Frontier Labs kinds of companies and businesses, for example, that everyone's very interested in, or just the fact that arguably over the last couple of quarters, there's been more scrutiny on not necessarily kind of the hyperscalers and spending more and more, because I think people to some extent have come to accept that. But what about corporations? What about governments increasingly spending on AI solutions? It seems like there is anecdotal indications, even evidence that folks aren't gleaning the kinds of ROI that may be kind of demanded going forward.
Okay, so you mentioned the word sustainability, which I do think is hugely in question right now, but really how sustainable is the margin improvement given right now the mix of government and commercial revenue, which is now very quickly
So he's down PLTR.
split?
Yeah, look, I mean, I think when a company is like Palantir in that they've built out kind of infrastructure and technology and solutions, I think for them to a large extent, the heavy lifting is done. And so there should be ample opportunity for them to further scale the business and improve margins. I think the one challenge that I think a lot of people need to just kind of be mindful of is what I alluded to in the context of competition. You know, Palantir was way out in front when it comes to AI solutions years ago, really, and it seems like folks are, you know, just starting to get into the conversation.
I really like his support.
To competition. The other thing you mentioned, kind of the split between commercial and government. Look, this historically has been a company that's been very much driven by their government business, their government offerings. And there is a fair amount of runway there, especially when you consider that a lot of that has been related to and around defense. And all indications are that spending on defense is poised to increase and increase substantially, not just in the U.S., but in Europe as well, where that's been, I think, a major market story for probably the last year at least.
Scott, you mentioned competition. Now let's talk competition for maybe capital as an investor making a decision. Is there really any other pure play into this technology or this type of technology that you can think of? And, you know, standard disclaimers, the valuation stuff, you don't know where something's going to fit for an individual. But in many ways, this kind of seems almost like a must-own type of stock given the stuff that it's working on. Is that fair to say?
Yeah, look, I mean, I'm never going to suggest that something is must-own, especially since that's not really the business that we're in per se. But this is what I will say. From a fundamental perspective, I think you kind of astutely point out that this is a company, this is a business, this is a set of offerings, very differentiated in the marketplace, as you point out. And I think there is something to be said for scarcity value, not just in terms of, you know, kind of market interest, but also from more of an investment perspective. And I think that is something that people obviously are mindful of. However, keep in mind what I said before, if people are growing more and more, whether it's skeptical about or kind of critical regarding not just what they're spending on, but how much they're spending, that's going to be something that probably should be impacting Palantir. So to your point, look, if the perception is that no one can do what Palantir does and what they do is frankly must-have, then I think that says a lot about the potential staying power of this company. But I think there are now questions increasingly about some of those factors that people have to be mindful of.
No, and I agree. And with 161 forward PE, I mean, we always say that that's the big concern going into these reports, but it doesn't seem to necessarily always play out in the stock performance post a lot of these catalysts, so these major volatility events. So I do tend to look at that eye-watering valuation, but they've been able to hang out and be one of really the street's best performers regardless of that. So always a report that we will definitely be keeping on our radar. We so appreciate your time and all that insight into Palantir. Scott Kessler, TMT sector analyst at Third Bridge. Now coming up next, time to shift gears into under 30. We are looking at Columbia Financial announcing an agreement to merge with Northfield Bancorp. Transaction valued at roughly $597 million, and shares are up over 8% in reaction.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for Under 30, and we are looking at Columbia Financial, which is up now about 8% on the session. On news, they've agreed to merge with now Northfield Bancorp. But joining us now for some more insight on the story and their broader financials is George Tillis, Senior Markets Correspondent for the network. And so, George, an 8% move for this name. Well, we talk a lot about these big swings in tech. This is a huge move, which is really illustrated by their chart. I mean, a massive green candle for a company that historically has not seen this degree of volatility.
Yeah, I mean, we're talking regional banks or local community banks. And in fact, one that you'll notice about the regionals, year to date, they've actually performed quite well. I think that speaks to the aspects of net interest margins, which are actually improving. You have to think about regional and community banks. They really rely on deposit base from local savers and depositors. That's their mainstay source of financing for loans, which include, of course, real estate, commercial development, home equity loans, and personal loans. So across the board, it's general banking. So Columbia Financial is based out of New Jersey. So there's a couple of catalysts outside of the regionals specific to this name. First off, they did report earnings where they posted an improvement relative to estimates, 16 cents versus 14 cents, and around $69 million in net revenue versus around 63 million. And second, if you look at the breakdown of their net interest margins, they actually improved 29% year over year, where the yield on loans also was quite high at around 5.9%. And at the same time, they're making an acquisition, a $597 million all-stock deal for Northfield Bank, which is actually based out of Staten Island. So this is essentially a New York community banking sector, if you will, because if you look at Columbia Financial, they're based out of New Jersey, so they're essentially seeing more consolidation in the space. They also talked about how their financials, the profitability of the combined units, will be accretive to shareholders by 2027. So we're seeing essentially across the board regional bank improvement because net interest margins, long-term rates are rising, short-term rates are falling. That's helping essentially save money on having to pay up depositors for capital funding. While at the same time, the acquisition itself improves the scalability of these two small businesses.
George, when you look at this trend of consolidation, particularly amongst banks, what are some of the concerns? I mean, we're going to hear the concerns, less local. Do you think those are fair? Is this just reality in 2026 in terms of trying to save some costs and compete with the big guys?
Well, that's the thing. You're always going to see, small mergers and acquisitions across the smaller banks. It's easier for them to do so. They don't have any regulatory constraints like, if JP Morgan were to buy Wells, it's a huge regulatory issue. I think one of the things about the regionals right now is that they rely less on fees. With the bigger banks have such larger scale across the board in different banking divisions like investment banking and trading and of course currency aspects and commodity trading. These smaller banks don't, and so they really rely on core funding and core lending, and that's actually quite clean in terms of visibility for them. Especially when the yield curve is widening out, long-term rates keep rising slightly over time. Short-term rates are falling. And I think short-term rates are also improving because of the liquidity provisions provided by the Fed in terms of their reserve asset management program. That's giving a little bit more liquidity provisions for these regional banks, which have more concentrated loan portfolios in the commercial sector, which for all intents and purposes seems to be relatively stable right now, considering the chart of Columbia Financial, which is nicely moving to the upside.
Yeah, new 52-week high today, an 8% jump here in real time. So one that it was definitely on our radar given the upside performance today. Appreciate it though, George Chillis, for that breakdown. Then we'll also do it for Alex and myself for Next Gen Investing for this Monday. Appreciate you all for tuning in. The watch list is coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
One of them boring days.
Inside the minds of pro traders.
My point is that they're getting.
We got AMD approaching double top.
Not the same rate of change on EPS.
Let's do a watch list look over. It is now almost 1 o'clock. This is the tough hour for me to be trading. So I'm going to look for some setups on my watch list. If you like to follow, I'll tell you which ones I like. Comprehendo mundo. Shaleke tapaladba. Asafaldomona fitihola. Tutu latamana. Zata zigzag. Do you understand that? Okay, we got NVIDIA, and we're going to use I'm going to go get some water before I do this. I think I needed that. So we got NVIDIA. It's kind of a sloppy chart. A lot of volatility on this stock. So the dips are a buy every day. That's the 1 hour. See what the daily. The daily, we're at the 100 and the 21 on the daily. We got a head and shoulders. Got two of them actually. Oh, there, man. I didn't drink enough water. Feel like I just want to go lay down for a second. Imagine me dying and having a stroke live on YouTube. I'm going to create an alert off the 100. Off the 100 on the daily. EMA, or is that SMA? I think it's SMA. But I'll go back and check. Simple moving average. Let's look at the PLTR on the daily. Oh, that's the weekly. I got the weekly triple bottom. I do like this spot a lot. We have had a pullback. For earnings tonight. Tesla up about $8 since I called it. I think I'm going to go back there and lay down for a second. I just don't feel good right yet. I'll be back.
They had Parks and Experiences did well, box office did well, streaming is now profitable and doing well. But it was two things. It was linear TV, like ABC and the other stations, ESPN. Those all missed expectations. And then the talks about a new CEO, losing Bob Iger, probably Josh D'Amaro, the theme parks division chairman, may get the job, but I think that's what's weighing on the stock. The missing linear TV, which, by the way, we all know that linear.
You're wrong, fat ass.
Struggling, but I think the fact that Bob Iger may be leaving the company soon has got investors worried because.
No, it doesn't. It's got me happier than heck. These guys, they love this guy, and he's done nothing for this company. He done nothing.
Blanket on the stock.
Right. And you know what I was thinking too? I mean, didn't he leave and come back to sort of save the day type of thing? And really turn this company back around and fix it once again. So, I mean, he's really looked and perceived as a really great leader there. You'll have Josh D'Amaro who will have big shoes to fill, right?
Exactly right. I think, and remember, based on what happened the last time Bob Iger left, there were nothing but big problems, and they had to relieve the CEO of his duties and bring back Bob Iger to kind of put out all the fires that they started. So yeah, can this Josh D'Amaro do a better job or something comparable to Bob Iger? I think that's the question. But it looks like that and the linear TV problems at Disney has investors, at least today, stock's down about 7%. Pretty big, solid move off of good earnings numbers.
All right, next up, I got to bring up Palantir. I mean, it's just been unbelievable. Stock's 1 year up 83%. I know it's off its highs of $207 at 148. What
We'll be right back.
in this earnings report
In
today?
about 10 minutes.
It's real simple. Palantir, that has been caught up in the software sell-off the last 3 months, needs two things: a beat and a raise. Right? They need big guidance. They need to show that everything they're doing with AI is improving the overall U.S. commercial growth of their business. That's the side of the business that's growing at crazy levels. The government part is doing fine and solid, but it's that U.S. commercial part that's growing. So it's very simple. After 3 months or 90 days of a stock selling off based on the whole software sector has sold off. They need a nice beat, a nice raise, and some good guidance going forward to get this stock's mojo back, Nicole.
Yeah, without a doubt. I mean, I saw William Blair analyst Louis De Palma sees a turnaround on the horizon. He anticipates the company will be able to, widen its AI lead in the coming months. I'm reading the story here, and that he put an outperform rating from a market perform, just talking about the increased momentum, the government contracts and businesses and things like that will help to give it a boost going forward. A final thought on this huge name.
Well, I think Palantir is going to be key, and couldn't put life back in this sector that has all these big, high-profile names lower. Like I said, this is going to be a week of a lot of earnings, not as much data as we thought we were going to have. Right, Friday's jobs number now not coming out. That disappoints a lot of people. But I thought the market and the futures last night opened down pretty hard, and they were down hard overnight. Pretty resilient stock market today to bounce like it did. So, the next couple days, it's going to be all about earnings. It's going to be Palantir, then Google Alphabet, then Amazon. Throw in a couple other big names. Yeah, it's going to be a big week.
Yeah, and with the Palantir story, like you said, they need a beat and a raise, and in a big way, because a lot of stocks that have beaten the street with their quarterly numbers still went to the downside. I think we've had about 77% of the names thus far that have reported actually a beat on earnings, and many of them sold off. So, I mean, you have to really have a stellar report to not sell off, especially when this article, for example, says Palantir faces some lofty expectations heading into earnings. So that's another part of the story. Thank you, Kevin Hicks. Great to see you always. Appreciate it. All right, now let's take a look at the bigger picture. Jay Hatfield's with us, CEO, CIO, Infrastructure Capital Advisors. Thank you so much for being with us. So we're kicking off a new month. Your thoughts on what what February could bring us?
Thanks, Nicole. It's great to be back. Well, trading over the last couple of days has really been dominated by the new Fed chair, and it seemed like the market was really receiving that poorly. But I think what was really happening is just some of the mo trades, they just needed any spark to blow up. And so the gold, silver, I guess it's not really a mo trade, but the continued momentum down in Bitcoin. So that's really what dominated it. I thought, as you mentioned in the prior segment, the super bullish that we turned around. We're down 85 handles overnight. Now we're quite positive. And so what we're focused on is that we actually think this super hawkish Fed chair will cut 3 times, not because of the weak economy, but we think we're forecasting PC core goes down to just 2%. So that's a great backdrop. And what everybody's ignoring is that Warsh, like us, is super negative about the Fed and is going to reform the Fed. So hopefully they become better at forecasting, use the money supply as a portion of their forecast, and correct the BLS numbers for their big delay. The only negative is that he's unlikely to come off the 2% target. So we think now with this Fed selection, all systems are go. We're reiterating our 8,000 target. We think actually the tech companies reporting this week, not necessarily Palantir, but Google and Amazon are reasonably priced and have great fundamentals. So I think that would be a great backdrop. And we are reiterating our 375 target on the 10-year.
A 375 target on, what was that?
The 10-year treasury.
Oh, on the 10-year.
So we think there'll be a significant bond rally, yeah.
Yeah, because you said 3 cuts. I mean, when you're saying that, so you're looking at 375. I mean, I had to rub my eyes because I haven't seen that any time in a long time. I saw 398 once, maybe over the last month or so. It was for a brief moment, but you really see rates coming down in a big way. That's pretty interesting. I mean, Kevin Warsh, you said he's going to be cutting rates because inflation will not be problematic, and he was on the page that tariffs did not necessarily equal inflation. He's also been known that if there's running away prices, he definitely wants to hike, but he also could cut, pretty easily as well. So that I think that's why people like him, because he's open to doing whatever is needed at the right time. Is that right? And you said the cuts are going to be needed.
Absolutely. And so in fact, so the key driver, the 10-year, a lot of people our investors don't focus on this, is really the terminal rate of Fed funds. So in other words, the 10-year trades 100-ish over the Fed funds rate. So we get to 275, then we'll end up at 375. So that's a critical insight. So don't worry about the budget deficit. Don't worry about global bonds. It's really Fed policy. And we do think that Warsh has really communicated to the president that he does see inflation coming down. He probably does adjust like we do on our website. You can check it out. Right. We have CPI-R and PCE-R. So if you look at that, we're already at 2. So we must have some understanding of that to get the job. So we're a little bit concerned longer term, he sticks too closely to this arbitrary 2% target, should be 2 to 3. But if they get the forecasting right, adjust CPI, then we'll be 2/3 of the way to fixing the Fed.
All right, let's get to some of your stories here. I mean, you mentioned tech, and that's one area you liked. You said Amazon and Alphabet, Google. You know, when you talked about some fair pricing and fundamentals looking good, you also in the tech realm had Marvell and Broadcom and NVIDIA. Those are the names you like, right?
Correct, and unlike Palantir, they traded reasonable PEG ratios, so PE to growth. Palantir's at 4, so they may do great, but the bar is extremely high. Marvell's closer to 1. Broadcom came off hard. We sold it at 400. Now it's starting to look cheap. Same thing with NVIDIA.
Yeah, when PLTR was at 180, y'all were pumping it up to 220. That it was priced in. All of a sudden now, it's overbought.
Some of the financials, I saw KKR and a few others. Tell me more.
Well, actually, we've been recommending KKR for a while, and now we're in the second bout of fears about private credit. We're not huge fans of private credit. We actually think preferred stocks are better. We have one of the leading funds.
Not talking highly about it. I want to swing this thing. It's at a major support level. We hit 140 this morning, man. I don't know. I like to swing it. Just one contract. I'm going to go for 160 strike.
We have an 11 target on that. And what's good news about it is it's lower beta.
They could double bottom at 140 off earnings and then bounce
There's
up.
a problem with some funding of OpenAI. It'll be low beta. You get your dividend. And
you're gone. Man, this look good too. A lot of good sell-offs. But Oracle, it's got the big problem that it lied to it. It made all these proposals and doesn't have the money to get it done. Look at the gap on that thing. What they took on that. I mean, that was pure ridiculous. I was bitching. I still want to short this thing. They could ruin this stock. Okay, what else is earnings tonight? We got Rambus That's it. Just PLTR for tonight. And 10 it's yeah, that's it. Just PLTR. Then tomorrow morning, we got PayPal, Merck, PepsiCo, Pfizer. Those are the ones for in the morning. And then after hours, Tuesday, we got AMD, Chipotle, that's all I see for that. Maybe Super Micron, SMCI. It is at support right now. And then we got Wednesday morning, Uber, Eli Lilly, Johnson Controls, ABBV, and then after hours Wednesday, we got Google. That's going to be the big one. Google's going to be the big one for this coming week. And it's at fucking high. God darn. Yeah, this is the big one here. Google, ARM, QCOM, O'Reilly's, Snap, and then oil Thursday morning, ConocoPhillips, Shell, Thursday evening, Amazon, and I just saw one here. There's and Mr. Man, that might be a good one on. Mr. might be a good one. Yeah, I think I would have took that. $21 for code. Now, as far as I know, this is going to be the only warm day we're going to get. I haven't even stepped outside to see. Some say 50, some say 30. I'm going to go outside. Let me see what it says on my thermostat. 47. I'm going to start getting the cold front coming back in. Yin Yang. Just now saw it. Definitely off the 50. Come on, baby. So we had a yin yang right here. Resistance, support, 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 support off the 50. These are the I got the 69.90s at 350. Now they're at 380. $360. They're back to 350. I could have got them a lot cheaper. I don't know what I was thinking. Just sit here and frickin' look at it. Off the 50. Well, there it goes. No. 32, the pullbacks always happen within an hour. That hour. I got one at 350, and I'm going to get 2 or 3 of them here. I don't know what I was thinking there.
employment finally feels like the one that's maybe the last to turn. The panelists are still saying for every panelist whose company is hiring, there are 2 that are holding, meaning either not backfilling or laying off. And so I feel like these companies are going to have the confidence to go ahead and start to replenish their employment roles, but only after they are a little more certain that the orders aren't just a blip, that maybe it's a trend.
And look, I felt like when we received the New York Empire State Manufacturing number, which was a nice beat, that gave me some optimism for future manufacturing numbers. I know New York is not the USA, but it is a big part of the USA and sometimes can give us a sense of the trend. As far as employment, it still is declining, but at a slower rate, so I guess that was good. The one thing I didn't necessarily love was that there are supplier delays. The input costs are still relatively high, remain elevated. The delays from suppliers and or the elevated costs are not good.
Well, there's 2 schools of thought there. Back when the tariffs in March, April started getting a lot of airtime, we had port congestion, especially in Long Beach. So we really attributed to that. In normal times, supplier delays should mean that they're busy because they've got business. So while it's not fun for the people waiting for their goods, if that means they're busier, that's great. It just hasn't exactly connected with new orders. So I'm okay with a little slower delivery as long as it's being, kind of supported by, but new orders are clicking and, new export orders are there. So I want them to kind of act in concert with each other. And it's been difficult to see bubbles one month that flatten out the next. So we will see.
This was good, bad, or ugly because Jay Powell was saying the economy was looking good or stronger or whatever he said. How would you say we're doing with our economy when it comes to manufacturing? Good, bad, or ugly?
I would say the ugliness is still there because of uncertainty, and that is kind of blocking long-term recovery, at least in these indices. We did have our semi-forecast report in December, and our panelists were optimistic for 2026. For the most part, some sectors weren't. I just don't personally believe that we're gonna improve and hold until we have a ruling on tariffs and understand really more what the picture for 2026 is going to be as far as the ability to set those, take them away, change our mind, because that's really driven a lot of consternation.
All right, well, at least it was the fastest gain since 2022. We had something to put our teeth into. Susan Spence, thank you. Institute for Supply Management. Great to see you, Susan. Thank you. All right, coming up, we'll take a closer look at what's next for value and cyclical stocks.
$2.10.
The watch list. We'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vidas and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Built into Focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick.
Mine opens under $5.
Invest your way with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We want to welcome in George Schultze, founder of Schultze Asset Management. Thank you so much for being with us. We heard from our Fed Chair Jay Powell last week, and he seemed pretty positive on things going in the right direction. He even took out the language about downside risk to unemployment. But was sort of still in this wait and see mode. What's your outlook, your economic outlook for 2026? And, now the new pick of Kevin Warsh on the markets, the economy. What's your outlook?
Thanks, Nicole. Great to be back here, by the way. It's today's Groundhog Day. I guess there'll be lots of things repeating, perhaps. But we're very optimistic right now about the markets. Equity markets have been constructive as we
Come on, let's go.
There's been good.
I averaged down to 238.
We all expect, I think, monetary easing, additional monetary easing. Having said that, valuations are elevated, and we've seen a lot of volatility. Of course, late last week we had precious
We're off to 200, so it's tight.
But pretty much right now, with this new Fed pick, I think we can all expect at least, I would say, 1 to 2 rate cuts this year. And the economy has been growing, with GDP growing above trend at about 4.3%. Inflation has been moderate at about 2.7%. So right now, I think, the outlook actually looks pretty good. So when you get these market corrections and these temporary things like perhaps like the precious metal sell-off from Friday, I think that usually presents a pretty interesting opportunity.
Yep.
So that's how we're looking at the world from a macroeconomic perspective right now.
I was going to say that Bostic today was saying that it's not wise to make any moves in any direction right now, saying that it wouldn't be advised to cut interest rates or anything, because then it would be unlikely that the inflation print would reach the 2% target, and that some patience is needed. In other words, wait, please don't cut rates yet,
No.
What do you think of that?
I'd say they're full of shit.
Yeah, there's a good amount of validity to that argument. However, I don't think anybody expects rates to be cut right now. Last week there was the Fed meeting, and it kind of just punted last Wednesday. So they've held the Fed funds rate, the policy rate steady between 3.5% and 3.75% after several cuts last year. And I think the big surprise from Friday was Trump's pick. And Trump's been talking about being much more accommodative a number of times, but the person he selected has a history of really wanting to downsize the Fed's balance sheet. So I think you'll have some puts and takes with that, assuming he's approved and comes into office, which would happen around mid-year of 2026.
Target's getting new CEO.
About your strategy, right? You're watching.
Okay, I'm at 260 right now.
For us. You look at
value,
cyclicals, and growth. I mean,
270
what works here, do you think?
We've done really well with short selling companies that are facing distress. Also, we've been increasing our exposure to distressed debt opportunistically with certain companies as they've collapsed and gone through a restructuring cycle. And our third type of investment, which is something that we've been very active with in the portfolio in the last couple of years, is post-distress equities. So these are event-driven equities that have interesting one-off events, whether it's a restructuring or a balance sheet correction or a repair, and as a result, represent very
280.
interesting value-oriented equities with good.
We got to break if we break the 50, it's going to be about another 30, 40 bucks.
One or two of them before. but we think they both
Or you
have
get
a
out now.
upside today.
Right. Go ahead and say them. I have them here in my prompter too. Tell me.
You make a business. Oh, uh-oh. Mark says, how does he do it? I've never seen anything like it. And I've been trading 89 years. You look like you're going to fall out of the sky, and all of a sudden it just turns around like a pizza pie. I've never seen anything like it. Should I sell it? I should have sold it at 320, but I wasn't being very bright because I think we might break the 50 SMA tonight. I get out at 310 and take it as a win. Oh! Uh-oh! Oh, God. Take it. For I am Washboardjim. Come on, give me a little more. Let's get greedy. I tried to get 340. Don't give up. Don't give up. Silver. Now it's coming down. Down the street, sneak boy, Washboardjim, sneaky snake, boom, 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 sneaky snake. Way down low, let's break it and go. West, I'm back to even. Boom, boom. Got 11 more minutes to power hour. Oh yeah, I got some left. I'm still holding some. Let's go. Ooh, yeah. We just broke support on the QQQ. The SPY's at the 200. The SPX is at the 200. So we're at a pivot point, support level, double bottom. NVIDIA pulling back. New high on Apple. Two contracts. I sold 3. So if I don't hold to 63, I'll get out of them. I mean, the 200. We could hit the 200 EMA and still bounce up. That's that yellow line below it.
The numbers last week. We saw them in the commentary and conference calls.
Yeah, I took a Google today. If I'd known that, earnings. Back to $2. I didn't grab the dip. I should have added another 3 to it. That would have been pretty. I'm back to 150. I'm tired. My broken neck's starting to get a little stiff on me. All right, 220. Go! There we go. $330, $340. Go, 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 go! Good job, Richard. $350. Got 340, so I'm all out. Damn. Richard. That's it. We got 1 minute to power hour. So that was just like, that was nice. Now look at it, knife. We got out in time, didn't we, Richard? Right before power hour. Sneak, snake, singing boom, 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 going boom, 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 boom. Beautiful little hammer on that IWM. Everything just kind of knifed. All of it. SMCI earnings this week. And it's under 30 right now. So that's kind of a good spot. 28 would be a darling spot. Keep it, I got a pornographic memory where I can remember some of these prices. It's like Tesla. I want to raise the bar on Tesla. Raise it up above my 400. 418 would be nice if it stopped there every time. That a $10 bounce today. Actually, more than that. 14. The video has a 1, 2, 3, but we got a new high on Apple. Damn. Might have been another good buy right there, $100. Oh, that's the put. What the f... Well, I wasn't in them, thank God. That's strange. I had the puts ready. What were they? 69.80s. Yeah, them would have paid off good too. That'd have been 3 puts today. Take off my watch. Get the dip on AMD in the morning. That'll be our number one look at first thing in the morning. AMD. And Google. Any dip on Google. It could be Goog. I got to do my taxes. Where's my tax work? Oh God, what did I do with my taxes? Huh. Which it's here. There it is. Never mind. Yeah, the day will come where I won't have to worry about bills. I mean, I don't worry about them, but I mean, I don't have to worry about reminding myself to pay them. I got so many. Accounting and blah, blah, blah. Well, at 420, that's Tesla. I'm going to set an alert off 420, see if we hit that tomorrow. Stay above it on Tesla. $2.15. Yes, I do. I have a pornographic memory. Well, this guy here, I think this is that scammer. The bubble is bursting. You ever heard of this guy here?
Here, all related to the Sheik's 49% purchase of Donald Trump's WLFI just 4 days before inauguration. Not sus at all. But all three of these things connected to the private credit disaster that's brewing. We've got to pay attention to this because this could be the turning point of the entire decade. And I think it'll make a centuries-long style impact. So watching the movements doesn't mean go sell everything tomorrow and panic and go to cash or whatever. It means let's be reasonable. Let's break down what's actually going on and take this all one step at a time. So in this video, we're going to break down what is going on with Oracle's cash crunch, the warning for memory stocks like SanDisk and Micron. We're going to talk about what Jensen just said regarding the NVIDIA rug pull, which is a very big deal. And we'll explain why this spy sheik everyone is talking about is involved with all of this. And then, of course, all of that ties into private credit. So, without further ado, let's get started. First, we had a rug pull on the NVIDIA OpenAI deal this weekend. And it led a lot of people to pick sides immediately because that's usually what people do. They go, the NVIDIA bulls go, no, everything's fine. Jensen said it's going to be the best investment ever into OpenAI, the greatest ever. And then on the other side, you got bears going, holy smokes. They just basically cut this agreed upon deal to the tune of 70 to 80%. And the reality is, both can be true. But I want you to think of this for a moment as a circle. In fact, let's make this just really simple by taking out a piece of paper and a Sharpie here. So, all I want you to think about, boy, this reminds me of the old whiteboard days. Leave me a comment if you were around in the whiteboard days. But anyway, think about this. If NVIDIA commits in September of 2025, which they did, to an OpenAI deal where they provide $10 billion to OpenAI every time they open up a new portion of a data center or achieve some kind of milestone, then all of a sudden OpenAI can go spend that money on data center leases like at companies such as Oracle, and Oracle can then go buy many billions of dollars worth of NVIDIA chips, and then of course NVIDIA says, hey, well, if we reach the first $10 billion milestone, we could do it again, and again, and again, and again, and again. Well, we already know this is very circular and weird, but what happens when NVIDIA starts getting a little gun shy? What happens if they stop drinking from the potion of AI and people start realizing, oh crap, we might need to hedge our bets? Well, that's when the whole chain starts slowing down, or potentially worse. And we're starting to see the or worse already. But let's understand these numbers for a moment. Take a look at this. That $10 billion that wasn't. A timeline of investment announcements, partnerships, and the apparent
Oh boy. I think this is the guy that bought that jet and scammed a bunch of I can't argue that we were overfrosted 2 or 3 months ago when I was calling the high bubble and everything sold back and pulled back. But now things are starting to look good again. So I don't know. I don't quite. Now NVIDIA might still be overbought. Not really. No, it's not overbought. Yeah, it kind of is. I don't know. I mean, if he gets down to the 200s on the daily, I think it'd be a very good strong buy and add on. I mean, if it does dip down 18 bucks, 10, 20 bucks, 170, I'd load up for sure. But the 200 EMA, even before it even hits it, I'd jump in that trade on the triple bottom off that wick. Oh, this thing's acting so slow again. Now where the frick was I? Right there. 171.14 for low. Oracle. If he was going to pump Oracle, he's a nut. But we are definitely, close to support, but not. Get some water. Symmetrical flag on SPX. Get ready for the midday closer. Symmetrical flag on the SPX. Okay, we're coming down to a double bottom. And the double bottom here. Oh, I don't know. It's just not been a very good trading day. I mean, I've not read trade at all today, but it's just been very hard and patient. It's kind of sideways crap with not an easy. Wow, there's $500. 10 minutes later, there's another 500. So I didn't take his symmetrical flag, and then it pulled down to the first support, second support, and then you got your third, which is the double bottom. That's on the symmetrical flag. So that's a double bottom here too. I definitely watching the video in the morning. Grab me an apple cider. Oh, oh my. Yeah, I'm gonna have to. The chair's killing me in my back.
GPU effectiveness has actually been memory, like bandwidth memory. So when you look at names like SK Hynix and Micron over the last year, they've had extreme earnings upsides, kind of driven by this supply constraint. But what's really interesting about the market now is it's shifting from what we would call episodic training to more of an always-on inference. And well, why is that important? It's important because it's shifting from the storage dynamic changes and the supply constraints move downstream. In inference, you have a proliferation of data. Storage used to be store it once, archive it once, access it sometimes. That is not the case.
You guys ain't no help today. Oak.
Always being here.
Woo! I don't think her husband's liking me flirting with her. Marley. And the video.
How insulated are the memory folks if things don't go as planned when it comes to AI?
The memory folks are directly tied to a lot of the
If it don't go as planned.
The components are. A lot of this is predicated on hyperscalers continuing to kind of seek those contracts. But what I think is different about this infrastructure build out in particular is as long as you have the supply and demand matching in the right dynamic, you should have a lot of comfort in that hyperscaler dynamic. A lot of these, especially on the high bandwidth side, which is where our AI infrastructure ETF that Vista Shares relies heavily on, is our two top positions is SK Hynix and Micron. We kind of view that as much more persistent and a lot more protected than some of the other areas of memory that are also getting a lot of press. So while we do think that nothing is 100% insulated, we do find pockets, specifically within the high bandwidth memory segment, that we're a little bit more attracted to over the long term from our insulation perspective.
David, we appreciate you being with us to highlight memory and storage stocks and some things to keep a close eye on there. David Featherstone Hall from Vista Shares. Coming up next, we've got Options Corner. Rick Ducant will join us here in our Chicago studio to take a look at the options activity on Palantir ahead of its earnings after the close. That's next on Market Up Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast
Jenny's husband.
breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Oh, man.
I'm Kevin Green, and I track options flow.
No, you're Kevin Brown.
Who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
We're at the support, double bottom.
Is set to report earnings after
Let's
the
get
bell today. Analysts expecting EPS of
SPX
on revenue of $1.35 billion, which would represent revenue
69.80s.
year over year. U.S. growth expected to grow by 80%. That U.S. revenue will likely make up about 75%
Damn.
of the total revenue
Marley.
versus 67%.
You look hot today.
And now, of course, it's time for Options Corner. Joining us now, Rick Ducant.
$2.69.80s.
To take a closer look at Palantir in advance of those earnings, I just
Double bottom.
Now, Rick, Palantir is an interesting company to take a look at. So I guess we'll just look at it more broadly against the market because
Back to $2.
It's in the software space, but it's not a traditional software company.
No, and really much greater degree of outperformance versus not only the tech sector, as you can see here, XLK only up
170 now.
Versus Palantir up like 76% or so. If you compare Palantir specifically to the software sector, vast outperformance really. And that's what's so interesting about Palantir. It's a tough company to make a direct comparison to, as you were saying. That heavy percentage of the revenue that comes from the U.S. government is really the reasoning behind that William Blair upgrade that we saw, is that the Trump administration is going all in on using this unique software. I mean, perhaps not exactly unique, but I can't really think of anything that could compare to what they do. let alone on the scale of what they do. So a very unusual company for which there's not really a lot of direct competition for something that's becoming increasingly more and more important. They've got like $1 billion of contracts from the U.S. government just recently.
PLTR?
Just 2 contracts totals almost $1 billion.
Yeah, it's certainly, kind of standing in its own right now, which I guess has set the bar considerably.
Earnings are going to be good.
Here coming into earnings. So as we take a look at the technical setup, what's it indicating to us?
So what we saw here was a sideways grind for the most part with some intraday fluctuations beyond this trend line that you could have drawn. You try to connect them as best you can going across the closes or the highs or lows or what have you. In this case, connecting the closes gave us this breakdown point from which we fell below recently.
I'm going to try to get 150.
Stabilized near 148. Old high here, subsequent lows here, here again here. That's about what we've solidified for now. As we head into earnings, that could be a major thing that could rewrite this price activity story, however. But for now, we have retreated back to this familiar area. If we were to break lower, one area that stands out is 130, this green line here. Why? Because back here it was old highs and subsequent lows. A similar refrain that I point out over and over again is these areas where the price continues to stop and start here that really stand out. The upside, 169. Post gap low point after our gap to the upside here, frequent lows again, and highs, same deal again. Just one of these frequent price levels that come back into prominence over and over again.
Yep.
Now, we have fallen below
I agree with you, Mirror.
averages in the shorter term, but we remain above our long-term moving average here. Our 251.
I didn't see that.
And this orange color here, that comes in right around 145. So that could be another supportive area to watch out for. RSI oversold, typically regarded as a sign of strength in a trending market. But if we were to look at that through the light of earnings coming up, I would be really hesitant to make too many big decisions based on that because, as we said, things could be changing so very quickly once we do get these results. Our volume profile study shows some nodes, some key trading activity areas here and here, 140, 155 or so. Those are the standout areas closest to.
I didn't think about drawing that trend line up to that.
You've mentioned we have the earnings setup coming in. You want people to be careful about taking a look at some of the technicals. But as we take a look at the options action coming into an earnings event, what's it looking like today?
Right, so that William Blair upgrade was looking for a price target of 200 over the next 12 months. We're a bit away from there, but February 20th, our most active open interest month.
That's right at the 200.
That would be this area here, plus
EMA.
14%.
I'm at 220 now on my call.
So what we would see there would be
245.
Wide range, so some volatility on the horizon for sure. Sizzle today, 1.3.
270.
1.3 times the 5-day moving average of options volume here.
310. Yay!
Minus 3,000, January 15th, 2027, 120 strike puts, and a $4.8 million credit. Not totally clear if it's an opening or closing trade. It looked like it was perhaps a opening trade, though, in this case.
All right, with Palantir right now trading at 147.76, up about 0.8% heading into their earnings. We'll see if they can hold on to those positive gains before the market closes. But I do want to send it back to
$3
to find out who she and George will be talking about for overlooked stocks today.
Well, we're going to be talking about darling ingredients today heading into the close, Marley. That comes after Baird upgraded shares there to outperform.
5 for 5.
About that company and what you need to know about it coming up next.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and
Not 56 for
shifting
5.
markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going?
Boom, boom.
Sometimes, Next.
I took it.
Done better. Please.
How does he do it?
Same goes for where you invest. Level up and invest smarter with Schwab.
Intern, this place is incredible. It's where I get all your office supplies.
How in the heck does he do it?
Your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
Can I ask you a question?
Sick. We have to buy that now.
I bet you Epstein's still alive.
Invest your way with Schwab.
Welcome back to Market on Close. I'm Sam Barnes, live from the floor of the New York Stock Exchange. It's time now for Overlooked Stocks. So we're looking at Dali Ingredients.
Him and Tupac.
After Baird upgraded shares there to outperform earlier today. So
Epstein and that other nut.
What has Baird said that's a catalyst for this upside?
McAfee. John McAfee.
Well, I think
I bet he's still alive too.
What's going on with Darling Industries or Ingredients Incorporated? This is essentially a food stock company. They provide the marketplace by transforming animal byproducts into things like feed ingredients and food ingredients and fuel like biodiesel. So a lot of the industries that they actually sell into include the food service industries, pharmaceuticals like cosmetics and supplements, as well as industrial feed and fertilizers and biodiesel, which actually, if you look at some of the energy markets as of late, there's a catalyst associated with that in terms of a correlation for feedstocks that go into biodiesel.
I got some good videos I want to watch
I
tonight.
think if you look at this group, this includes food companies like Tyson, Archer Daniel Midland, Bunge Incorporated. These are, again, food producers and feedstock suppliers. All these names have actually been moving quite considerably on a year-to-date basis.
Yeah. Just off the top of the head, I'm going to watch her. 200 IQ, how homeless people turn a van into a comfortable home. You got even a little wood stove in there. He's still alive. New Epstein files released. Never again. George Dar. There's Dar. Dar. Get the best of me, Dar. You get the best of me. Well, he said he wasn't going to scalp anymore, and he did. Now it's 10 minutes to close. This is where Funky shines. Pleasure. Man, another moon bounce.
Near-term catalyst.
Next on Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Five more minutes.
What moves markets?
I ain't gonna rush nothing, I'm done.
App and stream live coverage wherever you are.
Hey Bob. Hey Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, I had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
We're back here in Market on Close. I'm Sam Vardas here on the floor of the New York Stock Exchange alongside Marley Hayden in our Chicago headquarters. So we've just got a few minutes left in today's session. Let's welcome in Kevin Green, as always, Senior Markets Correspondent, to help close out the day. KG, I suppose we could just say that things didn't turn out as bad as we all woke up to this morning, as far as a bit of a rebound here across equities and also the metal space. Talk to us about what stands out to you right now in these final minutes.
Yeah, we definitely had some buyers of the dip here, especially if you're looking at the overnight action. We were down about 1% in the S&P 500, but we did see some positive action here, especially when you're looking at this broadening out trade. Last week and the week before last, for the most part, we started seeing a little bit more concentration in communication services as well as information technology. Today, not so much the case. Mag 7, I would say, is kind of mixed. NVIDIA saw some heavy selling pressure last hour and a half of the session, and we also did see Apple actually catching a really significant bid, trading above that 270 level. If you're kind of looking at the levels for this morning, we broke above the 69.70-ish area, and now we've been pretty much consolidating within the 20 to 25 point range pretty much all day after that nice surge to open up the market here. So kind of looking into the close, I'm actually looking at the 69.70 level to be able to hold, potentially pin at that particular level, and I'm not looking at any type of major breakdown over the next couple of minutes going into the close here. I think the volatility space is also very interesting for this market. We saw obviously elevated volatility overnight, a crushing volatility today, but I'm not sure if that's going to be over with over the next couple of weeks. Maybe this week we get a little bit of tailwinds, maybe some individuals trying to deploy capital in the value sectors, the value assets of the market, but I still think that we have some headwinds and some things that we still need to work on from a fundamental as well as a technical standpoint for the S&P 500.
And KG, what are some of those things that are sticking out for you as the areas that you have concerns?
Yeah, so the first area of concern, if you're kind of looking at it, is once again vol. I have if we look at a seasonality chart, a 10-year seasonality chart, volatility actually starts to ramp up pretty aggressively towards the middle to the latter half of February, and so that's something to kind of keep on the radar here. Obviously, we still see a lot of implied vol as well as realized vol. Going into the dollar complex, yields moving aggressively higher today as well. We did have some auctions that may have been a little bit better. You could make the case for that, especially on the shorter end of the curve here. We also had the Treasury announce their plan when it comes to the TGA, and they kind of re-rated that a little bit higher, meaning that we're bringing on more supply when it comes to Treasuries to the market. So there's a couple of items there. Now, for the bulls, we have been able to hold the 20-day moving average. In fact, we haven't closed below the 20-day moving average over the last 3 sessions. We've tested it every single session over the last 3 days, but we have not closed below it. I think that's also going to be a tailwind. But once again, I think we have some headwinds here. And we still kind of got to get through in order for this market to get the all clear and have us really meaningfully re-rate higher, another 5%, 6% to the upside.
Okay, speaking of buyers, I mean, Michael Saylor stepping in 75.3 million when it comes to Bitcoin over the weekend. But what did you make of that rebound that we saw in crypto, but also just metals, obviously coming off those lows we saw at the weekend?
So we saw some aggressive selling pressure. I think it's...
I'm just trying to figure out what kind of day it was today. I think it's a wait and see day. A wait and see earnings. They've been good. They haven't been bad, but there's so much skepticism in AI today. I mean, it's unbelievable. And I've been calling the bubble for a couple of months now to definitely get out of your positions if you're in any kind of AI, or monitor them a little bit closer. Your AIs. But I had 5 scalps today, and every one of them was patience, and I added on to 2 of them, so I didn't get them 2 right either. 3 of them I got right on, 2 of them I didn't. And I like going in small if I'm skeptical, and then if I get a good dollar dip or something, I can add like 5, as long as it keeps it under my $1,500 bracket. I'm willing to lose $1,500 on any trade, but that's all I've got. That's all I put in a trade. I think if I put a lot more money in them, I'd probably have a lot more. So I think that's it. Anybody have any questions? For most part, we've been selling off great earnings. Only a few have held. PLTR is going to be the test tonight. And they'll probably bounce, my opinion. If it doesn't bounce, and then 140 somewhere down here tomorrow. It's 73 degrees. Well, am I entertaining or what? Does it get annoying after a while? What happened to my life? And we're still on. Jimmy's awesome. I don't know how I haven't listened to too many moderators, so I don't know how they sound. If they get boring or I know I'm getting stiff and I'm getting old. I'll catch y'all later, YouTubers.